Right away. On YouTube is going to be the slide then.
Sir, we are live.
We stop sharing.
Hello, very good morning, and welcome to the second day of Global Finance Conclave, which is hosted by Jindal School of Banking and Finance at OP Jindal Global University. The theme of the conclave is All Eyes on India, Resurgence and Resilience Post-COVID-19. We had a phenomenal set of discussions yesterday. In the 8 sessions that we had yesterday, we had an incredible lineup of senior bankers, scholars, people from the civil society, think tanks, and even policy-making circle to discuss issues around the global trade ecosystem. How do we embrace multilateralism? There were discussions around global financial stability and long-term capital flows. There was very interesting discussions around using fintech for financial inclusion, and even around upskilling our labor force, because we are not just battling a health crisis, but also an unemployment crisis in some ways. There were 2 phenomenal student sessions. Students are competing on a very interesting topic around smart cities and how students look at the idea of smart cities and how to create the next generation of smart cities in India. And the first day of the conclave ended with a keynote address by Professor Viralacharya, who is currently in NYU, but he has served as Deputy Governor of RBI. He spoke about the quest for restoring financial stability and talked a lot about his book, which has recently come out on the same topic. With that, I'm very, very happy and delighted to welcome all of you, all the viewers on YouTube, on Facebook, and those who are here on the Zoom call to the second day of the conclave. And the very first session that we have is on approaches for accelerating digital and financial literacy in India. One of my colleagues in JGU, Professor Parul Bhandari, is going to be moderating it. I let her introduce both our esteemed panelists, Ambassador Amit Dasgupta and Professor Madhu Veeraraghavan. Parul is a colleague from Jindal Global Business School. She's a sociologist by training, and she's done fascinating work around the Indian society, around institutions of family, marriage, making, remaking of social class. And the only thing I want to mention is she's got some wonderful books out in the last 2 years. Money, Culture, Class book that was published and released last year, published by Routledge, and a book by Springer this year on matchmaking in middle class India. Thank you so much, Parul, for moderating the session. Thank you so much, Ambassador Dasgupta and Professor Madhu, for being with us today. Over to you, Parul.
Thank you very much, Professor Bhardwaj. Thank you so much for this lovely introduction. I'm really excited to be on this panel today, helping steer the conversation around. As Professor Bhardwaj mentioned, of course, my background is sociology, but I do work on money. And it would be very interesting coming from that background, a non-banking and non-management kind of background, but understanding the meanings of money through this particular conversation, panel discussion today with the topic of approaches to accelerating digital and financial literacy in India. Now, just briefly, just 2 sentences about this topic, why I think is so incredibly pertinent. 2 counts, well, a few years ago, we had demonetization, which really pushed people away, or was intending to push people away from a cash kind of economy to more internet-based digital economy, with the hope that there would be more security, that it would be more safe, and it would help in prevention of circulation of black money. One is that. And of course, we then were hit with COVID-19. And contactless payments, going digital, is something which has been embraced all over the world. I mean, in discussions with colleagues and friends, particularly abroad, for instance, during lockdown in the UK, all shops that serve food or groceries actually stopped taking cash. And what was interesting was that there was access to these kind of digital payments, and there was incredible digital literacy. So in that context, today's session, kicking off today's session of the second finance conclave would be incredibly pertinent. And I am very pleased to have two absolutely eminent panelists with us. First up is Ambassador Amit Dasgupta, as his title obviously makes it clear. He was in diplomatic services since 1979, and he served in various capacities in India and abroad, including Cairo, Brussels, Kathmandu, Berlin, Sydney, and Manila. He was the ambassador to Philippines with concurrent accreditation to the republics of Palau, Marshall Islands, and Micronesia. He is the inaugural India Country Director for the University of New South Wales, Sydney, since 2016. Prior to that, he was the head of the Mumbai campus of SP Jain School of Global Management. He studied at St. Xavier's, Calcutta, and then did an MA and MPhil at JNU in sociology, and has also degrees from McGill University as well as ISB Hyderabad. Of course, I think some of you must already know him from other kind of avenues, which is his incredible number of books that he has published, the latest being The Phoenix Rises, Lockdown Chronicles, and some of the others, including The House and Other Stories, The Strategic Shape of the World, India for a Billion Reasons, India by Choice, and so on and so forth. I mean, the introduction is quite long. I mean, it's quite impressive. So I'll stop at that. And we also are very, very pleased to have with us Professor Madhu Veeraraghavan, who's the director of TA Pi Management Institute in Manipal since April 2017. He also holds the position of TA Pi Chair Professor of Finance. He's got a doctorate in finance with over 15 years of teaching experience, and he's published articles in several academic journals, including the Accounting Review, Contemporary Accounting Research, Journal of Financial Quantitative Studies, and so on. So his main areas of research, of course, are in the areas of corporate finance, behavioral finance, and the interplay between auditing and finance. He's won several awards, and one of the awards was for Best Article or Paper in national and international conferences. The Social Science Research Network, SSRN, has recently announced that he is ranked in the top 10% of authors around the world. So with that, I open this panel of discussion by putting forward one very broad question to both my panelists, and if Ambassador Dasgupta could begin addressing this, which is digital literacy, financial literacy seems all well and good, and it seems very relevant in today's age and time. But what has to be understood is that, particularly in India, there are incredible amounts of diversities, whether it is financial differences, access to internet, and even when with access to internet or aspects such as increasing use of mobile phones, they too do not necessarily ensure that people would have that kind of trust and that ability to use digital spaces for financial transactions. So in lieu of this great divide that exists in Indian society, the diversity that exists in Indian society, what do you think are the key issues that we as a country would face in terms of financial inclusion in the face of these kinds of diversities and divides, whether of internet, whether of money? And just a very broad question so that we could then steer the conversation to be more focused. So over to you, Ambassador Dasgupta.
Thank you so much, Parul, for this wonderful introduction, and a great pleasure to be part of JGU's yet another fantastic conclave. To respond to your question, I'm reminded of a book by Simon Sinek. And what he talks about is that there are three issues that concern us. Anytime we want to do a project, it's why, it's what, and it's how. And so if you look at this whole issue of digital literacy, then the why really is, as you yourself put it, you want greater security, you want greater transparency. And so how do we get this? You get this and you decide that the what is going to be digital literacy as the end goal. But the most critical thing is really how are you going to achieve this? And as you wonderfully put it, there is an extraordinary divide that separates those of us who have access to high-speed internet. We're able to afford a laptop. a mobile, and have no difficulties with it. I'm in the area of international education, as indeed are all of you. And one of the big difficulties I find is that we don't take into account things like when you're teaching online, electricity and power can go off, and suddenly there is an extraordinary disruption. When you're doing a program which is, let's say, from Australia, and you have an Indian student doing it, the time difference becomes another issue. The interaction becomes a big issue. And quite frankly, the life that we live in India, the reality is that 35 to 40% of our people are below the poverty line. And if we don't have a system which is accessible and affordable, then I think the whole issue becomes a very complex one. And quite frankly, I mean, you and I would have read this very unfortunate story about this girl, this very bright student at one of the leading colleges in Delhi, who committed suicide because the parents were not in a position to afford a laptop and the tuition fees. Now, this is a fact. It's a reality of life. And it's very important, therefore, that while we do have an end goal in mind in terms of digital literacy, it is important to first put the mechanism in place as to how we would achieve this platform so that it is able to achieve all the targets that you initially had, which is transparency, security, et cetera, et cetera. So that would be my initial response to your question.
Thank you very much, Master Dasgupta. Professor V. Raghavan, any thoughts?
Yeah, Parul, thank you so much for the question, and thank you, Ambassador, for being in this panel. Can I just share the screen first? And can I just
Absolutely, yes, please.
Okay. So I'll quickly, it's disabled, host disable attendee screen sharing. So maybe I'm disabled to share the screen. Would you kindly enable me so I can share? Because at this point, it says I've been disabled.
Vidyut, could you kindly look into this?
Okay, so while we're doing this, I'll just make some opening comments. I mean, this is a very interesting question, but it's a little different. So I was looking at sort of two different questions. One is the digitalization or digital divide, and then looking at financial literacy. And I wanted to make some opening comments on sort of using financial literacy and how we would then use digitalization to sort of improve financial literacy. So I was going to produce or sort of demonstrate and show some statistics which would sort of make a interesting case. I think now I are. Thank you very much. This is brilliant. Thank you so much. So if I could just...
I'm sharing the screen. So just let me know how to navigate.
So if you just go to that next slide, that would be great. So you have the control. So you may have to... Perfect. This is the next. Yeah, here is the slide. So this is something I wanted to show. And just have a look at this. So how do we actually define financial literacy? So the S&P did a really interesting survey, and they asked 4 specific questions. So the 4 areas are basic numeracy, your understanding of compound interest, understanding of inflation, and do you know what is risk diversification? So this survey was done, and you will see this very interesting statistic. There are only 33% of people in this world who are actually financially literate. So 2/3 of the world don't even understand what literacy is and are not literate because, and how do we define them? The S&P said, if anybody is able to answer 3 out of the 4 questions, we will classify them as financially literate people, right? So a question on risk diversification, inflation, interest, which is basic numeracy, and compound interest. Now, here is an interesting statistic. You just shift your focus down to India. When you come to India, you see this little table just below that's highlighted in red. And there's Brazil, there's China, there's India, there's Russia, and South Africa. And see where we are. We have 1.38 billion people. Not even 20% of the people in India have financial literacy as a priority. So there is a very, very serious issue. Now look at the right, in the middle, there are certain small tables, and have a look at how women trail men in financial literacy, right? And you will see that, 3 or 4 topics correct, you will see women around less than 20%, right? And this happens in major advanced economies. And if you come down to major emerging economies, and I'll show you more statistics later on, you'll actually find that women really struggle. And there are very interesting stats about how women are not even banked. There's a huge amount of unbanked women. And it also has great links to education. The ambassador spoke about why, what, the how, and he spoke about how do you do this implementation. There are many women, specifically in our country, we know this. The primary education is very, very little. I'll show you some stats later on, which tells you that 62% of the women are not even educated. They have not even got a primary schooling. So therefore, there is a significant digital divide and we can't ignore it. But Parul, if you don't mind, I would just like you to go to the next slide. There's something very interesting here. So this is a national financial capability study done in the US. This is American population. And just have a look at this very interesting table. This was done in two waves, the 2012 wave by Angasani et al. And the 2018 wave. And I want you to focus on these 5 questions. There's an interest rate question, there's an inflation question, there's a bond price issue, there's a mortgage and a risk diversification question. Just have a look at what proportion of Americans, we're talking about Americans here, have got these basic 5 questions correct in the 2012 wave and what happens in the 2018 wave. Right? In the 2012 wave, the interest rate got 88% right. It's now 86%. You scroll down to risk diversification. 67% of the Americans got it right in 2012. Only 62% have got it right in 2018. And 33% of Americans said, I don't even know what diversification means. I don't know what it actually means. And the questions, I've had a look at them. I've had a look at these questions and also the S&P questions. They're extremely simple questions. And why they've got it as simple as they're saying, this is what we classify as a pass grade. So we have a very serious issue, even before we get to digitalization, which of course is a central point that you want to raise today. But my first submission would be that have a look at the fraction of responses from the most sophisticated economy in the world, and they haven't got financial literacy. So if you look at world over, we are talking about roughly 1/3. If you look at India, we are talking about no more than 17 to 18% of Indians actually saying literacy is my priority. So that would be my opening statement, but I'm sure we will go a bit deeper as we go through the session.
Thank you very much, Professor Veeraraghavan. I think this was fantastic, just to contextualize that what really is the issue, as both you and Ambassador Dasgupta flagged, that one is the issue of education, access to education, right? And the other becomes the issue of not just access, but also what kind of access, how do we ensure kind of inclusion? So I think that is something that I would want to now move towards as well. And before that, I was just, while you were talking, and when this kind of program was rolled in, and I was watching with my parents and with my family, this very famous TV show called Kaun Banega Crorepati. It is a rip, it kind of follows Who Wants to Be a Millionaire kind of approach. What was very interesting to me was that just 3 days ago, they have a, how do you call it, a fastest finger first contest, where contest. So their people, their contestants, and then who is chosen to go on the seat to play. In that contest, fastest finger first, for the first time, if I'm not mistaken, the question that KBC posed to its contestants was related to online transactions. So the question was, arrange an order of what you do when you have to make an online transaction. And the options that were given were OTP, filling in your details, filling the payment type, and one more. So what was interesting was, there we are sitting, a family, an urban kind of middle-class family, all of us sitting together watching it. And there were about half the members of my family, parental generation, grandparental generation, who said, we can't answer this. We will not be able to answer this. And the person who was selected, so of the contestants, only a few could answer. And the person who was selected was this dairy farmer from Uttar Pradesh. And we marveled at that. This happened just 3 days ago. So the question then, what I thought was quite interesting, is this kind of divide or exclusion is not actually very simply urban and rural, because you have a dairy farmer and you have this urban family who's sitting that couldn't answer. So there are more gradations, there are more kind of nuances than kind of simply saying rural and urban. Of course, that makes a difference, not to say it doesn't. So I was wondering to know a little bit more about what your opinions is in terms of the the different kinds of gradations, the difficulties, the different segments of Indian population who we think could be easily included in this and those who would not be. So the interplay of financial inclusion and exclusion, but going beyond just the urban, rural, rich, poor angle. If you have anything to add to that, Ambassador Dasgupta, would you want to respond to that?
Yeah, look, I mean, Parul, I think that's a terrific question, and it's terrific from multiple angles. And let's just go back to what Professor Veeraraghavan just demonstrated to us. And I think one of the things that pops up is whether you're looking at the US, where you expect a rich country, a lot of transactions would take place digitally. They have high-speed internet, so that's not the issue. And you come to a poor country or a developing or emerging economy like India, where there is a divide and there are lots of issues. And I think the real thing that popped up to my mind was that when the question was asked, I mean, are you really interested? Is it a priority for you? And I think what Veeraraghavan demonstrated was that many people felt it wasn't a priority. And so quite frankly, it's not that even among the urban class, as you said, it's not that, people are uneducated and that they can't figure it out. It's just that they don't see it as a priority. And consequently, the other issues, whether you have high-speed internet, et cetera, become secondary issues. This whole issue of trying to make people aware, the consciousness that this is actually really important. I think that is the missing link because quite frankly, people are not going to do something if they don't think it's important or critical for them to do so. But I leave it to Veeraraghavan to explain if the understanding is correct.
Yes. Thank you, Ambassador. Parul, if you can just go back to the slides again. I'm so sorry I'm going to bother you with this, but I just want to show some very interesting numbers just going forward to answer and also extend Ambassador's point. So before we do this, I just want to speak for 1 second about a couple of very interesting academic studies. And if you followed Anna Maria Lusardi and Peter Tufano, Olivia Mitchell's work, they speak about why are we financially ignorant? I may not want to use the word financially illiterate, but let's say financially ignorant. What most people don't say, and I just want to extend Ambassador's point, is what most people don't realize that you being financially ignorant has actually a cost. And the cost is you run up very high levels of debt, you end up paying high levels of transaction fees, you borrow more and don't save, you don't know what interest rates you're paying. But Lusardi also has a very interesting point. She says, hey, if you're financially literate, what are the benefits you have? And they talk about, how you plan, how you save, you understand how to diversify across assets, so therefore, this entire work of Olivia Mitchell, Lusardi, and Tufano, and Stango and Zimmern clearly highlights the importance of being financially literate around the world. Now to the next couple of slides I want to show. This was a very interesting survey done by Visa, right? Top company in the world, and Visa did a survey in 2012. Have a look at, I'm going to show you 3 slides. And the first one actually talks about, which are the most financially literate countries from left to right. There are 28 countries on this list, and India ranks 23 out of 28 of the literate countries in Brazil, Mexico, Australia. And right after India is Morocco, South Africa, Vietnam, Indonesia, and Pakistan. So only 28 countries, and we are 23 out of the 28. Parul, if you could kindly go to the next slide and have something more interesting to say. So I want to take Ambassador's point and have a look at this. This is a question they ask. Do you have and follow a household budget? Okay, so this relates to the questions we talk about, how we sort of stereotypically we say, oh, Indian women have their own sort of budgets they manage and, they're homemakers and all that. And you have a look at this. We rank 18 out of 28 on this question. On do you have a budget and do you follow a household budget? Fairly okay. Now, please look at the next question. I want you to have a look. And this is a really important point for me. And this is exactly where we should begin. How often do you talk to your children aged 5 to 17 about money management issues? We are again 20 or 28. And the reason is, and this is the issue I really grapple with Indian education and the curriculum at primary school. I don't think any school in India or primary schools in India actually talk about literacy and numeracy issues. We don't even talk about money management to our kids. If we were to make a beginning, Parul, and to Ambassador, and to other people who are actually listening to us today, I would say go back and have a look at the curriculum, at what is done in primary school. 5 to 17-year-olds have absolutely no clue about what is money management. And you have a look at, I mean, both Ambassador and I sort of lived, of course, I've been there for 20 years in Australia, and I know that my schooling is so strong. They talk about numeracy and literacy, financial literacy, right from when you are in grade 1, grade 2. They expose you to these sorts of challenges. And consequently, if you look at Australia and New Zealand, and they're in the top 7-8 countries on this list. So children are not exposed, primary education needs to change, and only then we can actually make this a priority. If 18% of the population in this country say, this is my priority, and 82% say this is not my priority, I'm not sure how implementation, that goes back to Ambassador's first point about the what, the whys, the hows. That can only happen when this can be addressed.
Absolutely. No, I think that's really fantastic. And I think the point that really comes out strongly in both your responses was this, that how do we promote EDC interest, and that should be done from the right age, from a young age. And I thought using platforms like TV platforms was actually also one way of doing that, because you're bringing this into the realm of the ordinary, the everyday, saying that, hey, this is something that you all should be interested in knowing, just like you would know basic geography or basic knowledge, general knowledge. So this is actually a space of general knowledge. So whether it is being driven through TV, or as you rightly pointed, or through education, so that becomes incredibly important. Okay, so talking about that, I know there's a good flow of conversation, but we have about 15 to 20 minutes, and I really want to kind of peel on other aspects of financial literacy. One is awareness, one is interest that we've talked about. And for me, as someone who's very risk averse, the third important point of understanding digital literacy or embracing financial digital literacy is also the idea of trust, consumer protection, that fear of being, or let's put it this way, being comfortable in using these spaces, having that trust in the authorities that this would not be misused, that this is something that would be taken care of. So that aspect too, I would want to hear your thoughts on, because that's incredible. Any kind of finances, as you know, any kind of financial transactions require incredible amount of trust. And again, just to plug in a little bit more of social media, I mean, I do a lot of Indian cinema studies and all of that. So I watched this Netflix documentary called Bad Boy Billionaires, and I was studying Sahara case. And basically, one of the things that happens with these big frauds is when there's a complete breakdown of trust between the companies and the public. And it becomes very difficult for Indian government as well, for authorities as well, to entrust people in financial transactions. So I think trust is a very important aspect of financial transactions as well. And I was wondering, how do you think could this trust be encouraged in the space of digital financial literacy, in the digital financial world, and what would be the obstacles, the very genuine obstacles in instilling that trust? Professor Veeraraghavan, if you would want to respond to that first.
Sure. So by trust, I think your point is more about how the consumers and sort of providers of service, the trust levels between them. I think it's incredibly important. I think, let me just say first, why you don't see huge levels of trust is because most people don't understand financial products, right? So one way to do this, build trust, is to encourage providers of products to have a simple, plain vanilla product, right? But as the markets become more mature, as the market becomes more complex, obviously the end users, the consumers, have got to also understand the products. You just go to the bank today and have a look at, very simple. I ask my students, hey guys, do you know you borrowed education loan to come to TAPI? Would you know what is your EMI, how much you're going to pay? Oh, sir, I just have to work these things out. People are now not even aware of the sorts of loans available to them, the sorts of products available to them, because they think it's too complex, right? But the point is, if the complexity, with the increasing complexity, the literacy levels have got to go up. So if you don't mind, Parul, I'm so sorry, I'm going to do this to you again, but if you just go back to slides, because I love to use numbers to sort of make my case. And if you just have a look at some things that I want to show, let's just go forward. So here is, just stop right here, please. So here is an example of how many people around the world are actually unbanked. Okay, we are talking about trust between providers and sort of consumers, but have a look at what proportion. Nearly half of the unbanked adults in the world live in 7 economies, right? There's Bangladesh, there's China, there's India, there's Indonesia, and Mexico, Nigeria, and Pakistan. The rest of the world is like 54%, right? And if I go back to your earlier point, 56% of the women are actually unbanked, right? And that is even more a bigger statistic for us. So there are lots of issues, and therefore, because these are unbanked, I have no idea what the products are. They're not even able to make an assessment or whether this is the right product. And there are, in rural villages in India, there are lots and lots of sort of informal money lenders, right? And they charge exorbitant interest rates. And the ambassador spoke about a case of a student suicide, and we are aware of that because we read that in the press. But you also have a look at the number of suicides that happen in rural India, right? And that's because they're not able to repay the loans. They borrow, but they don't understand the idea of what is interest, right? One more slide forward, if you don't mind. And here you will see something very interesting. So here are women who are sort of, and again, going back to gender a little bit because I think it's important. And this slide actually tells 2 very important stories. The first, of course, that women are overrepresented among the unbanked in most economies, and you'll see that throughout. But the rightmost slide is where 62% of primary education or less. So here, adults without an account by educational attainment, right? So most unbanked adults have a primary education or less. That is 62%. Only 38% have high school or even post-secondary levels of education. So therefore, the trust levels for that to happen, people also have got a little bit more literate. And my strong recommendation to providers of products would be that keep it simple, plain vanilla products, because otherwise, as you make it complex, I think people will really not be able to understand. And that's when, actually, if you look at financial industry, there is a very interesting survey, and I should put that here, that shows that financial industry has the least amount of trust. I mean, just above salesmen is what they say. Can you believe it? The amount of hit the financial industry is actually taking, because there is a very little trust to begin with the industry.
Ambassador Dasgupta, same question to you, but also with another added kind of aspect to it, which I think Professor Veeraraghavan has brought out very beautifully. We know that Indian economy is incredibly dependent on the informal economy, the informal sector. Even when demonetization happened, it was the informal economy which was most severely hit. So in the context of that, where there is little access to banking, where our economy is incredibly dependent on the informal economy, cash-based economy, what do you think? Would people who are in this sector be able to trust immediately and engage with this sort of digital aspect of exchange of monies?
Look, I mean, it might appear as if I'm taking a completely different take from what Professor Veeraraghavan has just outlined to us. But let's try and approach this sociologically, if you like. There is part of Oriental, or if you want, Hindu philosophy, where people are actually rooted in the here and the now. And when we talk about banking or business or the informal sector with money lenders, etc., what the poorer people who normally get duped by such persons, the agricultural farmer, etc., when they talk about the ease of business, they're actually talking about the speed of business. And for a farmer to go to a bank and get a loan is very complex as a process. And we know that most of us go and buy vegetables from the person who's the vendor on the street, and he transacts only in cash, because for him, that here and now of the ability to have the cash in his hand at that point of time is far more important than having it put in a bank. And again, the trust issue comes in. You see, all of us are aware of the number of messages that go around on social media about cybercrime, about hacking, and people get worried because cash and is not readily available, and there is a limit to what you have. And so immediately when we talk about cybercrime, I think the trust factor gets enormously hit because there is very little that one can do to convince someone if the person doesn't have an interest in being. Again, going back to the first set of slides that Professor Veera Raghavan shared with us, which is that it's low on the priority scale. Then what you do is you latch on to the first information that's given to you, which is that, look, your money can be taken away. The cybersecurity is at a very, very low level. And how are you going to deal with this? In any case, I don't have internet or I don't have digital literacy. And therefore, it's far safer for me to ensure protection of the money if it is available with me. And so that would be my immediate reaction to what the question you've asked and what Veera Raghavan has said. And quite frankly, this here and now is a very critical component that governs actually the majority of people in India. And I dare say in Bangladesh and Pakistan and in most other countries where the trust factor of putting the money in an institution which is faceless, which is not at all responsive to your requirements, where bureaucracy plays an extraordinary role, where who will get a loan is determined by a very cumbersome process, you'd rather go to the money lender. And of course you do get cheated. Of course people end up committing suicide. But again, going back to another question that Veera Raghavan raised very interestingly, people in India, and I dare say in many developing countries, don't want to be in debt. And that's the first issue that comes up, that when you're talking in terms of money literacy, you're actually asking yourself, can I live within my means? And that's a very, very critical question. And people who can't live within their means because they've taken a loan and because they've gone into debt, we've seen what the farmer suicides are all about. And that's a very critical issue. And post-pandemic, I mean, if you look at the pandemic period, also the people who are really suffering are people who don't have lost the ability to pay back loans that they've taken. The small and medium enterprises are shutting down. And, so people ask themselves, is the money safer when it is with me? Or is it safer when it is in a bank?
Thank you so much, Ambassador Dasgupta. Those really important points. Now, I just want to quickly move on. We've discussed in this particular section, we've discussed the issues, the obstacles of financial inclusion, and from awareness to trust. Now, I just want to move to a few other aspects of the benefits that may be, or are there any? One of the aspects, and of course, given my own research background on sort of gender and money issues, is that what Ambassador Dasgupta said, the here and now, the holding of money in your hand, that kind of trust that it instills. And women particularly so. So in the context of, for instance, microfinances, Seva Group, of course, as we know, giving that kind of independence, empowerment to women. Now, my question is, of course, Professor Veera Raghavan, you've already addressed, very importantly, you've talked about how women don't even have access to banking. They aren't banked, and therefore micro-lending and microfinance becomes really handy. So what happens when we do move to this kind of digital sphere? Do you think it would be easier? Or do you think it would be more difficult, particularly from the perspective of women, in the context of micro-lending, microfinance, and that kind of sense of empowerment and confidence, keeping money aside and investing it, perhaps without the knowledge of your family, just for the sake of your family, of course. So do you have any thoughts on that?
First, before I do give my thoughts, a couple of things that Ambassador pointed out. A colleague of mine sent me an article just this morning, and it says that during the COVID time, people have been borrowing from family and friends than from banks and other institutions. I wish I could produce that chart, but it came to me only around 10 o'clock, so I couldn't quickly put it up. But it was a very interesting statistic to say that now people are not going to banks to borrow, and for the reasons that Ambassador sort of highlighted. And I was thinking about a case that I was reading very recently on the fintech in the savannah, for example. Could we actually learn lessons from Kenya? You spoke about digitalization, Parul, about in India, for example, and have a look at the mobile sub-Saharan Africa. Sub-Saharan Africa today in the world has the maximum amount of reach and usage of mobile phones, right? For example, in Kenya in 2006, they said it was 62% of the adult population had access. Today, it's 86%. If you could just go to my slides again, and I'm terribly sorry for doing this to you repeatedly, because you're the host, I have to bother you, but I think a picture will tell 1,000 words. So if you just go to the next one. So here is the question, and it goes back to the ambassador's point that he made. Why people remain unbanked? I think we need to know. The question is, and then look at this, not enough money is the number one reason, right? And do not need an account. Family member already has an account. So look at the number of reasons that people are actually giving you. Lack of trust, and Paruli spoke about the lack of trust earlier in the previous question we discussed it. So not enough money seems to be a really important reason. And silence, the sole reason, is almost 20-odd%. So there's a significant amount of people who just feel it's not. And if you go to the next one, I think I'll show you why. Here is the worldwide account ownership. So have a look at these countries. And in some countries, it's actually stagnated, right? And this waves were on 11, 14, and 17. And you look at Bangladesh, for example, number of accounts have grown. China has almost remained stagnant. And so let's sort of look at India. And you see in India, the PM, JDY, the Jan Dhan Yojana, actually, you remember that was a big push. I think in the last 5 years, we've seen some major policy push as well in this very space. So you will see the 11, 14, 17 growing. But in many other economies, you see this to be stagnating. And South Africa, for example, Russia, for example, very little movement. If we just go to the next one, I will show you why this is happening. So here is the gender issue I wanted to demonstrate earlier. You look at this high income economies and developing economies and see the gender gap that continues to persist. And it's now almost 11, 15%. We are talking about gender gap between men and women across. So this is going to happen when you have 62% of the females who are not educated. We have to make some very serious policy, regulatory push, and that hasn't happened. Then we will see this continuing divide between high income and low income or developing economies. Just want to take one more slide. I want to show you where we'll talk about. Here is digital payments. This comes back to your question. Just have a look at what proportion of people are now using for digital payments. And this is an excellent example. In 14 and 17, across 3 years, it shows what proportion was made or received in the past year and did not make. And you will see in high income economies, definitely people are using significant digital payments, right? In India too, we're now talking about 5G, we're talking about smartphones, we're talking about using phones for this services, mobile phone. But I don't think we have done that reach as a country like Kenya, Mozambique, Chad, for example, Haiti. Those sub-Saharan African countries have done a magnificent job in doing this. One more slide, Parul, and then I'll probably stop, which will complete my answer to the question that you asked, I'm sorry, and that is this. So this is exactly the point that I wanted to make. There is a significant opportunity for increasing the use of accounts among the bank and see what proportion of private sector people receive wages in cash. And Ambassador made the point, hey, I have the cash, I have it now. And this statistic actually confirms what the ambassador actually made. And look at the proportion of Indians who are getting and I'm not talking about public sector, these are private sector wages in cash, right? And this is exactly the point. And this is last year in cash only. And this data comes from the World Bank's Global Findex database. So we have huge proportion of China, India, for example, Thailand, where millions of account owners are receiving wages in cash. So there is a great opportunity for us to actually get them to sort of getting into the banking process.
Thank you so much for that, Professor Veeraraghavan. Ambassador Dasgupta, what do you make of this microfinancing, microlending, and particularly for vulnerable, marginable segments of our population, including women? Because they had a lot of, as you've mentioned anyways, here and now, they had a lot of comfort and confidence in that. Would that be the same with the digital financial world?
I think, Parul, this whole gender issue is a critical issue that Veeraraghavan has so wonderfully demonstrated through his slides. And I'm not commenting on what the situation is, let's say, in Africa or Southeast Asia, but we do know, for example, in India, that the divide has been critical and cuts across many segments. The gender divide is a horrific one. Regulatory mechanisms are required. They're important, but an implementation is critical and in parallel. This has not happened. I dare say till this starts happening, and it's going to be a slow process, if you start bringing in more and more people into the banking system, you are going to de facto introduce an implementation schedule. So I think from that point of view, it's critical that we look at the whole issue of microfinance along with the gender issue and the gender divide and how we actually bridge this gap. There are other gaps, and there is a gap which would be a gap based on caste. And this is equally important, it is equally powerful, and it's equally damaging. And so when we really look at the whole issue of microfinancing, I think it has been well demonstrated that microfinancing is a positive input to development. It's also a very positive input to empowerment. But for the time being, I think it all depends on how the social consciousness, the awareness, the literacy, the knowledge on how important it is to get into a structured institutional system. Until and unless that happens, the comfort level, unfortunately, is going to continue to be on getting cash. And to a large extent, I think when you deprive somebody of money, as indeed has happened in the case of gender, when people are deprived of the money, when they receive the money, there's a great comfort in holding on to it, in knowing that it is physically in your possession rather than in a bank. Because I think the trust factor of the bank, and this is where this whole vanilla issue of Professor Veera Raghavan is so critical. It's to be able to simplify what is perceived to be a very complex, cumbersome mechanism that you have to deal with. So once you are able to simplify it, I think the trust factor would be impacted very positively, and perhaps more and more people would get into the system. And it even allow the microfinancing to do what it is actually meant to do, to achieve the results that it's expected to achieve.
Thank you so much for that, Ambassador Dasgupta. So we're kind of reaching the end of our session, but there are a few questions that have come my way, so I would want to actually address those. And two of those questions actually do relate to the final segment of the session that I had in mind, which is, okay, so we've discussed the difficulties, the issues, but now also about implementation. So it isn't obviously enough to just have policies that are pushing us towards using the digital space. What do we do more than simply having the governments sort of tell us that this is what you're supposed to do? How do we actually get people to doing that? In that, the first question that I'd like to pose to you is also by a lecturer at JSBF, Pulkit Taluja, who says, what role can we as educational institutions play in accelerating financial literacy? How can the government incentivize educational institutions to improve financial literacy at local level? Why is the urban-rural divide that you mentioned still relevant as a factor even in current times? Okay, so maybe the last part is, if I'm not mistaken, Pulkit, I could. But I think Professor Veera Raghavan, you already mentioned something about primary education and financial management, but I think Pulkit's question is quite interesting, which is about how do we as universities achieve that? And Ambassador Dasgupta, if I'm not mistaken, you have mentioned earlier, not in this session, but earlier than that, where you think that there has to be a concerted effort, not just from the government, but other aspects of society as well that should work in. So if I can pose this question to you, and also if you could provide a context of what you think is the way in achieving these policy implementations and not simply being dictated top down. So any comments on that and the role of university education in accelerating digital financial literacy?
Thanks for the question, Parul. So let me just try and explain as simply as possible and as quickly as possible. I believe, and for want of a better English word, I believe that development is an interdependent process. It is not one where you have just the government, suggesting what needs to be done, implementing what needs to be done, and then we as citizens congratulate the government for having delivered on promises and re-elect them. I believe that all activities of the government, whether we talk about digital literacy, finance literacy, etc., needs to be looked at through what I refer to as a stakeholder approach. And I call this Panch Sevak, or 5 critical stakeholders. The government is one of the critical stakeholders. They are the ones who make policy. Second, you have the bureaucracy or the administration, which is tasked with ensuring that that policy has been implemented. Third, you have the business community. And here, of course, we're talking about the banking community, the financial institutions. Fourth is the civil society. And civil society includes educational institutions. And fifth, you have the media, because the media is the one that has a footprint significantly larger than we can imagine in terms of raising public awareness. And then, of course, you have the overarching system of the judiciary to ensure that the money goes exactly where it's required to go, that there is an auditing process, etc. So unless these 5 stakeholders work together, it becomes very difficult to ensure governance. And I believe that it is as important for each stakeholder to participate in a process as it is for the government perhaps to identify a requirement and then resolve it. Very often requirements are also thrown up by the social situation. And the government may not be aware of it, but if an educational institution were to say that, look, I think this is a problem that needs tackling. Again, you need a stakeholder approach in order to be able to resolve it. You're not going to be able to empower women by simply giving the role to the government of India and asking them to ensure that it's done. It has to be a collective, collaborative approach. So this would be my, let's say, short answer to what I believe is a very, very powerful question. Who delivers? I think it has to be everybody.
Thank you very much, Ambassador Dasgupta. I think it's fantastic. The Panch Sevak approach is, I think it's absolutely crucial. Professor Veeraraghavan, if you would want to respond to that, and I just want to add, there's another question which was related to the previous slide that you displayed that one of the audience members has asked. So if you could briefly respond to this one, and then I could pose the other question to you.
So I absolutely agree with Ambassador's points. I just want to change this to whose businesses is, and I think it's everyone's business, just the way the Ambassador pointed out. I just want to pick, the Prime Minister made a statement a couple of days ago at the Bangalore Tech Summit, and he said, we are now moving from the industrial era to the information era, right? So obviously it's now going to be a way of life. This digital transformation or digitalization is going to be a way of life. I think it's incredibly important that everybody plays a role. I think if somebody wants to have an analogy, a closer case, I think it's great to have a look at the Kenyan case, because in Kenya, they had this 5-pillar approach, exactly what the Ambassador pointed out. And they have 5 different pillars. And all these 5 pillars came together to ensure today that Kenya is an extremely digitalized country and a financially literate country. So there has to be a concerted effort. Everyone's got to play that role. And the universities and the higher education sector obviously has to play an incredibly important role. But Parul, I just mentioned earlier, we need to go back to the primary school, and the curriculum has got to change from that. I'm a great proponent of that.
Thank you very much, Professor Veeraraghavan. Now, one question which has been addressed to you by Professor Sohini Sengupta is, most African financial inclusion has come at the behest of unrestricted market access given to big tech and massive telecom companies, Safari.com, etc. How do we balance the need for financial inclusion and the obvious dangers that come with investment by massive big tech firms?
It's a tough one. I mean, I agree that in Kenya and for sub-Saharan Africa, that's been the case. And therefore, I think the Ambassador made the point about regulators. He made the point about government and all the stakeholders coming together. If that were to happen, I think we will be able to make a reasonable fix. Obviously, you don't want this to be completely thrown open to. We have a couple of minutes. I have a very interesting slide I would just love to show, and probably will also answer Sohini's question. If you just go to the slides, and I'll quickly tell you where it is. And that talks about the penetration. Just if you can just go switch forward, please. Yeah, this one. So here is, it probably partly answers Sohini's question about the top internet countries. And have a look at the penetration, right? And these are in sort of millions of highest number of internet users. China has around 850 million people who are actually using internet, and India has around 560 million. So if you go down, I mean, this is only internet. We're not talking about the mobile phones, right? in sub-Saharan Africa is more the mobile phones. And that's because they felt, Parul and Shohini, was the cost and the distance. The easiest way for them was through a mobile phone. And therefore, that's why they did it. But you're right. I mean, it's been unfettered access to large companies. And that is a problem. I think that needs to obviously have the ambassador spoke about the judiciary at the end. I think that's where it all comes in as well, to make sure it all ties in together. But yes, there has to be a concerted effort, and one that also policy has to come from regulators and the governments too. So that's what I would say.
Thank you very much, Professor Veeraraghavan. One last question by Professor Ashish Bhardwaj. Please, Ashish, if you would like to unmute yourself and ask the question.
Thank you. I'm glad I found the time to ask this. It's like a provocative question. And since we are running out of time, we can also step away from it if need be. So I want to take a step back. I want to talk about the literacy part of financial literacy, which is, I think, a global challenge. We saw the slides. It affects so many countries. But what's unique to India is this combination of high levels of general illiteracy combined with this massive numbers we see of smartphone users. And on a monthly basis, quarterly basis, the penetration of high-speed internet, especially in rural India. In fact, the Digital India campaign is pitched as a tool to empower citizens. It's certainly a way to deliver government services, which is essential and a good initiative. We also saw demonetization, giving a big boost to digital payments. Parul talked about it. E-commerce transaction, Aadhaar-based UPI, everything is going really well. Perfect. But digital literacy is the ability to use information and technology in some form for people to evaluate information and make informed decisions. And here's the key part, based on cognitive and technical skills. So my question is this race to get digitally connected turning out to be a way to rapidly access information or products or services, financial or otherwise, but not knowledge through education, formal ways of educating people, making them learn and critically think, which is a real way to empower them? Are we focusing on the wrong thing?
Yeah, can I jump in here, Parul, with your permission?
Of course, please.
Yeah, I mean, I think this question brings us back to how we started. It's knowing the why, and if we know the why, we can decide really have we got the wrong end of the stick. And I think the why is not 100% clear. And so, is it just security? Is it to prevent black money and unaccounted wealth? What is the why? And therefore, why is it so important that we need this knowledge, this literacy, and therefore the participation in the institutionalized mechanism? I think the why is not yet clear.
So quick, one word.
Thank you.
Please, yes.
Thank you, Parul. Ashish, thank you for the very interesting question. It's not provocative, it's certainly pertinent in my view that this is a question to be asked. And I was thinking more on the lines of change agents. So if you go to villages, for example, there are lots and lots of business correspondents, and maybe they can actually play a change agent, try and sort of educating people about financial literacy before we get into this, this sort of digitalization. So I agree with you, it's an important question, but people have to have this great understanding of general literacy before we even get to financial literacy. And that, of course, has got to be the first step. So, I mean, it did, as Ambassador said, it did go back to the very first question where Parul started. So I think we did take a full circle. But my view is go back to primary schools, start talking about it, talk to kids about it, and maybe educate as much as possible. And maybe dissemination of information across the length and breadth of the country would really help in achieving this objective.
Thank you very much, Professor Veeraraghavan. I'd just like to now end the session, a few comments. And there's another question there, and I didn't I was thinking about that as well, but there's not enough time. So, but I'll just say it out there, I think, which is again by Professor Shohini. And I was thinking the same thing as well, which is that, biometric identification of customers and the idea of privacy. And this, some of us were sort of, the philosophical aspect of digital literacy is also very interesting, which is the idea of privacy, the idea of identity, and very Foucauldian kind of panopticon vision that is this a surveillance state. And this comes back to what Ambassador Dasgupta talked about, that why, and whether it is from demonetization, attacking black money, to people asking, is this too much surveillance? Things like that. So that's another angle which I hope we would have been able to explore, but of course there wasn't much time. But barring that, I do think that this has been an incredible session because we've actually covered a large range of issues that come up with digital literacy and financial literacy, beginning with, as we did, what challenges, obstacles, particularly in a space like India with deep digital divide, but also aspects of gender, caste. Of course, we couldn't get kind of into greater details of caste, which I think is incredibly important. Professor Veeraraghavan, one of the slides that you showed, there was this question of also religion, religious reasons as to why people don't engage in banking. And I think some of us, particularly at JSBF, I'm sure people are exploring this issue of the relation between religion and banking. We know this has led to incredible amount of wars, one would say. But anyway, so there is that. And then from there on, we moved on to actually discussing important issues of how do you finally implement. And I think Ambassador Dasgupta's very sort of comprehensive view of the punch, the 5 pillars of punch savers, as he says, was fantastic in understanding that and the role of education institutions. So to our audiences, I'm sure many of you have questions. All I can say is that please get in touch with us, the organizers, and we could pass on the email addresses of the panelists to you. And please do take up these questions with them, have conversations with them. I'm sure they'll be more than happy to engage with you beyond this session. So thank you very much, everyone, for being here today on a Sunday morning. And big thanks to both our panelists, Ambassador Dasgupta, as well as Professor Veeraraghavan, for taking out time and giving us such a brilliant, comprehensive view on this incredibly important and pertinent issue. So thank you very, very much. And thank you to the organizers for this incredible panel.
Thank you, Parul. Thank you,
Thank you very much.
Thank you, Professor Veeraraghavan. It was a great pleasure.
Thank you. Likewise.
Thank you very much. Thanks, Parul.
Thanks.
12:55 sharp, Kirti, which is exactly 1 hour from now.
We're live, sir.
Over to you.
Good morning, everyone. A very warm welcome to the second Global Financial Conclave. We apologize for the running slightly behind schedule. The session that we're going to have now, we have eminent speakers, Mr. Vinay Matthews, who is the founder and chief operating officer of India's first and largest peer-to-peer lending platform, FairCent, and Professor Sridhar Dash, who is distinguished professor of finance and currently serving as the dean of Xavier Institute of Management in Bhubaneswar. The session we're having right now is on easing constraints for entrepreneurs post COVID-19. Before we get into the discussion, a brief introduction. I am Kirti Pendyal. I'm a lecturer at the Jindal School of Banking and Finance. I'm finishing my PhD in public policy and management on the thesis on the topic of standard essential patents. I'm among the newest crop of faculty members here at Jindal Global University. I have a long experience in the investment banking industry and had a slight stint, 3 years stint of a startup on my own, faced difficulties. And I'm hoping I could learn from Mr. Matthews and Professor Dash during our discussion so that in case in the future, if I do start off on my own again, I can apply the lessons that I learned from these eminent speakers to my journey as well. A brief background about the speakers. Professor Sridhar Dash is a distinguished professor in finance. He's currently serving as the dean of the Xavier Institute of Management, Bhubaneswar, XIMB. Before joining XIMB, he has more than 20 years of experience in the research and corporate sector. He was the vice president and the head of risk and information management at Reliance Retail, in charge of the membership, finance, and travel services. Dr. Dash also held the position of senior vice president and head, decision management for Citigroup India, and the position of director for credit strategy in American Express. He started his career in GE Capital and worked in many businesses across GE Capital in the area of business analytics. Before starting his career, Professor Dash finished his PhD in finance from one of the topmost institutes in India, Indira Gandhi Institute of Development Research. And he also has a master's in economics from the University of Hyderabad. Very warm welcome to you, Professor Dash. Good morning.
Thank you.
Thank you for accepting our invite and joining us today. Our other speaker, Mr. Vinay Matthews, is the founder and the chief operating officer at FairCent. FairCent is India's largest peer-to-peer lending platform. And through the experience and through the successful track record that Mr. Matthews has in driving business and revenue growth for internet businesses for more than 25 years, he has established FairCent as the largest and also the first peer-to-peer lending platform to be certified as an NBFC P2B by the RBI. Now, the concept of peer-to-peer lending in India is fairly new. I must confess that before this session, I wasn't very aware that there were many platforms in India which were lending, peer-to-peer lending, and I was very pleasantly surprised to see that one of our guests is an eminent personality in this area. Mr. Matthews pioneered the concept of online peer-to-peer lending in India with FairCent and has been instrumental in the company's growth since its inception. Mr. Vinay Matthews, he is an industry veteran with vast experience in e-commerce and internet companies. He has more than 25 years of experience in scaling up operations, delivering profitable growth for internet businesses like the Indian Express, Rediff.com, Sifi, and Bennett Coleman and Company. Prior to founding FairCent, he was serving as the national head and associate vice president, sales and service delivery for Times Jobs. He holds an MBA from the Institute of Management Studies, Devi Ahilya Vishwavidyalaya. Warm welcome to you, Mr. Vinay Matthews.
Thank you so much. Thank you.
I just have to, for all the avid puzzlers out there, I just have to point out that Mr. Matthews, apart from his distinguished career in e-commerce and internet companies, is also an avid cuber. He spends a lot of his spare time solving Rubik's Cube puzzles. that itself is, very. I must tell you, the Rubik's Cube have always fascinated me and troubled me since my childhood. So I have not been able to solve even one puzzle so far. So today's session is on easing constraints for entrepreneurs post-COVID-19. As all of you are aware, the world is going through a very troubling situation with the pandemic COVID-19. This pandemic has thrown the entire world, the lives of many people, companies, startups, everybody into chaos. Not discounting the trouble that it has brought on the lives of people, this pandemic has also challenged a lot of companies and startups. Today, we are going to focus on the challenges for entrepreneurs and how do we ease these challenges for entrepreneurs once, how do entrepreneurs cope with these challenges and use these challenges and convert them into opportunities once the pandemic passes. Before we get into a technical discussion, I, for one, know how I've seen the lives of many people in and around our campus, in and around in the area we live in, affected very deeply by the pandemic. How has it affected you or affected the people surrounding you? Mr. Matthews, if you would like to go first.
Okay, so thank you very much for that lovely introduction. Pandemic has been a blessing in disguise for a company like ours, okay, because we grew during this time. And one of the fundamental reasons that happened was because we are a disruptive model, and our journey for our customers is pure digital, end-to-end digital. And because of that, we saw a huge traction within the last 6 months, 8 months. We got a huge traction. In fact, we were lending every day on the day of lockdown. We didn't have any problem. So it's just like Zoom. The Zoom was it's a completely online service, so it helped people to kind of really get onto Zoom and start interacting. Similarly with us, month of April was a little slow. Apart from that, I think we've been growing pretty well because banks and NBFCs stopped lending. Okay, so because of that, a whole lot of people were looking for loan. Good borrowers were looking for loan. They naturally came our way. That's the fundamental difference that we saw, at least in our journey. And this is also important to understand, because how your business is constructed, matters a lot. Since our journey was purely online and there was no offline leg to it, and that's the reason, it was very, very customer centric, than using technology to ensure we're enabling customers to make a loan process on our platform faster and cheaper. So the power of the technology resides with the customer, and that's what makes a whole lot of a difference. So it's just like, if you imagine like Uber, it gives you, the Uber app gives you the power to kind of call the cab anytime at will, right? So, and it also gives you so much of transparency. It exactly tells you who the driver is, where he is, how far he is, what's his name, his number, all of that it gives you, right? Similarly with us, our journey is with respect to our customers, is very, very transparent. Lenders get to kind of see that in a very, very transparent way. We are a very highly curated marketplace, so which helps the customers, or lenders on the platform see through the borrowers, in detail and make a decision to kind of lend. So that journey of making the customer so transparent, making the customer available at lenders, on their app, all that is a completely different way of lending, and that's what we were doing, and all this while we were doing that only, and that is exactly the reason we were completely, we had no problem. We didn't lay off any people. So all of that, it's a completely great story for us. On the other hand, banks are completely shut. The branches were closed due to lockdown. People were not kind of, interacting with the bank. People were not going to the branches. All of that was there. Okay. We didn't see any of that. We had other challenges. I can talk about that later. But pandemic never had, a major impact on our business. Okay, the business was completely kind of devoid of that, and we're growing pretty well, and still we're growing.
Thank you, Mr. Matthews. Professor Dash, the same question to you. I see my alma mater, IIM Calcutta, affected to a great extent. the Institute, Jindal School of Banking and Finance and Jindal Global University affected to a great extent. How has this affected the plans at ExamB? How has it affected the academic world, the researchers in India and overseas? Any inputs on that?
Professor Pandya, thank you. Thank you for giving me opportunity to talk to the audience, and thank you even to meet a new person, Mr. Matthews, virtually. So, see, as you know that you are also working as an academic institution, so we have actually our life turned into upside down on a stroke of the government when we announced that it will be closed. So our chief minister has been extremely conservative. So he closed down the campus in March. So we had to let our students go immediately. So, and see there are many micro operational issues which I think we should avoid discussing. Conceptually speaking, all the processes that existed before stands nullified, and you will have to create a new process, and suddenly everybody is working from their homes, and as administrator of the institutions, we will have to create new processes to start everything, starting from conducting classes to providing text materials to conducting examination, and many other issues academic institutions get involved in. For example, the way we are interacting as a participant and discussion forums and things like that. It's a challenging, but I think it has taught us two great things. See, the online education, if you think of it, there are two sides to the story now. Right? Before that, many people said offline education will, when the MOOC as a model evolved, many people say. There are now divides are quite wide. For example, many students of ours desperately want to come back to campus. So they have now realized what is the difference between an offline digital education versus a classroom-based education, peer-to-peer learning process. So it is either going to change the way we teach permanently, or it will have affect the online education very, very differently. The take has to evolve because large-scale adoption of digital education has also pointed out the limitation of technology as a facilitator of peer-to-peer learning, emotional dimensions of learning, negotiation dimensions of learning, team-based learning. All this has to be challenged, and I hope at some point of time take has to adopt, if it has to, in some form. If anybody say it will replace classroom-based education. I am in the side of that. I think it has realized that offline education is here to stay. So it's going nowhere. So I'm in that side. So I will talk about that. So, however, that doesn't mean that education will not change. Education will change from the dimensions of how we disseminate knowledge, how we blend technology in our learning outcomes, how do we actually open our library to outside. Things like that will change, how the exams are conducted. So those things are going to change, but certain things will not change. For example, discussion among students, peer-to-peer learning, learning through doing failure, because education institution provide a very low cost failure dimensions where you are in campus, you are actually working in a safer place than when you go to the real world and where the cost of failure could be significantly higher. So we have faced challenges, but thankfully we have actually adapted very quickly, because we did had our academic information systems, which was already tech-enabled. Library was fairly digital. So we invested in technology, and so far we are doing fine.
Thank you, Professor Dash. So picking up from where Professor Dash mentioned a point about the digital divides between the students coming from different strata and different societies, different geographies of the country. So picking on that point, focusing on that point, Mr. Matthews, do you think there is a digital divide, and how, if it would affect entrepreneurs or startups, startups from the smaller towns, the smaller cities, and how, if it would affect the entrepreneurs, especially in the current COVID-19 situation with the current pandemic and the lockdown present in large parts of the country, how it would affect the opportunities and what are the challenges that it poses to entrepreneurs?
So I think from the infrastructure point of view, I don't think so we have a problem. Okay, from a fundamental, owning a gadget, there could be some problem, but infrastructure we don't have a problem. So if you think that there is an enablement required at the end use or for the end customer, I think we have to make that happen. But if you look at the infrastructure is pretty robust. India is the second largest internet penetrated country in the world. Okay, after US. After China, we are ahead of US in terms of internet penetration. We are one of the largest mobile penetrated country in the world. Okay? So the technology can reach through mobile via internet, okay? and it can go to the remote of places. The important thing to understand is that entrepreneurs should reach out to these customers rather than expecting the customers to come and join their bandwagon. It will not happen. Right? So you have to find a mechanism by which how you reach that set of customers. So I can give an example, right? So there is this in our business, one of the things that we do is we lend to microfinance companies, right? So microfinance companies reach out to the remotest of areas, remotest of villages. They do the last mile. Okay? Last mile of picking up the documents, the money or whatever, the checks and everything, the KYC documents and all that, and they put it in a centralized account, and from there we kind of move the money. We lend the money. All of that happens through enablement of technology with the microfinance companies. So if you expect the people to come and join www.faircent.com, that's not going to happen. So you have to find ways and means to kind of reach out to end customer, and if you can do that, you can lend them. Okay, you can do you can give any services, and same applies with any other service, be it education, be it healthcare or whatever. You can reach out. Last mile partner you have to tie up with, and you can reach out to the end customer. And there are ways and means. Today everybody has a smartphone, everybody has a Paytm. There is a lot of data which is moving around within the ecosystem. You can create a lot of models. You can devise a lot of models by which you can do your conduct your business. So for example, Paytm has a very large network, okay? And there are a lot of people who use Paytm. If you're wanting to fund somebody or you want to lend somebody at the entrepreneur level or at a merchant level or at an individual level, okay? You can do that. Because the kind of transaction that you can see through the business volume that you're doing through that app of Paytm tells a lot about what kind of person you are and what's kind of loan that you can lend to this person. The other thing, there are other models which are existing through which you can figure out and understand the customer. There are alternative data which is available. There is an SMS data, there is geolocation data, there is prosperity index data. So there are a lot of data available today by which you are able to kind of more or less assess the customer, which traditionally otherwise a banking data or other data was. So you can pretty much make your bank statement by SMS data, right? So is there a way that you can look at alternative partners, alternative mechanism by which you reach out to the end customer, and that's how you serve. Okay, and we've seen this happening across the world. It's not kind of happening in India. So we saw in a whole lot of this happening in Africa. We saw a whole lot of this happening in Southeast Asia. India will also see the same story. A whole lot of people will be brought into the formal sector by using technology, by reaching out to the last mile, tying up with partners, and government is also doing their bit. The entire architecture the government has built for presence-less, paperless, cashless, the economy that they made. So that's a brilliant ecosystem, and that infrastructure is far superior to at least my knowledge. It's one of the best in the world. You use that infrastructure, reach out to the last person, which is there in this country, and you can do. See, it's difficult for formal sectors to kind of reach out to them. Okay, only startups can reach because the cost structures allow them to reach. Okay? Formal sectors can't reach because the cost structures are very tight. For them, it's a completely loss-making proposition if you reach out to some small person like. So you have to use technology to kind of do that. That's my take. So I think it's not the problem of infrastructure. It's not the problem of, I think, imagination of an entrepreneur. If an entrepreneur wants, he can absolutely reach out to end customer. He has to look for partners who can, help him reach out there. Because there is, at the end of the day, that customer is being serviced by some partner. Okay? There's a concept called on lending. I know you've heard of this or not. So you lend to, let's say, for example, merchants of Paytm, okay, or merchants of Eco. And the merchant because there is a lot of data available with Paytm of that particular merchant, right? And on top of that, there are people who are coming into that particular merchant's shop. There is a lot of data that merchant would have about that people, those people who are coming into the shop, right? Which is called on lending. Is there a way that you can lend to that last customer? Of course there is. If there is data, we can.
So you primarily were focusing on the aspect of reaching out to customers and acquiring customers. Is there a digital divide in terms of the other side of the equation? Access to finance, access to advice in terms of experienced VC firms or PE firms, access to data in terms of how to start up. So entrepreneurs in small towns and cities would, even though they have access to customers, might not have access on the other side, to angel investors or VC firms. Is there that kind of divide present in the market at present?
No, I don't think so. So if you have an idea, and if that idea is put to ground and it takes off, there are many people to back you. So it's not. So there is this completely. A lot of people are trying to chase the VCs rather than chasing the customers. Okay, a lot of people make this mistake. So if you can chase the customer, build a business, I think VCs will come after you, or angel investors, all of them will come after you. That shouldn't be a problem. Because these guys are sitting to kind of invest, right? So if they see a nice story, they will definitely go out and kind of invest in it. So proposition has to be strong. It needs to kind of, have the all tick marks. Okay, so some of the tick marks, which is very essential, at least from an Indian context, is that one, it should have, the whatever proposition that you have should be a pressing need. Okay, India is not a market which you can, come and introduce a product like a Facebook or a Twitter and make money out of it. It's very difficult. The adoption is going to kind of take a long time. So it's always better to kind of get into a space which has a very pressing need, right? So is there a actual need exists in the market? That's one. Second is that is the market big enough? Okay, it's not be a pressing need for few people. It should be a very large problem to address. For example, credit is a very large problem. 85 to 90% of the people in this country do not get access to unsecured credit. It's a large problem to solve. So that's the second thing. The problem should be large. And third should be the unit economics should make sense. Okay, as long as you're doing business, your cost structures or your cost, whatever that you incur in making that transaction should be profitable. As long as you can, meet these three criteria, I think VCs will come and put money in.
Thank you, Mr. Matthews. Professor Dash, a similar question. The government of India has pushed eminent institutions like yours, XIMB, IIMs, to become incubators, to help entrepreneurs incubate, to help entrepreneurs start up, push them, provide them with resources, put put the entrepreneurs in touch with academics, researchers, as well as companies who are willing to finance or fund. So how has the pandemic affected this chain? In terms of breaking the chain or disrupting the chain by providing the necessary infrastructure to startups or to entrepreneurs?
So definitely, it has, from an educational institution point of view, it has definitely affected in that direction, because naturally the focus of the government is right now to how to control the pandemic, and the resources they have that needs to be allocated to different more pressing and urgent needs. So in that sense, it has affected. But on a larger context, if you look at it, I think this pandemic also should go away, and I think I don't think we should treat this as a something which is going to make our life a big change or things like that. I don't perceive in that way, because if you look at histories, yes, it will change opportunities that is being presented in the market. But as an human beings, as a whole, I don't think it is going to change. That's my personal view. I am probably in the wrong side of the story right now, but I am fully confident that we will all go back to our normals. But the business opportunities will change, because this has created a way we look at things, the way we have lived in our homes for 6 months. It has changed the way we think, but on a larger context over the next decade or two, I don't see much issues in that.
Thank you, Professor Dash. Mr. Matthews, you...
Just one point, what Mr. Matthews was giving an example from a digital divide for his business. That divide exists on the supply side, but that divide may not exist in the demand side. For example, a villager who may have little surplus money, he may not be a supplier of the credit to a need. So that divide exists in the supply side. The divide may not exist in the demand side. That will be my personal view. Other thing which on the digital divide as an entrepreneur in general, if you see the margins of small entrepreneurs is going to shrink, because the digital transformation of bigger business will suck into their margins. For example, retailers, once they get into platforms, their margins will shrink. Okay, so that divide will going to margin consolidator. When I say margin, I mean to say gross profit margin in the business is going to, that distribution is going to be happening, and then that will create a, yes, somebody may argue that the overall sales will increase and things like that, but that margin dimensions may change at a macro level.
Thank you, Professor Dash. My next question was partly answered by Mr. Matthews. I wanted to ask both Professor Dash and Mr. Matthews on which challenges should the entrepreneurs focus more on? Should it be raising capital? Should it be acquiring customers, retaining talent, or managing the supply chain and logistics? Mr. Matthews spoke quite little, to some extent, on the importance of identifying a customer need and focusing on that customer need. Can you elaborate on this question for me, Mr. Matthews?
Okay, so the question is that all the points are very, very important. What you mentioned just now. Okay. Capital is required, talent is required, definitely very much, required. Ideation and the market is very, 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 very important. So all points that you mentioned about raising capital, acquiring, customers, retaining talent, all of it is very important. So if you're asking me to first rank it, I don't think so we can first rank this, because,
The reason I'm asking this question is because we see a lot of time during the end of season sales or end of special Diwali sales and all that, where platforms are competing with each other on the GMV, the gross market value or merchandise value, and less on profitability. They're going after acquiring customers or after revenue. So that's where I'm coming from. Should a new entrepreneur, should a new startup focus on customer acquisition, or is that as important as turning a profit as soon as possible?
So let me just give you some, basic fundamental thoughts on startups. Okay, why is it called a startup? You have to understand this, right? Flipkart is still called a startup. It's been 12 years now. Okay, it's called startup because the revenue models or the business models is still not established, right? The question that you were, putting out, what if the discounts are taken off? Will Flipkart still sell the way it is selling now, or Amazon will still sell the way it's? If you have a formidable yes to that question, then the business models are established. If it is not, people are still flocking it because of the high discount or steep discount they're offering. Doesn't make sense for Flipkart to continue to do that. To build a category, to build a ecosystem, it does. Okay, because you're changing habits. It's not easy to change habits. Okay, but will Flipkart retain a large set of customers if they stop discounting? My answer is yes, they will retain. Okay, because at the end of the day, it is not about discounts today, right? It may be when it started, but it's not about discount. These platforms have become very big, and they're very big platforms. Globally, there are very big organizations. Amazon is a big organization. Okay, so they become big primarily because of their transparency and trust, not because of deep discounts. Okay, that's secondary. Even if you don't have deep discounts, if you get a habit of buying off these platforms, chances are they'll continue to buy. Okay? There'll be very few people who go off. So profitability will definitely come, and that's the reason these companies are valued billions of dollars. Otherwise, people behind them putting money aren't fools, right? So they understand. If your business requires that to build a category, change the habit, you need to spend that kind of money. You need to raise capital. No questions about that. But for example, Professor Dash, perfectly pointed out the right thing. For us, the supply side is a challenge, right? So you can't reach out to, customer who's sitting at the remotest of area. He has, pile of cash sitting on. He cannot come and lend on our platform. That's absolutely right. Now, this is a new animal that we're trying to tame, right? It's a new animal that we're trying to bring about. Lending was not there earlier in this country, right? People never went out to lend money, right? They went out to pick up a stock. Digital, came to you can pick it up, through an interface. Similarly, there was shopping earlier. Now you have an interface through which you can do a shopping, like for example, Flipkart. Similarly, there were cars earlier available, taxis available. Now you have an Uber to In our case, if you see, there were no lenders earlier. It's a completely new thing that we're trying to put out. So this new customer base that we're trying to create takes time, energy, money, all of that to go after. So initially, the thought was to raise a lot of money and go after these customers and pump out, call these customers and ask them to come and lend on the platform. But we realized initially we've spent some money. We realized it's not going to work. The reason is that the customer life cycle is a little longer here. Okay? So you lend money, the customer will wait out for 1 year to figure out whether he has made money or not. Okay? So the product cycle or this life cycle of that customer or the sale gets over after 1 year. So if I'm a lender, you're a borrower, I give you money, you're going to pay me back in a year's time. Only then I will say, okay, sale done. That's not the case with Flipkart, right? So if you're buying red socks, it'll come to you the next day, you wear them and you say that, it's a tick mark for you, right? So it's important to understand what category you are and basis that even if you had spent money, you wouldn't have got those lenders on board, right? Because, you have to have so many success stories for people to talk about it. And people are waiting for success stories to happen. This was not the case, 10 years back when you're talking about Flipkart. So in the pandemic, I'm told the retail, e-commerce shopping and grocery shopping, the logistic, hyperlocal logistic organizations like Swiggy and Zomato and all these guys, they grew by 25 to 40%. Huge. Okay, people and they were the first one to kick off, right? From
yes,
from whatever they were. So that's huge, right? It's a huge kind of growth which people saw during COVID time. Now, this growth is backed by a lot of trust. There's a lot of convenience. A lot of so you need to kind of figure out what kind of business you are in, and accordingly kind of put money behind it. If you're a business which is already established, okay, you're kind of trying to take that online. For example, meat delivery. It's a traditional business. People have been doing that for a very long time. And people were delivering meat at home. It's just that they put some structure into place, put some logistic of cold storage in place. You should be driven profitably. Answer is yes. You have to drive that profitably. You can't be blowing up money and kind of then figuring out where your profits are. So it depends on the business that you are in. Similarly, for us, lending is a profitable business. Everybody knows that. We have to kind of run this a little profitably. After some years of build up of technology and all that, you have to kind of run it profitably. The answer is yes. But if you're building a new category altogether, then you have to spend money and kind of figure out, understand. But if the question is about what is it that you have to build first, my answer would be customers. If you don't have customers, none of that will exist, right? No raising capital will make sense. No retaining talent will make sense. Neither logistic will make sense. Okay. So the customer is the most important thing. I think you understand the customer is, and there is a genuine need for that customer to kind of whatever that you're offering as a product or a service. There is a need for those customers or not. If there is, then other things will follow.
So this is a follow-up question based on your answer. In the case of Flipkart, you mentioned, or Amazon, or other e-commerce websites, you mentioned that changing the behavior of customers was important. You also gave the examples of an Uber, a Zomato, where I place the order and the transaction is almost instantaneously completed within the day or within the hour. So whereas in the case of Fairsent, like you pointed out, the transaction could be completed over longer duration, 6 months, a year, or maybe even more.
Yeah.
So how did you approach this challenge? This now is inherently about changing the behavior of the people who are lending the money. How did you approach this challenge? How did you go at it?
So one way is to kind of offer certain things which customer needs to experience the product, right? So clearly that means that they need shorter duration loan products. So we got into some of the shorter duration loan products. We partnered with some companies who are doing shorter duration loan products. So today we are having the platform, daily loans, you take in the morning and give it back in the evening. And we're giving it to a large number of micro SMEs, merchants and all in the country. Okay? So people can participate in those loans. You have shorter duration weekend loans, you have shorter duration loans for 3 months. So that people could experience the product, get the money back within 3 months or a month or whatever time period that they've locked in the product for, and taste the product. And then they, get into kind of putting out larger ticket, and the larger tenure loans. And this is a story everywhere, right? So when the customer, even Flipkart, when they started, okay, when they started the books, I remember when Rediff started, we started with branded stores of various organizations trying to sell televisions and fridge and all that, right? Consumer durables mostly. Okay? And we didn't see any much major sales happening out of India. Most of the sales were happening out of US. Okay, people, NRIs were kind of buying stuff on Rediff to be given out to their parents or the friends in India. But we had one, sales director join, and he changed, right, and he kind of brought in smaller ticket size, products. So one of the things that we did was the Lagan movie CD, right, and it completely, took off. So you have to kind of reach out to the customer, give him an experience of the product, a small ticket size, and that's what exactly people were looking for. Something which is small, 100, 200 rupees, and can be delivered at my place. I'll not pay you upfront. You can kind of collect the money once you come to deliver the product. So all of that we did, right? So with the cash and delivery thing. Flipkart saw this opportunity and they took it and scaled it. Okay, the cash and delivery concept, scaled it. Rediff never, tom about it. They were kind of, picking up a lot of Chinese products and trying to kind of dish it out to kind of Indian people. But the surgence of the e-commerce because of Flipkart, starting with smaller, products which are, the value of the product was small, people started to transact. That's how the habit started to kind of, inculcate. And now they are, selling iPhones, selling, fridge, television, all of that, right? And then they're buying it. So they are. So that's how the journey for us will also be. Maybe today they are buying short-term loans. Lenders will kind of eventually buy long-term loans eventually. They will buy maybe, I don't know, maybe a home loan or a car loan out of our platform.
Professor Dash, I have a two-part question for you. One is the same question that I asked Mr. Matthews. What, in your opinion, should young entrepreneurs be focusing on? Which functional aspect or which aspect of the startup? And the second is that what are the skills that young entrepreneurs need to develop? So at JSBF, we are soon starting a program on finance and entrepreneurship where we are hoping to inculcate skills. It's an undergraduate program where we are hoping to inculcate some skills to the young people. So what skills do these young entrepreneurs need to have to be successful on their startup journey?
Okay. Mr. Matthews has the advantage being an entrepreneur. So I'm a...
Sir, I am very interested in this because, like I mentioned, we'll be teaching students to different skills.
I'm a professor, so I will have to talk about more in a conceptual sense. Yes, I do interact with a lot of young entrepreneurs. I did a research on research. Okay, I did a research on research means there are many people who have done research in different countries. So I'm talking about 50, 60 countries. They have done a research. And in that research, it was primary research where the researcher went to talk to entrepreneurs and find out what are the constraints they face while they do. So I looked at all the things they have done, and then I did a research and we published that in a journal. Broadly, we have categorized 5. Actually, one is others, so that does not make any sense. So there are 4 categories, broad constraints we have put to. And the rank that emerged out of this 50, 60 countries is the finance is a big constraint for entrepreneurs. That's ranked as number 1. The close proximity that came was business, environment, and policy. The third is the infrastructure of the country, not necessarily infrastructure. Infrastructure in the country, for example, if we want to have a logistic company and what kind of roads, ports we have and things like that, the infrastructure. And the third, the fourth one was on training and skills available for the employers. These are the 4, and it is rank order in that direction. When I did my further studies, and I found that there is a conceptual fallacy in government policies. Right? What is that conceptual fallacy? Government actually is not very clear about policy on MSME and policy on entrepreneurship. If you look at, they are actually quite conceptually too different. MSME is actually a stock phenomena, and entrepreneurship is a flow phenomena. Correct. So what in a entrepreneurial language, when Mr. Matthews is talking about sales, he is talking about first you have to have a prospect. Correct. So in that sense, we all flow for us is prospects. So the public policy discourse would be how can we increase our prospects so that the startup happens and then they will actually go to MSME. Some of them will go and become big organizations. Correct? So that's that fallacy still exists because we all think that incentives, a little bit of, but when I have conversation with entrepreneurs don't need soaps. They need a environment where they are trusted. They can figure out how to do their stuff. What they need is a freedom to do what they want to do. An enabling environment is what they are looking forward to, not necessarily a soaps excellent entrepreneurs don't look for soaps, because when they get soaps, they become inefficient, and none of them wants to be inefficient. Right? That's the core of startup thing. So, but there is a big fallacy on public policy discourse that we need to incentivize entrepreneurs. We don't need to incentivize. Provide enabling environment, entrepreneurship will flourish. This is one from the public policy discourse. Now again, I will come back to this can be looked at in a public policy perspective, but since you asked from a academic institutions perspective, let me give you a academic institutions perspective. See, for example, what we train the bigger universities and management education at this point of time, we train resources. They are supposed to manage scale, manage growth, correct? All our curriculum designs perspectives are actually an employee has to work in a structured, well laid out processes environment where the person will actually go and manage the growth or scale, right? So all our curriculum design is in managing scale and growth. However, an entrepreneur is not looking for a person who would actually able to talk about how will I do in the scale, and the same person may have to do operations, sales, and finance and marketing, and even HR, correct? At the same point of time. And unfortunately, our education systems are not trained to, in fact, I will go one step back and say that to work for an entrepreneur, you'll have to have an attitude to live with extreme uncertainty, correct? You have to be emotionally intelligent enough to take a lot of brickbats, failures, and appreciation for failures, and recognizing failure is a stepping stone to the success. These are the attitudes which, and I don't think we select on that basis. So conventionally speaking, if we want to prepare human resources for next generations of entrepreneurs in India, it has to be looked at in a very, very different canvas. The canvas has to be completely different than what it exists right now. This model of what we do in the classroom at this point of time is not going to work. That's my personal view. I'm being reasonably provocative in this conversations. So coming back to this, when my personal interaction with most of my entrepreneurs, which will probably be like around 50, 60 of them, all of them have actually cited as human resource as their biggest constraint. What they cite is they need the best research and they can hardly afford them. So this is a paradox, and this paradox needs to be resolved if we want to create an entrepreneurial ecosystem and a country of entrepreneurs, which we have to, because if you have to provide employment to next generation of youngsters, then we will have to make a lot more enterprises in our country, and this needs human resources. And this is also posing a huge challenge to people like us as education institutions. And we need to go and have conversations like Mr. Matthews to see what kind of attitude, how would we select these people, what are the things that needs to be done. Okay, these are my last perspective, which I want to tell you. It is again is a very conceptual way of thinking. If you go back to history of entrepreneurship research, and research and entrepreneurship has also become some form of, so early stage of entrepreneurship research was, this as if this is a kind of a personality, because most of the researchers were done by psychologists, behavioral economists, where they found out who are these people who are ready to take everything, put everything at risk and go and try to create something, correct? So most of them actually came up with attributes which define an entrepreneur: risk lover, adventurous, and things like that. Not going into details of that, most of the researchers actually looked at But the present form of research is actually what is called entrepreneurial methods. Is there a method to this madness? If you go back to really history, I think Francis Bacon, who created this book called Scientific Method, right? And so that actually created a large number of scientific discoveries. Before that, philosopher used to look at and imagine, reflect, and create, like Newton said, why this is apple fell down, and then we have a theory. But there is a concept called entrepreneurial method. There is a method to this madness, and we as academicians has to also work on to find out what is that method. There are many researchers who have done excellent work on. There is a very nice work which is done by Professor Saraswati called effectuation. It's an entrepreneurial method. It's an effectuation. She has a very nice book called Effectuation. She studied large number of successful entrepreneurs in American context and come up with a method called entrepreneurial method. So these are three concepts which it may appear disjoint, but they are interconnectedness. So this has to go to our colleges and curriculums, and so that we actually create resources for future entrepreneurs.
Thank you, Professor Dash. That was a very candid answer, and I'm not sure how my friends and colleagues in the academic world will respond to that. Mr. Matthews, one final question before I open to the audience for questions. A short, if I could get a short response. Professor Dash explicitly talked about the business environment and policy and how it needs to be conducive to encourage entrepreneurs and startups. That entrepreneurs are not looking for SOPs, are not looking for handouts from the government, but rather looking for a conducive environment and policy. So based on that, do you have a regulator wish list that the government should do these things to enable the environment to become better?
Yeah, so that's a very big subject actually. So before that, let me try and take a dig at what continuing what Professor Dash just mentioned. Okay, so here's a practical review of it. Okay? So what are the things that you need to do before you start up? Okay? So I'll break this into three parts. Okay, the first part is what are the things that you need to do before the startup, before we try and figure out what the government can do or what SOPs we can get. Okay, because those are very difficult to get, and because we know we're not a very a country which is not our basics are not in place, so it can't come that easy, right? So, but as an entrepreneur, I think it's important for us to know what are the things that you need to do before you start up. What are the things that you need to do once you are starting out, okay? And also need to know what are the things that you should not do, because not many of them say that. Talk about it. So here's some of the thoughts that I had. Okay, what are the things that you do before you start up? One, you need to get yourself a co-founder. You should not be doing this alone. A lot of people try to kind of do this alone. Don't do it, because the journey, as Mr. Dash was saying, is going to be very lonely. You need all kinds of skill set. You need to kind of even swipe the floor if required. So you have to wear multiple hats. So it becomes very tiring if you have to do everything on yourself. It's always better to kind of have somebody with you to kind of help you out there, right? So you get yourself a co-founder, very, very important. The other thing is that once you've got the co-founder, you need to go out and understand from people and talk about your idea. A lot of people don't do that. They think that their idea is the best idea and they just mull on it and just try to create something in their heads. It's important to kind of go and talk to people, professors. You need to talk to your ex-bosses. You need to talk to kind of somebody senior who's working in organizations. Talk to 50 people. I call it 50 cups of coffee. You should go and have 50 cups of coffee, get that idea out to people and see their reaction, what they say and what they have to kind of talk about. So for example, in our case, when we were doing that, people from the banking side, they all said, it's a great idea, but where will you get the borrowers from? When we went to internet side, guys, all of them said great idea, but where will you get the lenders from? So here we are, on one side of the story was saying no lenders, on the other side of the story, no borrowers, right? So yeah, it's important to go and ask people, whether your idea is, makes sense or not. And meet similar kind of people in the business, of similar lines, conferences and seminars. All of that is very, very crucial for you to meet and talk about your idea a lot. Okay, this opens up a lot with respect to, and it solidifies your ideation and solidifies what you're thinking is right, because when people talk, you have a different perspective, right? So it's very, very important. Once you have arrived with that, you have to kind of sit down and really think through whether are you really solving a problem. Okay? Because as I said, India, you need to solve a problem, otherwise it will not work. Okay? Is there a pressing need, or there is no need? Generally trying to create something, you think that will get a need later on in life, right? So 5 years, 10 years from now, it's not going to work in India. Okay? Also, you need to figure out, is the market or whatever that you're entering is already crowded? Okay, for example, if you start a Flipkart again or a shopping site again, it's not going to work, right? Flipkart is going to block out all of it. So it doesn't make sense to start a shopping channel right now, unless it's a very niche shopping channel. But a horizontal shopping channel like Flipkart, I don't think it's going to work, okay? You'll spend all the money, all it will get accrued to kind of Flipkart and Amazon. So see whether the market is too crowded or you're too early. Sometimes you get in too early, then you spend money, you're not able to get the customers, you have to kind of pack your bags and leave. So it's very, very important to kind of assess whether is it too early or too late. Okay. And once you've done that, you need to be committed. You need to be very sure about yourself to commit into this for 10 years. Don't think for 3 years, don't think for 5 years. 10 years is the way that you can kind of get into it. Unless you have the conviction or the commitment for 10 years, it's not going to work. It's not going to work. Okay. So if you have all these things, which I talked about, get a co-founder, have 50 cups of coffee, get into kind of figuring out whether it's a real problem that you're solving. It's not overcrowded, it is not undercrowded. And once all of that is tick mark, then you have to be very sure that you're committing for 10 years. Once you are sure about that, then start up. Otherwise, don't start up. A lot of people make mistakes just because they have an idea that the startup. No, don't do that. Once you're a startup, bootstrap it. Put your own money. Borrow from your father if you're a young boy. Or you put out your life savings, you've worked for 10 years, take that out and kind of build a house, sell that house, bootstrap it if you believe in it. If you don't believe in it, then you'll not sell your house, right? So that's the conviction that you have to have. You have to sell the house to kind of, get the thing going for yourself. Bootstrap it for you, a couple of years at least. Because if you sell out cheap early on, a large chunk of your company will go away. So it's important to kind of bootstrap and get the proof of concept, get to sell to 100 customers. Once you sold to 100 customers, at least a proof of concept is established. Build relationship with journalists, very important. Okay? Talk about your story to journalists. They take the story. And in the Times of India and Economic Times will not carry your story in the first go. Talk to smaller journalists. They will kind of try it, and those journalists will get picked up by larger journalists, right? It's important to kind of keep them updated, keep them informed, all of that about your story. Professor Dash talked about the infrastructure, okay? So there are infrastructure available. There are a lot of incubators, there are a lot of warehouses, there are a lot of co-working spaces. You need to get into that. It teaches you a lot. You work with other entrepreneurs, you work with other people. It learns you, teaches you, get customers also sometimes from there. Very important, okay? The more you have, better it is. If you have 2 incubation, great. If you have 3, even better. But at least 1 is very, very important, NASCOM. There are a lot of companies who are doing incubation right now. So you can get into any of them. All of them are teaching pretty much the same stuff, right? So, but it helps you kind of grow faster. Then make a list of family, friends, reach out to them, ask for them, tell them the proof of concept, tell them your story is working. Make a good presentation, a 2-3 minute presentation, 15-minute presentation, elevator pitch, all of that has to be made. Once you have done all of that, then you should go to an angel investor or a investor to kind of tell your story to kind of put money. By then you have some customers being sold, you have incubation experience, you have all of that. Once you get the money, you have to scale. So that's pretty much how it needs to be worked out. You should not be chasing your VCs early on. A lot of people make that mistake because you chase VCs. Chances are that VCs will drive their agendas. You need to drive your agenda. You need to drive your customers. It's very important to kind of make sure that happens. What not to do, okay? One is that never have an office in bad location. We made that mistake. Okay, just to save money, we had an office in a basement. Bad, not a good decision. Okay, unit economics should add up all the time. it should not be out of pocket. The other thing is that hiring is going to be difficult, very, very difficult initially, because your name is not known. Good talent will never join you. Believe me. However money you pay, good talent is not going to join you because you're not heard of. An organization not heard of, people who just got out, they're not very sure about it. So you will have to, make good with average talent. And the important thing about talent is that if the talent is not working out, please fire them. Don't hold on to them. Don't get emotional about it, because this is a transaction that you're trying to do to build your business. Okay, so talent is to kind of be very, very taken care. If it is, worse is to kind of keep them emotionally and kind of not fire them. That's worse that you can do for your organization. Okay, so make sure that you fire them. Okay, also, it's important to kind of understand if there is any disagreement with your co-founder. A lot of people settle it immediately. You will have disagreements with your co-founder. You need to settle that immediately before you go to sleep. Okay? Because if that kind of opens up, then your company is not going to go anywhere far. VCs are able to pick that up very, very easily, and they will play against it. All of that happens. It's very important to kind of be together. Okay? A lot of people make the mistake of doing with the job. Never do that. It will not work. Okay? Two things you can't step on two boats at the same time. You'll fall on your face. So it makes sense to kind of do it. If you have the conviction, leave your job and start. And initially on, you have to do it yourself. All of it you have to do is get your hands dirty to kind of do it. So those are things that, people will not talk about it, but it's important for you to kind of know also.
Thank you, Mr. Matthews. Thank you, Professor Dash. Unfortunately, we've run out of time. There are quite a few audience questions, but we won't be able to take up the questions. Thank you very much for sharing your valuable insights, spending your time today on a Sunday afternoon with us. I learned quite a lot, quite a lot about the mistakes I've made in my entrepreneurial journey, and I hope I can avoid them in the future when I do start out on my own. Professor Ashish, do you have anything, any question or anything to add?
Just a very big thank you. A very big thank you to both Vinay Matthews and Professor Sridhar Das. It's a Sunday morning, and I'm sure the week was quite hectic for both of you. Thank you so much for your time, for the insights, for answering the questions. It was a pleasure hosting you.
Thank you so much.
Thank you.
Thank you. Thanks, Kirti. Thank you very much. We are live. Good afternoon, everyone. I'm Ashish Bhardwaj, Dean of Jindal School of Banking and Finance at OP Jindal Global University. Welcome to yet another session of day 2 of the Global Finance Conclave, which is on All Eyes on India, Resurgence and Resilience Post-COVID-19. We had a fantastic set of speakers and discussions yesterday. In the 10 sessions that we've had so far, we've covered a lot of issues around global trade ecosystem, global financial stability. We talked about fintech, we talked about financial inclusion, we talked about unemployment. Few people said that unemployment is more of a pandemic than something else right now, and we need to seriously do something about it. We had a terrific participation from students yesterday. They debated on a couple of issues, but one of them was how do we create a smart city? And what does smart city mean, and what do we need to do to get it right? And we finished the first day of the conclave yesterday with a phenomenal talk by Professor Viral Acharya of NYU on how to restore financial stability in India. We started today with interesting discussions around financial literacy, and the session just before this was on what we can do to assist and help our entrepreneurs in India during this time of crisis. Now, it's my proud privilege to welcome our two speakers, my colleague Mayank Thondial, who's a professor of management and vice dean of Jindal School of Banking and Finance. And our keynote address for this session is going to be delivered by none other than Alan Rosling. Mayank is going to introduce Alan because that usually takes a few minutes, but I'm going to spend a minute on something else. Alan has spent several years in India, particularly in the city of Mumbai, a place where it's said that more dreams are born and extinguished than any other part of the country. And he spent a lot of time to build institutions in that city among so many other parts of the world. He's currently in Hong Kong. Alan and I met earlier this year where he spoke about India, China, and what Indian policymakers can do. And this discussion happened just before the situation turned from uncertain to bad to perhaps worse now. But what I can say is that there are very few people who have a very holistic understanding of the social, cultural, and economic landscape of India and the Indian industry based on their own lived experience. And Alan is one such person. You will hear the words writer, thinker, leader, chair for him. But I guess one word that can summarize all of this is guru. So Guru Alan Rosling is here to share some of his thoughts. Our Vice Chancellor says this sentence several times. It has caught my imagination that India is perhaps the only large nation that is living the 19th, 20th, and 21st century all at the same time. And a very important part of this journey that the nation is taking is how we are building and supporting or not supporting our smallest business units and enterprises, which is the theme of this session. Can't think of a better person to talk about Indian SME ecosystem. But I would really like all our viewers who are listening to this live on YouTube and Facebook to first know a little bit about Alan before he delivers the keynote address. And for that, I'll hand it over to my colleague, Mayank Thondial, for an introduction of our speaker. Thank you, Alan, for joining us.
Thank you very much, Ashish, for that. A very warm welcome to all of you who join us live via YouTube. My name is Mayank Thondial, and I'm a professor of strategy at Jindal School of Banking and Finance at OP Jindal Global University. I'm delighted to welcome you all to this very interesting session, Startups and MSMEs, Challenges and Opportunities for Driving Growth, as part of the Global Financial Conclave, which is being organized by Jindal School of Banking and Finance. Yesterday, as Ashish said, was a very exciting session. Today, that session continues. As part of that, we are extremely fortunate to have with us Mr. Alan Rosling, who is the founder and director of eCube Investment Advisors. Now, Alan has had a phenomenal career, as Ashish referred to. Now, his earlier career included positions as Special Advisor to the UK Prime Minister, Mr. John Major, Chairman of the Jardine Matheson Group in India, Executive Director of Tata Sons, and co-founder of Kiran Energy. Alan has an MBA from Harvard. Now, Alan has had a long association of almost 4 decades with India. So even though he's born in UK and he currently resides in Hong Kong, I can safely say that his heart is in India. No wonder then that Alan is the author of the very well-acclaimed book, Boom Country, The New Wave of Indian Enterprise, which basically explores the entrepreneurship landscape in India and the profound changes that are happening in this landscape and are a major part of the India story. So we are delighted to have you, Alan. Welcome to the program. So we have about 1 hour for this session, and the way we are going to plan this is I would like to request Alan to take about 20-25 minutes to deliver his keynote on this very interesting and very important topic. And then, I would request Alan to take up questions, which are going to come from our audience who join us live from YouTube. So without any further ado, let me now welcome Mr. Alan Rosling to deliver his keynote on the MSMEs and startups and how, they are part of the India story. Alan, over to you now.
So thank you very much, Mayank, and thank you, Ashish, for those very kind words. What I'm going to talk about this afternoon is the importance of startups and SMEs on 3 dimensions. The first dimension is the recovery from COVID, which we're all looking forward to in the next few months. The second is return to India's full potential as a major economy on the world stage. But I then want to move to what is really a current passion of mine, which is India's future in terms of redefining the green economy for the future. Now, in all these 3 dimensions, startups and SMEs have got a critical role. So let me just explain my credentials for speaking about this as a foreigner and a guest in India. As Ashish mentioned, it's nearly 40 years now since I first came to India as a young student. And in that time, I've had various avatars as a foreign investor, as a family member, as an employee of India's largest corporate house, and then more subsequently as an entrepreneur. So I'm now on to my second Indian startup. And my new Indian startup is among the smallest of micro organizations you can imagine. So it's a very bizarre startup, this new one, because for the last nearly 9 months, I've been excluded from India. So I left India on the evening of the 10th of February. And for the first time in 27 years, I have not been back to India for 9 months, which it feels like being a kind of drug addict, being denied your tipple or whatever it is. So the border was closed, OCI cards and visas have been suspended, flights have dried up, and it seems that people from outside India are not welcome to come to India. So Narasimha Rao was the Prime Minister last time. I spent more than 6 months outside the country. So very strange. And in that time, of course, India has been through the most appalling time. 9 million people have caught COVID, of whom 130,000 have died, incredibly sadly. The economy has taken the most extraordinarily negative beating. So a 24% decline in the first quarter of the financial year. And almost all forecasters are predicting a substantive negative growth for the year, possibly up to about 10%. So making India one of the worst affected economies and countries in the world, both in terms of the size of the impact of COVID, but also the impact on the economy. And of course, the worst affected people among the people who are least able to look after themselves, the poorest, the migrant workers, the people we've seen in horror struggling to get back to their villages from their migrant existences in the metros. And also among the worst affected are India's 63 million MSME companies, small companies. Now, these 63 million companies are the backbone of the economy. India is as we all know, a country of entrepreneurs, a country of self-employed, a country of people getting by in very specialized trades. And these are the people who do not have a paycheck at the end of the month from a Tata, from the government, from the railways, whoever it is. And these are the people who have been incredibly badly affected by COVID. So in June, there was a report that 30% of SMEs were closed for business. And even by August, 9% remained shuttered. And CRISIL reported that half of all SMEs reported a drop in earnings of at least 50%. And if you have any fixed cost at all, which very often is people, salaries, 50% is devastating. Now, of course, in the last few weeks, there's been more encouraging news. So there are signs of perhaps a recovery faster than many of us could have expected and hoped for. So, for example, GST reports in October, something like 10% up. The PMI, the Purchasing Managers Index for October for manufacturing, 58% up. Auto sales, 31% up. And very strangely, in many ways, FDI in the first 5 months of the year to August, holding up really well at $35 billion. So this would suggest that from the virus, even though India has been incredibly badly affected, the recovery, we hope, could well be quite sharp, and that MSEs are going to be the very heart of this rapid recovery. Just a word on the role of MSMEs in the Indian economy, because they really do, they drive the economy, they drive growth, they drive employment generation. As I mentioned, there are some 63 million small companies in India, probably more if you take individual traders. And this is an increase. So in the last decade, probably an increase of some 50% in the number of firms across India of the small end. These firms employ 110 million people, the second largest source of employment after agriculture. Again, significantly up from 10 years ago. So unlike the corporate sector, small companies are generating jobs. And small companies account for something like a third of GDP, half of exports, and 45% of manufacturing output. So as I say, they genuinely are the backbone as well as the future of the Indian economy. Strangely, though, from independence onwards, and as a Brit, I have to say even before independence, government policy has either ignored or has mishandled SMSEs, in my view. Nehru, of course, famously focused on the commanding heights of the economy, whether being the public temples of enterprise, the public sector, or the very largest of private enterprises. Combined on top of that, again, to my view, negatively, a very socialistic view about the need to protect and indeed direct SMEs. So there's been reservation, which you could argue should be in favor of small-scale enterprises, and an attempt to promote certain types of enterprises, handicrafts, khadi, whatever it might be. But in reality, the result of that intervention has been, in my view, negative for the small sector because of an overbearing regulation, a bureaucracy, a lack of infrastructure, corruption, uncompetitive financial markets that has resulted from this Nehruvian mindset that India needed to be protected, that SMEs needed to be directed, and the economy needed to be controlled. So you had a dichotomy for many years that India was a land of millions of small enterprises, but these were not enterprises of hope. I would argue they were enterprises of necessity. They were not entrepreneurship of ambition and growth. They were entrepreneurship of the lady in the market selling potatoes, the guy who came to wind up your clock, the guy who fixed your car, people like that who had no idea that their small enterprises might be part of any sort of future. Now, across the world, there's been an understanding in the last 30, 40 years that MSMEs are absolutely essential to economic growth, are central to the creation of jobs. It was an academic in the States called David Birch, who published a groundbreaking study in 1979 called the Job Generation Process. And his conclusion was that in the US, and this is very US-centric, 82% of all new jobs in the previous 6 years up to 1976 were created by SMEs. And at the time, that was a very radical finding at a time when most economic planners and economists were thinking in terms of large corporations and the role of government. And this understanding of the role of small companies has been reconfirmed many times over. And one of the most influential, for example, the Kaufman Foundation, again in the US, reported in 2010 that from 1977 to 2005, in the US, small companies, large companies shed 1 million jobs. Large companies shed 1 million jobs, but younger companies, less than 3 years old, created 3 million jobs. And that process of increasing productivity and scaling down of employment in large companies is only going to be speeded up with robotization and the role of AI. But the role of small companies will continue in terms of creating new employment. The other observation that economists have begun to have is that there is, in many cases, a sort of U-shaped relationship between employment in small companies and the economy. So that in the poorest economies, so think, sub-Saharan Africa, a very high proportion of people are employed themselves in small employment or just self-employed, the informal sector getting by. And I think all of us who know India well would recognize this type of semi-informal, semi-formal employment and many, many small companies. But as the economy develops, you tend to see larger companies developing, obviously the role of government, etc. And therefore, in many cases, up till recently, the percentage of people who are self-employed might decrease, and the people employed in the more formal and corporate economy might increase. But then again, a tipping point. At some point in this process, again, the economy tips towards smaller companies. So if you look at the most advanced economies in the world, small companies employ the most people, and small companies are creating the most incremental new employment. And India is definitely moving down and through that U-shaped curve towards a future where employment generation will be almost exclusively the role of small companies. So this is certainly true of the COVID recovery, but it's also true of a wider sweep of India's resurgence onto its proper place in the world stage. And this is a process that I cover in the book that was kindly mentioned earlier on, Boom Country, when having been an entrepreneur in Bombay, I recognized that something different was happening in India around entrepreneurship. So as I said, India was always a land of entrepreneurs, and you took Indians out of India and you put them anywhere else and they became entrepreneurs very naturally. But that in India, small companies were, up until the reforms, held back in ways which were like training to be an athlete at 10,000 feet with 100 kilos on your back. And when you came down to sea level and the 100 kilos were taken off, you could run much faster and with more stamina than many other athletes who hadn't had that experience. So similarly with India, entrepreneurs who'd been held back either left in the 1980s and went to the US and became very successful, think Silicon Valley, or in India from, say, 92 onwards with the reform program, entrepreneurs began to have levels of ambition and impact we'd not seen for many, many years. And this is what I chronicled in Boom Country by interviewing 109 entrepreneurs across the spectrum, from the most successful household names, Narana Murthy, Uday Kotak, but also many younger people who'd made it, Vijay Shekhar Sharma, etc., but also younger people who had not yet made it or who'd tried and failed and wanted to make it again in the future. So what I found in the research for this book, which is now some 3 or 4 years ago, was that Peter Drucker's description of the US in the 1980s was just as applicable to India of today. And I'm going to quote Drucker saying, a profound shift from a managerial economy to an entrepreneurial economy. So in other words, truly a new wave of Indian enterprise. And this new wave was distinct from the previous entrepreneurship experience of the 70s and 80s by its scale of ambition and its speed of execution. So there was a new spirit of entrepreneurship which had been unleashed post the reforms of Narasimha Rao and Manmohan Singh, and then gathering strength through the 90s and into the 2000s. And this new entrepreneurship had, and indeed still has, the potential to drive India's growth and true transformation. And I argue in the book that really 4 things underpin this new entrepreneurship. Number 1, new opportunities and the lowering of barriers to entry driven by liberalization, government policy, but critically by technological change. So think the internet and all the technologies and enabling opportunities that the internet has brought. Number 2, government policy. So I'm not very often quite rude about the government, but it is certainly true to say that in unleashing India's entrepreneurship, the government has played a role, not least in stepping aside and reducing the bureaucracy and opening up sectors of the economy that had previously been closed. So many fortunes just after the reforms were made in sectors like the media, telecom, or finance that had previously been, the secret gardens of the public sector. And suddenly you're allowed, Mr. Mittal in telecom or Uday Kotak in banking. And the result was very quick and very apparent. Number 3, finance. Again, sometimes I'm a little rude about VCs and PEs, but there is no doubt that the availability of capital to ordinary people, people who are not born into business families, has been transformational. If you have a good idea and a good team, you can now raise capital. And this is an extraordinary change. I just heard the last speaker talking about bootstrapping, and that's very often very wise. But you can now go out and raise a very large amount of money to develop a business at scale and impact very, very fast. And the 4th factor, which in many ways I think is the most important and the most profound, is a cultural change, especially among young people, but also among their parents and grandparents, in favor of entrepreneurship as a career choice, as a lifestyle choice. So think a few years ago, if you'd gone to your prospective mother-in-law saying you were trying to do a startup, you would have been knocked off the list of eligible young boys. Now, your prospective mother-in-law might ask if she can invest. So the transformation, acceptability of entrepreneurship, the attractiveness of entrepreneurship to young people, but also, really importantly, the acceptance of failure is really profound for India. I think of this as something which has come about due to the deep interaction with the US. And I upset many of you who might support the BJP and that type of thinking, saying this is the Americanization of the Indian culture among young people. So take my own venture, Kiran Energy. So Kiran was set up just over 10 years ago by 2 guys who'd had careers in the organized sector. So I came out of Tata's and my co-founder Ardashir came out of KPMG. We applied new technology, so solar, which is of course also a silicon technology, which enabled us to do something which would not have been possible before. In other words, a small-scale power company. We were allowed to enter power by liberalization. So previously power had been preserved with the public sector, other than a few sort of incumbent organizations like Tata's. We raised private equity straight away, $75 million on a business plan. And we were encouraged to do this by a cultural change. And we attracted a team of people around us who wanted to come with us on a journey from safety of leaving employment to an unknown future. The only thing we could say was we would have some fun on the way. We couldn't guarantee success. So I think Kiran Energy illustrates the type of changes that have been sweeping across India. And that type of opportunity can be replicated in many sectors, particularly obviously everything to do with the internet, to do with data, to do with connectivity, but also in manufacturing, in healthcare, in education, in hospitality, every possible sector you can think of. So that's my second dimension of the role of small companies and particularly startups. But let me now turn to what I think is even more profound. So assume that India is on its way to rejoin the family of leading nations, its proper place on the world stage as the first, second, or third largest economy in the world. We're also, I believe, on our way to be a different type of economy in terms of being among the first to become genuinely a green economy. Now, this is more speculative, but I believe this to have at least a good chance of being true. So I believe that smaller companies and startups have a critical way in lighting up the path to a new resurgent India, which is genuinely green. Why do I say this? Well, first of all, India is certainly going to be one of the culprits among the contributors towards climate change. So over the next 20 years, India is almost certainly going to be the largest incremental emitter of greenhouse gases. That gives us a problem. It also gives us a responsibility. Secondly, India, in my view, is going to be one of the most vulnerable countries to the impacts of climate change. So think rising sea levels, Chennai, Bombay, Calcutta are all about a meter above sea level rise. We're all dependent on the snow-fed rivers coming down from the Himalayas, the monsoon, there's a water shortage, all of that. India is genuinely vulnerable. Number three, the government of India, under Manmohan Singh, but now particularly under Mr. Modi, has demonstrated genuinely and very welcome real leadership in terms of climate change policies. So Mr. Modi's leadership in solar comes to mind, a sector that I know something about. Looking ahead, India is committed to, say, a 30 to 35% reduction in carbon intensity. That's our national determined contribution under the Paris Agreement by 2030. I think we will go much beyond that. I think the pressure will build to match China, Japan, and Korea to commit to net neutrality by a date. It might be 2050, it might be 2060, it doesn't matter very much. But India will rapidly become part of the solution, not only part of the problem. India is already rapidly decarbonizing electricity, so solar, wind, a little bit of nuclear I'm more skeptical about, and transport is now following. So I think there's going to be an EV revolution. In this, obviously larger companies have got a very large role in it. Many large companies are adopting sustainability because it's the right thing to do, because of pressure from customers, investors, and regulators, and because, most importantly, it saves money. But the real frontier is among the SMEs, the small companies. They need to reduce their carbon footprints and their water usage and their reduction in material. And if India's 63 million, going up to 100 million in the next few years, small companies become part of the solution, if they become part of the innovation around technology, if in their systems and their processes and their go-to-market and their delivery, they adopt carbon reduction, then we are lighting a way to a genuinely green future, to an energy transition in which MSMEs can genuinely light up India's resurgence to a green future. So let me stop there. I'm conscious that you will have some comeback at me and no doubt some questions. But let me just say, I'm a huge optimist for the role of small companies in India in India's tremendously exciting future. Thank you.
Thank you very much, Alan, for such an inspiring keynote speech there. You have, of course, have had a very deep understanding of the Indian business landscape. As someone who's born in UK, now you're Hong Kong, you of course bring that outside perspective also. And from that context, let me ask you this very first question. India, of course, aspires to become, as you said, one of the one of the superpowers in this largely, multipolar world, right? And for that, the Indian MSME sector, the Indian startups, they of course, they need to go beyond a certain level. So my first question is this, as an outsider who has had a very deep engagement with India, what do you think are the, let's say, the 3 to 4 top things that, policy interventions that you would like to see to happen, especially in the MSME context in India?
Right. It's always very easy to blame government for everything. And I think it is also genuinely true that India has been held back in its first 70-odd years of independence by government. I don't want to get into debate about what happened before independence, of course. The government also had a very negative role there as well. But since independence, I think India has been has not achieved its potential because of political leadership and because of government. So what can government do to make that better? Well, the first thing is to get out of the way. I think India is still over-regulated. The bureaucracy is still not responsive enough. Things happen too slowly. It is too complicated to do business. It is, government still is not part of the solution. It's part of the problem. So that was my first thing. We need profound deregulation. We need speeding up of government systems. I'm not arguing for getting rid of standards and controls. I'm asking for when they are critical, which they are, for example, in environmental controls, that the process is clear, swift, and fair, which sometimes it is not. The second most important thing is infrastructure. So India is held back, there is no doubt, by the ongoing weakness of our physical and our software infrastructure, meaning that it is, even if you are the most competitive company within the boundary fence of your factory or within your building in Bangalore, you are held up by all of the diseconomies of the inputs, the ports to get your goods in and out, the roads to move your stuff to market, the telecom system to export, and so on. So that's the second thing. Government must invest in better infrastructure. And of course, to be fair, they're trying to do that. They're doing it. Just the scale of the challenge is enormous. The third, and in many ways the most essential, is education and science and innovation. India, of course, is home to the most extraordinarily high quality tertiary education, particularly the IMs, IITs, and so on, and no doubt O.P. Jindal. But the reality is that when you recruit people fresh out of school in India or out of college, very often they're not properly prepared for the world. So the quality of our education and the degree to which that education is designed for the future, the degree to which education forces people to think rather than just parrot facts is essential, and the importance of our science base. It is, I think, the biggest difference in many ways between the startup scene in India and overseas is the lack of genuine interaction with the science base, which differs greatly from what happens, if you think of in the Boston area or San Francisco area or the Cambridge area, London, where great universities are at the heart of startup systems. That is not so true with India. No doubt it's changing, but the role of universities, the role of research, and the porous nature of people moving from industry to academics to industry, and finance being a part of the triangle as well, I think is still lacking.
Right, Peter. My next question is actually based on what you said in your address about this new spirit of entrepreneurship. The shift from a dire need to ambition, and you mentioned Professor Peter Drucker as well there. So my question is actually, this is very cultural. I also noticed that in my when I talk to students at the undergrad level, at the postgrad level, many of them are very fascinated by the idea of entrepreneurship. So is it something that you think from your interviews before and from your talk, it appears to me that this is something that has happened before in US, possibly in China as well, because they are the two big major centers of new startups. So do you think that is something that tells you that India is in that path to becoming, a big entrepreneurship ecosystem? Is that something that has happened before, let's say, 2 decades ago in the US or in China?
Yeah, yes, I think you're right. I mean, when I first got to know India, there were, of course, business families, business groups, communities, castes, whatever, where you were expected to get into business, whether it be the family business or your own business. And no one had ever been employed, so to speak. Everyone was always in business. And then there were families, including the one that I married into, where business was a dirty word. And you had to be an engineer, a doctor, a lawyer, a government servant. Otherwise, you were not respectable. So when my prospective mother-in-law heard that I was in business, she fainted. Particularly, I was in the lingerie manufacturing business at the time, so it was even worse. And she had to say, well, don't tell the family. It's too embarrassing. That's changed. You're right to say it's changed in other countries as well. America, I think, has always been a little different. I went to America in the 80s as a young Brit, going to business school, and I was overwhelmed by the sheer positivity and culture of America, where everything was possible. Everyone was on the up. Everyone could be successful. Even when I thought somebody was no good, they believed it, they were good. So the culture was extremely pro-business and pro-entrepreneurship, very different from the UK of the 70s and 80s that I'd grown up in, where we were constrained by our lack of ambition and lack of self-confidence. So India is this strange hybrid of a country which had always been incredibly entrepreneurial in some respects, and yet had this, what I think of as kind of Nehruvian ice age of, the economy kind of semi-constricted and put in a straitjacket by wrong turns of policy. And I think, obviously, what happened with the reforms helped bring it out of that straitjacket, but also, as I mentioned, an interaction with the US. So that from the 70s and 80s, hundreds of thousands of young Indians went to the US. They went to improve their lives. They went first for education. They went to make some money. And of course, many of them stayed and have been very successful and created, what America is today, particularly among, entrepreneurship. Silicon Valley, as we all know, is heavily populated by Indians. And now they're getting into politics, including our new VP. But the connections with India will always remain. So, many of the IT companies obviously were created in a conversation between American capital, American demand, and what could happen in Bangalore and elsewhere. People began to return. The private equity and VC world was another example of people flowing back from the States, bringing capital with them, opening offices in Bombay and Delhi to invest essentially American capital into the Indian system. Now you have, when young Indians go off to the UK and particularly the US for education, they tend to come back because the opportunities are probably greater in India than they are back in the US. So you have these multiple connections between what's happened in India and the change of culture and what's happened in America. But most of all, of course, the internet. So that if you're sitting in Cafe Coffee Day in some second city or third tier city in India, you're just as well connected into what's happening among kind of youth culture in the States on Facebook, on WhatsApp, Instagram, whatever it is. So you're part of a global community. And you don't have people just cut off in India from the kind of the trends and the thinking of what's happening among young people in Shanghai or Berlin, or Birmingham.
Thank you, Alan. The questions are just flowing in, so you better be ready there. So let me ask a question from my colleague at Jindal School of Banking and Finance. So MSMEs have been getting targeted credit for some time in India now, which has led to a lot of NPAs and suboptimal lending. After the pandemic lockdown, another huge spate of subsidized loans to MSMEs were announced. And my colleagues asked, do we need to rethink our strategy that just makes cheap loans available without properly evaluating them? In other words, are we getting a bit ideological about MSMEs and treating them as a panacea solution for all things?
Right, and obviously access to credit has been a problem on small businesses, not just in India but across the world. So there is a genuine problem here. Politics gets in the way, and ideology gets in the way in terms of financing certain types of things. Think about finance for farmers in India. Post-COVID, of course, moratoria and credit to small companies absolutely essential to keep those 63 million afloat when there's been the most extraordinary squeeze on demand, on sales, on receipts, and therefore credit has been essential in keeping companies afloat and people employed. This said, and my new startup is going to be an MBFC. So what 6 of us, largely Tata alumni, led by Mukund Rajan and my colleague Govind Shankaran and myself, what we are setting out to do is to create India's premier lending institution for green finance for smaller companies. So we've been studying this opportunity now for some time. We believe that there are many, many opportunities across small companies which are just not being financed. And it's not that the credit is not available, it's because the institutions don't lend. And that's why they don't lend, partly because they don't understand the opportunity. So just looking at green finance rather than the general credit crunch, we think that if you take a number of $3 trillion to get to India's commitment on climate in the next decade of investment, so let's say half to 2/3 of that is going to be debt. A chunk of that, probably getting on, 600 billion to $1 trillion, will be in small companies to finance an energy transition, as I was saying at the end of my kind of prepared remarks, to finance solar generation of power, energy storage rather than diesel gensets when the power grid goes down, electric vehicles for delivering, and electric power within the factory, and digital transformation of energy use within a factory setting. So the opportunities for lending to this transition is just absolutely enormous. So I don't think I'm qualified to talk about non-green opportunities within smaller companies, but if you extrapolate from that, I've got to believe that the smart use of finance is part of the way of opening up the opportunity for smaller companies to fulfill what I think can be their role in growth and employment generation.
Thank you, Alan. Questions are just flowing on. This one from one of our students, and he asks, he has something on COVID-19. So, it says that given the context and the profound impact that, COVID-19 has had on, the entire economy, not just the MSME, of course. So, which business you recommend which can be opened now, in the context of COVID-19, of course, and is evergreen. So it's successful even in worse conditions. What do you think?
It's a very hard question, and I very often get asked overseas, to which sector should I invest in India? And as you look across the Indian economy, everything has got potential. Even sectors which in the West would be kind of passé, they still have opportunity to invest in India. So I think it's a very tough question. If you believe, like me, that the economy in India will bounce back quite rapidly because of the flexibility and resilience of business people in India, and if you believe that India has been underperforming its potential for the last 40 or 50 years, and that with the resurgence of the youth dividend coming through, the demographic dividend, and the change of culture among young people, and the unmet need of the population as a whole, that growth opportunities abound. So I'm going to duck the question by saying the answer I think is most. So it's not so much, I think, the sector, it's how you do it. So even if you take something which has virtually zero barriers to entry, take pizzas, right? So, the world really doesn't need another pizza chain because it's got virtually no barrier to entry, and anyone just about can buy a pizza oven and start delivering pizzas. And yet, entrepreneurs find ways of coming up with differentiation, even in something like pizza, or some other type of fast food, and serving an unmet need. It might be an innovation of business model. It might be an innovation of product. It might be a kind of crossover of some sort of differentiation of the actual pizza itself. I don't know. I'm not a pizza guy, but you know what I mean. Whatever sector you look at, the opportunity is there for somebody who wants to differentiate and find a pain point, find something which has not been properly met by the previous generation of entrepreneurs.
Thank you, Alan. Now, the Indian entrepreneurship activity, if you look at the ecosystem, it's growing, but in terms of sheer numbers, as you know, it's far smaller than US or China. So if you look at the last 2 decades, if you look at the number of unicorns compared to 230 each, roughly speaking, in US and China, India, we're talking about around 20 odd, which is just a fraction of what you find in US and China. So what do you think will take to take this activity to the next level, given the strategic importance for the country?
Right. I'm a great believer in McKinsey's S-shaped curves, right? So things develop exponentially. 10 years ago, China didn't have any unicorns. Right? So, okay, maybe Amazon had developed by then, but basically it hasn't. So the 220 or whatever is unicorns in China are very, very recent. I used to give talks about China and India and say that, well, China is the world of public sector enterprises and so on, and there are very few private sector enterprises. How different it is just after a decade. So I think the main answer to your question is just a matter of time. So as the Indian economy moves towards a $5 or $6 trillion economy, the opportunity for seriously scaled companies will develop very fast on the domestic front. And as India develops businesses which are truly competitive and differentiated on a world scale, and there is no reason why we can't do that, similarly, value will be created in export or outward-facing businesses. So, our first wave of unicorns, in many ways, is around IT, and those were, of course, 100%, or almost 100% export-oriented businesses. We then tended to turn inwards, and our unicorns have been around domestic internet companies. But I think we'll have both. We'll have domestic companies and we'll have global companies based in India. We'll have both. But the 20 that we have today, unicorns, were only 5, say, just 3 years ago, and are likely to be 100 or 200, in 5 or 10 years' time.
Now, a few questions, Alan, on your new book. I'm just trying to club these questions together, given the number of questions I'm receiving. So your well-acclaimed book, Boom Country: The New Wave of Indian Enterprise, is, of course, the entrepreneurship scene in India. What do you find the most fascinating thing about entrepreneurs in India? I mean, in terms of the difference between, let's say, from US or UK, or even China for that matter?
Well, to a degree, entrepreneurs the world over, right? And particularly if you take the younger guys who, you take them out of India and they could be Americans. That said, entrepreneurs are the most different creatures. They come in all shapes and sizes. Very often they're slightly quirky because you have to believe in yourself to a degree which is just illogical to become a very successful entrepreneur. You have to be driven. You probably have to have a very, skewed personality in certain directions to want to do this and put you and your family through it. So I think the most striking thing to me, as in many things in India, is just the sheer scale and variety of the entrepreneurial tribe in India. Okay, maybe I enjoy observing India more than other countries, but I just have come across more characters, more interesting stories, more compelling stories of, rags to riches and true creativity and grit in India than any other country. So India is the thing that I love most in many ways, and among entrepreneurs, as in other parts of the Indian scene, I think the entrepreneurial system in India is just richer, more exciting, more quirky than any other country that I can think of.
Alan, also I couldn't help but notice the question mark in your book, Boom Country, and then there is a question mark.
Yes.
And given that this book was published in 2017, probably you wrote it a while earlier before publication. So, and we're talking about 3-4 years after. So, and a lot of waters has passed since then. So, does the question mark still exist?
The question mark still exists because the question mark is there. One, because I didn't want to be part of that tribe of guys who just sort of rah-rah and everything's fine in India. India is on its way to world domination sort of thing, because clearly we have serious challenges and problems and opportunities, but it's not going to be easy. But the most important reason for having the question mark in is India has consistently failed to deliver its potential. In 1947, India was the country becoming, that first wave of large countries becoming independent, with the most potential, the most developed education system, the most developed industrial sector, the most educated and effective civil service, the best political leadership. I mean, whatever you think of Nehru now, at the time, he was fresh and young and full of ideas and honesty, and it was a hopeful time, infectiously hopeful time. And yet, we got the Hindu rate of growth because the system didn't deliver for the ordinary Indian person, because the system of incentives in a democracy, which of course I totally support, meant the politicians were making bad decisions, believing that they were appealing to certain bases, to a conservative society, to their caste, or frankly, they were just in it for themselves, whatever the reason. So in my view, India has been badly served for most of its history by its political leadership, and they've been part of the problem. Now, hopefully, they are now part of the solution, but that can easily flip back. And just take one particular thing which has affected me personally. Whatever you think of China and the India relationship, I find it illogical to say that every single Chinese investor in India has to be approved by the government. That means a Chinese resident who buys a single share in India has to go through a government permission, which takes 3 to 6 months. We don't know how long it takes. It's back to the old FIPB. And as a resident of Hong Kong, I'm caught. I'm allegedly, according to the government of India, Chinese. So I can't now invest in my own company in India without going to Delhi and seeking permission on bended knee. So we're back to, back at the bad old days of 1980, when to make an investment in India. So instead of saying there are certain sectors in the Indian economy which are strategic, where we don't want foreigner control, or we don't want foreigners taking advantage of low prices caused by COVID and doing takeovers, or that there are, certain types of investment that we want to say yes or no to. They've put in place something which is across the board. So, a minority investor in a tea shop has to go through the same process as a majority investor in a nuclear power station, which is just nuts. And there are many people who have to say in the government of India, no, it's nuts. But the politics is running against anyone who stands up and says, well, we're reacting because maybe what happened in Iraq. Is it really balanced? And are we really wanting to go back to, the days of Swaraj and, protectionism? Because to me, India is the biggest beneficiary of openness and free flows of capital and free flows of trade and free flows of people. So to try to restrict any of those things, I think, is in India's long-term disinterests.
Right, Alan. On a different note, correct me if I'm wrong, but Mr. Ratan Tata seems to be a big influence on you. I know you've had a stint with Tata Sons as their executive director. So why is that?
Well, I worked closely with Ratan for some 11, 12 years. First of all, as an outside investor into one of his companies and representing Jardines on the board of Tata Industries. And then he asked me to join full-time as executive director of Tata Sons. He is the person I've worked with in my career, and I've worked with many fascinating and impressive people. He's the person who has inspired me the most. Why? Well, because of his vision, because of his honesty, because of his interest in the world and making a difference to the world, and because of his ethical backbone. So it was the first time, and I'm been trained obviously in the West and went to Harvard Business School, as you mentioned, and all that stuff, but so trained to make business decisions by what is profitable and strategically correct. And Ratan taught me that, yes, you must do those things, but you must also think what is correct in other ways. What is right and what is wrong? What is in the interest of the country and the community? What could I defend? So if my decision is of a certain type, can I stand up and and say, I did it for the following reasons. Can I sleep well at night? So that means sometimes, very often, in fact, avoiding opportunities which others would take, making decisions which are suboptimal economically because they just don't fit with your value system, being more generous to people than you need to be by law, because that in the long run, this is the right thing to do. And it'll also turn out in the long run to be the right business thing to do, even though in sheer NPV terms, it might not be the most NPV maximizing decision.
Thank you, Alan. I have a question on technology and MSME. And the question is, the role of technology in the MSME sector, and are Indian MSMEs fully equipped to leverage technology to its fullest? So what do you think of that?
Well, clearly not. And obviously there are a number of MSMEs who adopt leading technology, who innovate technology themselves, and are part of the role of innovation of technology. But there aren't enough. There aren't enough companies that invest in modern technology to be at the forefront. And there's certainly not enough who try to compete on innovation rather than on cost. So as I think I mentioned during my talk, too many people want to do something similar. If you think of, go to any part of the economy, think of your hometown. Many businesses are clustered together. There's a street of guys who sell knives, or there's a street of guys who do textiles. What differentiates one shop from the next? Very little. Similarly, in more organized businesses, what differentiates one steel maker from another steel maker? Not very much. One cement company from another cement company. So in the past, it was access to government. So if you could get another license, you've got an edge over your competitors. If during the license ride, you got permission to sell more, to increase your prices, to build a new factory. And then post-liberalization, it was about cost. Could you compete against the world's best on cost? So that's really the foundation of our IT business. It was cheaper, or our drug business, it was generic. But so few Indian businesses, large or small, have really thought about innovation and differentiation as their fundamental differentiator and future strategy. And if you don't, you won't survive, because there's always somebody who's going to match your cost. There will always be somebody who pays less to their people. There will always be somebody in a new geography with cheaper workforce. Long-running, sustainable businesses are businesses which change, innovate, obviously buy the best technology. Sometimes have to use suppliers, but also innovate. The key things of your business model need to be bespoke and customized for yourself. So to go back to my point about education, if your mindset is open and inquiring and challenging, you will find ways of doing things differently. The pizza example I was using, find a way of delivering a pizza differently, or a different type of pizza, or a different audience for your pizza, or communicating your pizza differently. So innovation and technology to me are not the same thing, but are connected. And small businesses, just like Indian large businesses, have not done particularly well in this regard, and need to for the future.
Thank you, Alan. There are many, many more questions. Unfortunately, we'll have to give them a miss. I have one last question. I would like to invite, Professor Ashish Bharadwaj, my colleague at JSBF. Ashish, if you're there, so Ashish gets to ask the last question here. Ashish, please go ahead.
So happy to get this privilege. But Alan, I have a question, and let me give a quick context. Wonderful talk. Really enjoyed listening to your thoughts. You're one person who's seen the Indian society, India as a society, our industry evolve over 3 decades now. And you also understand the historical underpinnings of it. And you've seen this alongside changes that certain other nations have witnessed, including China, Britain, and so on. I think you would agree that the approach that the executive branch takes in policy making, mindset of the people, and the business climate, which is talked about a lot, are dynamic processes, and they go hand in hand. And if they're really done well, which is what you were trying to convey, I believe, if they're done well, then they create a level playing field, irrespective of how challenging the climate is. Now, my question to you is based on what I heard Kaushik Basu, a famous economist, say very recently, just a few days ago, about the economy. He said that divisive politics and intolerance are the major obstacles to India's economic growth. Question is, do you think they are obstacles to the growth of startups or nurturing of this entrepreneurial mindset in a country like India or not?
Well, yes, as a liberal, of course, I would agree. I don't think it's the most immediate challenge for the economy. Even in China, maybe especially in China, which is probably not the world's most open and tolerant society just at the moment. And I speak from Hong Kong, so I have to be careful. Clearly a directive and slightly intolerant system has not held back entrepreneurship in some respects. But first of all, I think in the long run, innovation and competitiveness comes from openness and diversity of thought, the freedom of thought. Freedom of thought comes with dialogue, with difference, challenging difference and tolerance of difference. And this is, to me, one of India's massive historical strengths. So India lies on the crossroads of the world where cultures and languages and trade and finance have always flowed, east and west, north and south. And it's generated India in so many different ways. I mean, my own, people from West Yorkshire obviously came and had a role for a couple of 100 years in India and left, certain things behind, good and bad, just as previous generations of traders and migrants and invaders had done so. So India is the result of all those rich interactions. And India is the most diverse country that I know. And therefore, India's ability to be multilingual obviously linguistically, but also multilingual culturally, is so important. It means that you just look at the number of Indian executives who run big American or British or Australian companies. So Indians have this ambidextrality of going to another culture and just feeling at home because it's no more diverse or less diverse than back home. Because if you can, navigate the complexities of all the different cultures and differences in Calcutta or Delhi or Bombay or anywhere else in India, then New York is a cinch. I mean, it's just, so I think India's have this inbuilt advantage for a multicultural and open world. Here we are speaking in a language which for many of your listeners is not their first language, but they probably have 3, 4, 5, 6 languages they're comfortable in or can communicate in. What a huge advantage. And the same, in the terms of the way they think and trade, the friendships they make, the connections they made. So long may India remain open and tolerant, because I think it is a genuine competitive edge over more inward-looking closed societies, which at the moment look like they might be more successful. In the long run, I don't believe they necessarily will be.
Thank you, Alan. Back to you, Mayank.
Thank you, Ashish. Thank you, Alan, for delivering such an insightful talk on MSME startups in general. I think, a person like you who has had a deep engagement with India, who has had multiple stints in different startups, big companies, I think, this was very, very helpful. I have no doubt that all the people who have joined us live via YouTube, have gained immensely from this talk. Unfortunately, we have completely run out of time. So, I just like to say thank you. And I really hope that we can, welcome you again in, other opportunities at Jindal School of Banking Finance and, the Jindal Global University in general. Thank you very much, Alan, for this session. Thank you.
Okay. Thank you, Mayank, and thank you for everybody listening. Thank you. Have a good day.
Thank you.
Bye-bye.
Okay. Okay, welcome everyone to the Global Finance Conclave Student Debate Final Rounds. We are going to be joined by 4 teams today. So 2 teams are going to compete against each other in round A. I will briefly announce their names, and 2 other teams are going to compete in round B of the debates, which will start from 3:15. So for round A of the debate, we have Team 1. Team 1 is the team represented by the Jindal School of Banking and Finance, JSBF. The speakers for team 1 are Pritika, Ujjwal, and Yuvraj. Team 1 will compete against team 6, which will be against the topic. The team is TA Pi Management Institute, Manipal. The team members are Siddhant, Ayush, Pragati, and Anuj. So we'll start with the debate shortly, but before that, we are very privileged to be joined by 3 esteemed judges. We are joined by Professor Ruchira Sen, who is an assistant professor and assistant dean at the Jindal School of Journalism and Communication. Professor Ruchira was kind enough to judge the preliminary round as well yesterday. We also have Professor Wenjuang Zhang, who is associate professor and assistant dean, international collaboration and executive director at the Center for India-China Studies at the Jindal School, at the Jindal Law School. And lastly, we have Dr. Professor Arun Kumar, who is a professor and head Department of Management Studies at IIT Madras. A big welcome to all of our judges, without whom this debate could not have been done. And many congratulations to all the teams who have made it to the final rounds. Now, briefly, we are going to be, I'm just going to go over a couple of the rules first before I ask the student moderator to jump in. All the 3 judges will judge both round A and round B. Once we finish with both rounds of debate at precisely 4 o'clock or 4:05, as the case may be, that will be followed by a small lecture on financial stability and currency changes by Professor Arun, post which we will announce the results for the debate competition. The winning teams of debate round A and B, both their marks are going to be compared, and the highest marks given to the winners of round A and round B are going to be declared the winner of the debate competition. With that, let me call on board our student moderator, Nikhilesh Dawar, who is a student, second-year student at the Jindal School of Banking and Finance. Nikhilesh, why don't you start with the topic? And if the judges are ready, I think we're going to start the debate. Nikhilesh, over to you. You're on mute, Nikhilesh.
Good afternoon, everyone. The topic on this, the topic for the debate is: this House believes that United States dollar will no longer be considered a reserve currency for the rest of the world. With both the teams present here and our esteemed judges present here, I would like to begin with by inviting the first speaker of side proposition, Pritika Bajaj.
Good afternoon, respected judges and my fellow opponents. Am I audible?
Yes.
Good afternoon, ladies and gentlemen. My name is Pritika Bajaj, the first speaker representing side proposition. The second speaker from the House is Ujjwal Mohta, and the third speaker is Yuvraj Singh. Now, the topic on the floor of this House is: the House believes that USD will no longer be considered as the reserve currency of the world. And it is my immense pleasure in defining the topic. The first thing that I would like to define is the House. The House belongs to the rational human beings or the rational citizens of this world. The second thing is the reserve currency. A reserve currency is a large quantity of currency maintained by central banks and other major financial institutions to prepare for investments, transactions, and international debt obligations, or to influence their domestic exchange rate. At the end of the day, trust is really getting broken in the traditional financial system. That's the theme. The less trust you have in the dollar, the more you have alternatives, says Tom Lee, co-founder and head of research at Fundstrat. To which more and more people are saying, you know what? It's not such a bad idea to be decentralized. In the recent interview, US billionaire investor Ray Dalio and founder of Bridgewater has quoted that when it comes to China-US tensions, there is a trade war. If there is a technology war, there is a geopolitical war, and there could be a capital war. Now, I believe this war started quite some time ago, and looking at the SWIFT system, which is a banking system by which you are able to transfer money around the world, that actually became weaponized by the US. When it was first started in the 70s, the whole idea was that this would be neutral. No one would ever no longer touch it or use it as an offensive weapon to get political gain. And so this is something that the United States has gone really overboard. I mean, anybody who's involved in something they don't like, they start putting on not only tariffs, but these kind of sanctions, and they enforce them through the banks. And in a sense, through this SWIFT system, you've seen Europe, Russia, China, Venezuela, and the rest of the world is also very nervous because they don't want to be literally under the thumb of the US when it comes to finance. So we see that the possibility the USD may no longer be the reserve currency of the world. The fact is we've entered into a new paradigm. Sorry, the old ways do not work anymore because we have new sets of problems. And what I'm paying a lot of attention to is that the fact that China has developed an e-currency, and this will get them around these kind of capital controls because they will be able to trace where the money is coming in and where it's going out. And this could be a real game changer. Remember, China is the trade partner for over 120 countries. So in that kind of scenario, why are you hedging money in the US, which could be going down, not as stable as it was? So this new e-currency, as I said, could be a game changer in a way which is able to ascertain that money flows are not going out for illicit purposes or for avoiding taxes. Also, to be specific, when a few months ago, the dollar index against the major currencies fell to a multi-year low, US investment banker Goldman Sachs issued a warning that the dollar is in the danger of losing the status of the world reserve currency. According to IMF, the US financial system is in an extremely fragile position right now, as is that of Europe, the second primary reserve currency in the world, the euro. It will not take much of a stiff geopolitical breeze to precipitate another financial crisis on par with 2007 to 2008 and probably worse. And a financial crisis in the US would have a major impact on other countries, since everyone has some investment in the US dollar. If a financial crisis hits the US, the whole world would likely be affected. So people don't believe in making US dollar the reserve currency of the world. The most plausible immediate threat to the US dollar's reserve currency status would be domestic political events that purposefully led to a US debt default. Even that particular possibility, which is still highly unlikely, would not immediately cause a shift in the US currency status, as the main impact would depend on how the damage to the US Treasury market was in terms of being the risk-free asset. But relatively speaking, the impact of a debt default could reduce the dollar's value of standing in front of the deepest financial market. And this would induce a faster diversification into other currencies and removal of USD as the reserve currency of the world. Thank you.
Thank you, Pratika. Now, moving on to the first speaker from side opposition, I'd just like to mention something that the sides can ask POIs, and please raise your hands. Raise your hand when you need to ask a POI. Only one POI will be asked per speaker, and the question should not be more than 15 seconds long. Okay, moving on to the first speaker from side opposition. Please start.
Right. Yes.
The judges must note that the speaker spoke for 5 minutes and 19 seconds and no POI was asked.
So should I begin?
Yeah, just a second. 3, 2, 1, start.
Good afternoon, respected chairpersons and members of the House. I, Siddhant Satpathy, along with my teammates Pragati Nagpal, Ayush Saraogi, and Anuj Naval, will be debating against the motion this House believes that the United States dollar will no longer be considered the reserve currency of the world. Let's first begin by understanding what it actually takes to be a reserve currency. For a currency to be held as the reserve currency by a central bank, it has to take into account both public and private sector requirements. For the private sector, there are primarily two factors. Firstly, the strength of the individual currency, as well as the strength of the economy backing the currency. And second, the impact of network externalities, which means understanding what is the dominant currency, which is preferred by majority of the market participants so as to lower transaction costs when dealing in international transactions. For the public sector, in order to be able to play its role as a reserve currency, a currency must be freely convertible for both current and capital account transactions of countries, relatively stable in terms of its purchasing power, and enjoying the confidence of market participants. The key term being liquidity here. Thus, reserve currency must be those which are used internationally for trade, transnational financial transactions, and saving purposes by a sufficiently large number of private agents and represents relatively stable purchasing power. They must be underpinned by deep financial markets that facilitate financial investment and risk hedging. Now, with this understanding in context, let us look at why the US dollar is still preferred as the world's reserve currency. The reserve status is based largely on the size and strength of the US economy and the dominance of the US financial markets. Despite large deficit spending, as mentioned by my credible opposition, trillions of dollars of debt, and the unbridled printing of US dollars, US Treasury securities still remain the safest store of money. The trust and the confidence that the world has in the ability of the United States to pay its debts have kept the dollar as the most redeemable currency for facilitating world commerce. Today, more than 61% of all foreign bank reserves are denominated in US dollars, according to the IMF. Many of these reserves are in cash or US bonds, such as US treasuries. Also, approximately 40% of the world's debt is denominated in dollars. Apart from volume and liquidity, if we look at even substituting the US dollar with perhaps the yuan or the yen or even gold, there is simply no match for the global dominance and reliance on the US dollar. Let me walk you through each of these scenarios as a potential global reserve currency and prove why yen or even gold, there is no match for the global dominance. Firstly, let's look at the yuan of China. As per a recent report in 2020 by Morgan Stanley, the yuan is expected to represent nearly 5 to 10% of the world's total foreign exchange reserve assets from the current 2% that it holds. This would mean that it would surpass the yen to become the world's third largest reserve currency after the US dollar and the euro. However, for all the talk of the yuan replacing the dollar as the world's reserve currency, it is worth remembering that China continues to maintain strong capital controls on any money that flows in and out of the country, which prevents the efficient functioning of liquid markets that should be accessible to the rest of the world. This limits any possibility of the yuan achieving the coveted reserve currency status, at least within mainland China. So the rest of the world is a far-fetched dream at this point. Coming to the yen, the looming Japanese debt crisis is the key underpinning here. With the Bank of Japan's massive asset purchases, the Central Bank of Japan owns almost 44% of the nation's debt, far outweighing the Fed or the European Central Bank's bond buying, which have distorted the markets. Negative interest rates have failed to overcome persistent deflation, dampening the appeal of Japanese assets. The yen slid as a proportion of global reserves after the Bank of Japan introduced qualitative and quantitative monetary easing in 2013. Though it has clawed back some market share, it still is insufficient. Most importantly, Japanese policymakers may resist anything that causes strong currency appreciation, preferring to keep their exporters, which is the backbone of its economy, competitive in the world markets. Lastly, coming to gold, though an efficient store of value and high on its intrinsic value versus the normal currency's extrinsic value, which is impacted by macroeconomic factors globally, gold scarcity removes a key central bank policy tool. Well, it's quite simple. If the central banks can't control the money supply, they can't respond to changes in aggregate demand. Adherence to the gold standard has been blamed for exacerbating deflation and causing the Great Depression. Most of the world's governments have abandoned the gold-based money systems over the past century to gain flexibility in managing economic difficulties. To quote Eddie van der Walt, In the modern world where money moves at the speed of light, sending shipments of gold to settle sovereign debt has truly become impractical. I would like to end my case with this line of thought. The deep and liquid US dollar markets are attractive to non-US entities because they provide borrowers and lenders access to a large set of counterparties. The preeminence of the US dollar as the global reserve currency and in trade invoicing further motivates its international use, and whilst the dollar's funding relative to the size of the global economy is currently well below its peak that it reached a decade ago, its share in international borrowing has risen again to reach levels that were last seen in the year 2000. It is clearly the dominant international funding currency. As per Michael Kraplin, head of G10 foreign exchange spot trading for America at the Barclays, the US isn't anywhere close to losing its reserve currency status given the depth of capital markets and overwhelming volume of US dollar denominated global transactions and financial instruments. Thank you.
Thank you, Siddhant. The judges must know that the speaker spoke for 6 minutes and 8 seconds and no POI was asked.
I have a POI. I have a POI.
Okay. Siddhant, Pritika has a POI. Would you like to answer that?
Sure. Yeah.
Yes, Pritika, go on.
So talking about the internationalization of Chinese yuan and the willingness of Reserve to add Chinese bonds to their portfolios, I think China has gained the trust. What do you have to say on this?
To be honest, yes, like I mentioned, even in my line of argument, that yes, the Chinese currency has appreciated and the Chinese economy is on its way back to a strong recovery. But the public market confidence is still quite low. Roughly about 50% of international transactions are still denominated in US dollars. China is not even 20% because the next closest currency denominated international transactions is the euro, which accounts for 20%. China is still about 2 to 3%. So I really don't see China really, dominating and taking over the kind of confidence, the market participant confidence. So yeah, that's all I have to say.
Thank you, Siddhant. Thank you, Pritika. Moving on to the second speaker of side proposition, Ujjwal Mahota.
Am I audible? Yeah.
Yes.
Okay, cool. So firstly, I'll completely agree to what speaker one from the proposition said, and I also agree with the definitions given by the speaker one of the proposition side. I'd like to state a fact that, like Pratika, like the speaker one, Pratika said some problems, but there are a few questions coming down. So why is dollar dominance slipping now? One long-term reason is the rise of the euro as an alternative reserve currency. A more recent factor is China's increasing desire to diversify its foreign exchange holding to reduce the vulnerability to shifts in US policy amid the trade war. But in the long term, the shrinking US shares of world economic output is the biggest threat to dollar status. In 1960, the US represented about 40% of the world's economy, but that has shrunk to less than a quarter now. This point must be noted. As poorer nations catch up to rising ones, they face pressure to diversify and hold less of their growing reserve stockpiles in the currency of one decreasingly important country. It's no coincidence that in 1980s, when the dollar dipped below half of gold reserves, were the time when it looked up as if the US might economically eclipsed by rising Europe and Japan. That didn't happen then, but this time it might. Economists have a hard time predicting the effects of shifts away from the dollar because this is to some extent uncharted territory. A theory says that American borrowers would be forced to pay higher interest rates, causing the US economy to suffer. Now, in order to acquire dollar reserves, foreigners essentially are forced to lend money to either US government or to the US companies. That demand for US assets can bid down the price of loans within the US. But former Federal Reserve Chair Ben Bernanke argues that the US no longer enjoys this so-called exorbitant privilege. Nothing that other countries' real interest rates are almost as low. Bernanke could be wrong. Those other countries' rate might be held down by their slow population growth, while the faster growth of US benefits from the reserve status. Instead, but the world already awash in capital. the extra effect of reserve status is probably not that much. In the end, a shift to a basket of world's currency might be the healthiest outcome. If the euro, yen, yuan, all the three biggest trading currencies were joined to the dollar as the international reserve currencies, it would mean a safer and more sustainable global economy, and it would enable the world's major income to compete on a more or less level playing field. By this, I would like to end my speech. Thank you.
Thank you, Ujjwal. The judges must know that the speaker spoke for 3 minutes and 20 seconds. Any POIs to the speaker? Okay, the judges must know no POIs were asked to the speaker. Moving on to the second speaker of side opposition.
Hello.
Yes, Siddhant.
Hi, this is Ayush. Sorry to interrupt. I raised my hand. I had a POI for the second speaker.
Okay, yes, you can ask your POI.
Hi. Hi, Ujjwal. As per your last statement, you mentioned that a currency basket of 3 currencies would be a viable solution. How do you defend the fact that it would increase the volatility, and any effect in any of these 3 countries will affect the whole world simultaneously, rather than if we go for only one country and the chances of crisis is less?
Ayush, right. Ayush, the point is that the 3 countries which I'm talking about is euro, dollar, and yuan, the Chinese currency. Over here, you can't expect a same kind of disaster happen to all the 3 biggest countries at a single point of time. Rather, if we focus on a single dollar, if there is a crisis or a blast, in the market of US, the economy would crash, which would lead to all the other factors which I just mentioned in my speech. So rather than focusing on a single currency, if we increase the basket, then what's the problem in that? Because in that particular manner, we'll have more power to be a part, and we'll suffer less. That's the main point. We'll suffer less because now only a dollar won't be a part of it, but the other 2 to 3 currencies would be a part of it.
Are you satisfied with the answer, Ayush?
Not exactly, but I don't think we can have a debate on this point.
Yeah, that's what you have your speech. You can answer. You can expect an answer that time. Moving on to you. It's all yours now.
Thank you. Can I begin? Hello?
Yes, please begin.
Yes, Pragati, please begin.
All right. First off, I would start by telling you all that there is a big misconception that needs to be cleared here. Dollar is not the only world's reserve currency. It's the major reserve currency of the world. Any currency can be held as a reserve currency. There are no laws about this, and it's up to each country to decide whether they want to hold it. Of course, nobody declared that each country has to hold the bulk of its foreign exchange reserves in USD. It's just the result of individual decisions of each country. As already mentioned, dollar accounts for 63% of the reserves, followed by euro, which is 20%, and then the suit follows. So why is USD the world's major reserve currency? Why have most countries elected to hold the bulk of their reserves in USD? To fulfill this role, a country has to have the following things in place. First is large liquid financial markets, which are capable of taking huge investments. Currently, there are at least $6.3 trillion in reserves held in US, and probably closer to 7.2 trillion in the future. Then there should be a reputation for safety and rule of law, so that the other countries are willing to invest billions and billions of dollars in that country's government securities. And then there is a willingness to run current account deficits indefinitely, since that's the counterpart of a financial account surplus. If you would have noticed, there is only there is only US that fits all these 3 criteria, and we do not see any other country volunteering to take its place anytime soon. What other countries' bond market could have taken half that amount? As far as we know, only Japan, and they have shown zero interest. In fact, significant negative interest in their currency play this role. By negative interest, I mean that they discourage people from doing this. The Chinese government bond market is also large and growing, but of course, China has an estimated $1 trillion or more in the US reserves. And where can it put that money besides US? On the contrary, most countries fight to prevent their currency from being held as a major reserve currency, since that causes the currency to appreciate, dampens growth, and causes unemployment. That's what all these currency wars are talking about. Let me tell you why. In order to accumulate foreign exchange reserves, central banks buy assets, mostly government bonds, denominated in the currencies of other countries. In this case, we have foreign central banks buying billions and billions of dollars worth of US government securities. This causes the US to run a financial account surplus. A financial account surplus here means that foreigners denominated assets than US based investors buying in foreign assets. If the US runs a financial account surplus, by definition, it has to run a current account deficit unless the government intervenes heavily. The current account is mostly made up of trade in goods and services. That's because money coming in has to equal the money going out. So the fact that USD is the world's major reserve currency is one of the main reasons why the country has taken a current account deficit for almost the last 30 years. This is actually also known as the Triffin dilemma, which was proposed by the economist called Robert Triffin, who realized that any country that dominated the world FX reserves would have a consistent current account deficit that would gradually undermine the value of that currency. If we even look at the debt scenario, almost 40% of the world's debt is issued in dollars. As a result, foreign banks need a lot of dollars to conduct business. This became evident even during the 2008 financial crisis. Non-American banks had $27 trillion in international liabilities denominated in foreign currencies. Of that, $18 trillion were in US dollars. The financial crisis made the dollar even more widely used. In 2018, we saw the banks of Germany, France, and Great Britain held more liabilities denominated in dollars than in their own currencies. To put it in simpler terms, if USD weren't the world's major reserve currency, probably its value would have fallen. US exports would have become more competitive, and more people in the US would have jobs making goods for exports. On the other hand, probably fewer people in China, Germany, and Mexico would have jobs making things for export to the US. Do you think that's a good thing or a bad thing? Probably your view would depend whether you work in a factory in the US or in China. So we can see that USD is not going to lose its position as the world's major reserve currency anytime soon for a variety of reasons. The simplest of which is that there is no possible alternative under the current monetary system. It is virtually inconceivable that it could lose its position as a reserve currency totally. And it might be a good thing for the US economy, or at least the average US worker, if it did not lose that position. If it did lose that position, as several people have already spoken about this in different debates, GBP used to be world's major reserve currency. It's now a relatively small part of global reserve. That's only 4.5%. Yet the life seems to be going okay in the Britain. That's all from my side. Thank you.
Thank you, Pragati. Any POIs?
Yes, I do have one.
Yes, Ujjwal, ask a POI.
Yeah, Pragati, as the first statement you stated, you said that the US is not only the reserve currency, etc., if I'm not wrong. So can you just clarify your stand? Because that's the only thing I was trying to state out to Ayush in his question. So can you just clarify your stand, what your stand is actually towards this particular topic?
What I wanted to mention is that US is a major reserve currency, and any currency could be a reserve currency, but there is a reason why other currencies are not able to contend for that position, for which I stated 3 other facts, which included having a large liquid financial market, which also included having a reputation for safety and law, and a willingness to run current account deficit. These are the 3 factors which other currencies are not able to fulfill the criteria for, and that's also the reason why USD is the sole reserve currency as of date.
Nikhilesh, can I get a follow up?
No, you cannot get a follow. Follow-ups aren't allowed.
Maybe
the third speaker can do it in his speech. Okay, so now the speakers must know that no questions will be asked to the third speaker and the fourth speaker. And the judges must know that the speaker spoke for 5 minutes and 31 seconds. Now on to the third speaker of side proposition, Yuvraj Singh.
Yeah, hi everyone. Am I audible?
Yes, Yuvraj.
Okay. So the fact that the global financial system runs on dollars and that the Fed is central to its operation, those things haven't changed and those facts haven't been underscored and reinforced in the early stage of the crisis. At the same time, I think what the crisis and those dollar-related facts have raised a renewed concern about the mismatch between dollar-centric international financial system on the other hand and a multipolar world on the other. That's an uncomfortable situation. The dollar still dominates currency reserves and transaction, but its power is weakening. In global trade, the US lags behind the Eurozone and China in overall volume of exports and imports. IMF data shows that. So it seems like a good time to review the leading alternatives to the dollar, even if none appears ready to knock it off at a spot just yet. As one of the teammates of the opponent said, that the strength of the economy or the factor what makes a currency as the world's reserve currency are the contributing factor to decide as in which currency should be the world's reserve currency. So does the opponent team mean that if any particular any particular country actually becomes strong in terms of their economical factor, or actually their currency is more liquid in nature, should that country's reserve currency should be declared as the world's reserve currency? Does the opposition want to mean that whenever any countries overtake the other in terms of the economic side, should it just be declared as the factor? Currency which lowers the transaction cost was another major factor stated out by the other speaker. So why not e-currency, as e-currency has always been known to reduce the transactional cost? The last decade or so has been concerned, grown significantly over the long-term health of the dollar. So do we see that the dollar is actually, growing healthy? As my opponent said, US economy is stronger, and that's why it should stay the reserve currency of the world. Let me make you aware about the exact situation, which will help you to understand that US is no more the same situation as it had when it was made the reserve currency. The dollar is in a weird place. On one hand, the US is arguably the strongest economy in the world, with its currency being used as the global reserve, essentially guaranteeing a bailout in case of an economic disaster. On the other hand, the US has legitimate competition for the first time since the Second World War in the form of China, and the trade war combined with excessive debt burden may finally be beginning to take its toll. As the second speaker from the opponent team said, no countries want their currency to become the world reserve currency, but the reality is different, as China wants that yuan should be the world's reserve currency. There are many other countries who have started adapting to change it just to remove USD as the reserve currency. Now let's look on bigger picture, as in how other countries are actually trying their best to make sure that USD will no longer be the world's reserve currency. There have been efforts by numerous countries led by China and Russia to dethrone the US dollar as the world's reserve currency. China has been reducing its exposure to the dollar for a long time, and both China as well as Russia have been stocking up on gold in recent times. Other countries are beginning to join the fray. Turkey, India, and Iran have begun to do a small amount of trading in other currency. In the early 20s, Pakistan joined China and Russia and decided to trade in the local currency as well. Pakistan and China have an ironclad trading agreement between both them just to have themselves in the form of CPEC. This trade agreement is quite fitting for the current economic situation, as Pakistan is a country that has heavily relied on US aid in the past, but it seems to gravitate more and more towards China with each passing day. So don't you guys think that actually countries like the other countries in the world are trying that US dollar should not be the world's reserve currency? And that is what actually the opponent team was trying to point out, that the other countries doesn't want that, but the situation is completely different in the reality. With the global financial crisis or GFC and the dramatic economic rise of China, there have been increasing calls to re-examine the dollar's role as a reserve currency. The poor performance of the US during the pandemic has renewed the debate. The dollar's dominance as a reserve currency has conferred the US with an extraordinary privilege. It allows it to borrow a large amount at low interest rates without the fear of reversal, and permits the country to monetize a significant portion of its debt without the fear of inflation. It is very unlikely that the US will have a balance of payment crisis so long as the dollar remains the world's reserve currency. So do you want that US should actually be stated as, the world's reserve currency? Was this the main reason that US dollar was actually told to be the world's reserve currency? It also imposes cost. The dollar's rules require that the Fed be the lender of the last resort, not only to the US, but also to the rest of the world, which is completely not being implemented in the present situation. And that's why the proposition team actually stand that US dollar should no longer be considered the world's reserve currency, and it should be changed. That's all, guys. Thank you from my side.
Thank you, Yuvraj. The judges must know that the speaker spoke for 4 minutes and 22 seconds. No POIs will be asked to the third and the fourth speaker. And now we move on to the third speaker of side opposition, Ayush Sarogi.
Hey, I'd be the third speaker. All right. Thank you for the opportunity. Now, I'd like to point out a couple of points that the team pitching for the motion pointed out when they were providing their statements. Prithika mentioned that US has been doing this for the political gains, and which is why it's not a very stable form of currency that we should consider. But at the same point, when Ujjwal mentioned that there's a rise of euro in terms of global exchange, we have been looking at a European Union crisis for a pretty long time now. So if your only point of argument is political instability, there's no connection between political instability and keeping your foreign exchange reserves of that particular currency. So I think both those points were contradictory, because if you are mentioning that geopolitical connections should be a reason of consideration for foreign exchanges, rise of euro does not make sense. Prithika also mentioned that your currency, we should probably move to a decentralized system. Well, that sounds very utopian, and probably that is the trend from 2019, because we are getting more, world economies are getting more protectionist. They're trying to conserve whatever they produce within their own economies. But when you go for world trade, you need to peg your currency to something, right? And if you're saying that you do not want a central currency, you will have to peg it to something that is available in abundance throughout your country as well as the other person who you're trading with. Now, the general function that used to happen was gold. Now, if you look at Bretton Woods system, it used to work on a similar thing, that US dollar was pegged against gold, and then it was traded internationally. The issue with pegging anything to gold is that your monetary policy is always going to fail. This can also be explained through a very important Keynesian concept that fiscal policy alone cannot maintain your economy. You need fiscal as well as monetary policy. And it is also proven in the impossible trinity. The impossible trinity says that free capital flow, fixed exchange rate, as well as sovereign monetary policy cannot happen together. Now, it's a very important Keynesian cornerstone. If you want to peg your currency to something some metal, for example, gold, there's bound to be inflation, and which is why Bretton Woods system failed in 1965, which is why we right now are still adopting to a floating currency exchange system, right? We are not into a fixed currency exchange system. I'm assuming, Prithika also mentioned about IMF stating financial crisis throughout the world because of pegging to US dollars. I'd just like to throw around stats here that the global debt this year is 277 trillion. IMF is saying that we are looking at 365% debt to GDP ratio of the whole world. So if you're saying there's a financial crisis only in US, it's wrong, because there's a financial crisis throughout the world. You cannot corner US alone for that particular fact, because that's a partial information. Throughout the world, we are facing financial crisis. Now, there was one more interesting concept about e-currency. I'd like to bring up a couple of points over there. Prithika clearly mentioned that the e-currency is developed by China. We do not have any information about the issuing authority, the regulatory body, or the volatility of this particular e-currency. So again, there is no pegging of any substance over this e-currency. How do you know the exact worth of this particular e-currency that's being traded? Of course, you talk about security in trade, the money going from here to there, but you haven't discussed about whether the e-currency is centralized or decentralized. If it's centralized, who is taking under the control of the regulation of this particular e-currency? Now, one particular point I'd like to counter of Ujjwal. Ujjwal mentioned that we should bring up the three major exchange currency, which are the euro, the yen, and the yuan. But then again, in the POI, I think he changed yen to USD, euro, USD, and yuan. So that confused me a little bit. But again, correcting there, euro, yen, and yuan, I'd like to say yuan is 7th on the list. Yuan is not the top 3 traded currency. So if you're looking to diversify your portfolio, actually a lot of countries have been diversifying their portfolios. But yuan is not a very feasible option, because whenever you're putting up a reserve currency, you need to keep in mind that the country you're trading with also has that particular currency, so that when you trade, there's a minimum loss in terms of exchange rates, which is why USD is kept as the primal reserve currency. So I'd like to rest my case here. Thank you.
Thank you, Amit, I guess. You're Amit, right? Anil or Amit? Thank you, Speaker. The judges must note that the Speaker spoke for 4 minutes and 54 seconds. No POIs will be asked. And now we have the fourth speaker from side opposition, Ayush Sarogi.
Good evening to all the members present in the House. I would like to start off with 3 points that Yuvraj mentioned in his case. The first one, he mentioned that we have declared US as the reserve currency. There's nobody who has declared US as the US currency as the reserve currency. It is chosen by consensus. It is chosen on trust. The second point, he mentioned that nobody wants to become the reserve currency of the world. It's not the case. Every country wants their currency to become the reserve currency, but it's not happening because US has been dominating it since World War I. And the third point that he mentioned was poor performance during the pandemic. I think all the countries in the world have been suffering due to the pandemic. Although that data shows something else for the US. As we know, just at the onset of the pandemic during March, US was the most valued currency, and we saw a lot of inflow towards US currencies, and that's why the treasury yield is at multi-year lows, because of a lot of investments were attracted towards US, right? And then I would like to bring up the point of e-currency of China. So any e-currency, the nearest e-currency substitute that we have in the world right now is cryptocurrency, and we all know how volatile it is. It has dropped from $20,000 to $3,000 at this stage. Although there is no other nearest substitute to compare an e-currency, but although if we have to look at an e-currency that is developed by China, it has to be pegged to something. Now, what can it be pegged to? Gold, we have already seen that gold doesn't work because of the supply issues and the inflation that it causes. Secondly, would it be pegged to yuan? We can't do that because of the capital policies of the Chinese government, and we have also seen how China opts for devaluation of its currency to promote its export. So you can't have a devalued currency as the reserve currency. The third option becomes dollar. So if you have to peg your e-currency towards dollar, might as well have the main currency as US currency. Now, these are I would want to present one more data point. If US was not the preferred currency of the world, reserve currency of the world, why would there be 50% global contracts stated in US dollars when the country only accounts for 12% of the total trade, right? And now these are all the numbers. We also need to understand that all of this works on a trust-based system. Right now, everybody trusts US economy, and that's why it is considered as the reserve currency. Now, I also agree, and our team also agrees that in today's world, nobody can be blind trusted, right? But if you have to choose choose from the worst, why not choose the best, which is the US currency, right? And that's how we would like to rest our case. Thank you.
Thank you, Ayush. The judges must know that Ayush fell short of time. He spoke for 2 minutes and 52 seconds. Now we have the fourth speaker from side proposition.
Hello again. So I would like to start my speech by clearing some points which the speaker third and speaker fourth of the opposition mentioned. Thank you for stating about the political gain part. But the thing is that I also mentioned that US starts putting tariffs and on the people they don't like, and secondly they enforce them through the banks, through the rift system. Therefore, the countries don't want to be under the thumb of US when it comes to finance. I did not mention anything related to political gain for the USD, as in why it should not be considered as the reserve currency of the world. Secondly, the way exchange rate is determined is not only through the pegging system, but through the floating rates that are determined by the market forces of demand and supply. Therefore, if the demand for the currency is high, the value will increase and vice versa. Also, I think there's a difference of opinion in the third and the fourth speaker. The third speaker said that they want an alternative like gold, whereas the fourth speaker opposes the use of gold. And I believe that gold should not be, gold is not backed up by any country since we have a system of fiat currency recently. Now, looking at the bigger picture, the inflation rates in US has recently picked up, and the US economy has started to rebound from the depths of the crisis. The bigger issue is that the FED officials have signaled that they will likely alter their policy to tolerate the annual inflation that tops their 2% target for a period of time to achieve 2% price increases over the term. Higher inflation erodes the value of the dollar and further pushes down US interest rates on the inflation adjusted basis. The US response to the pandemic has swelled an already large budget deficit. Congress has approved $2.5 trillion in stimulus measures while taking in less revenue because of the coronavirus induced recession, widening the budget deficit to $2.8 trillion during the first 10 months of the fiscal 2020. Big deficits further stoke inflation worries and could eventually discourage foreign investors from buying treasuries. And we all know that the trust in a reserve currency comes only if the investors buy the treasuries. If the dollar loses its status as a reserve currency, it would be a major shift in the global economy, the likes of which only happens once or twice a century. What happens then is anybody's guess. But if handled well, the loss of the reserve currency would be healthy for the US and the world. Indeed, given the US's waning economic dominance, the consequences of keeping the dollar as the sole reserve currency could be worse. Thus, I firmly believe that the dollar's hegemony is likely to end soon and the currency tectonic plates have already begun to shift. Thank you.
Thank you, Pratika, and thank you all the participants for participating in the debates. Thank you, judges. And for the note of the participants, the results will be announced soon, and I'm now handing it over to Professor Soini.
Thank you so much, Nikhilesh, and thank you so much to both the teams for presenting their cases so eloquently. I would request all the three judges to email me the score sheets, and the next debate will begin shortly after 10 minutes or so. We are just waiting to get the score sheets from the judges, post which we will announce the winners for this round. So if I can request everyone to just hold on while we get the results from the judges, tabulate the results, and we will get back to you in 5 minutes or so with the results for this round. Just while we're tabulating the results, the team members from team 1 and team 6 can stay on and watch the next debate, which will begin from 3:15. And as I said, only after the next debate, will we announce the final results. The judges, after sending me the score sheets, can also give a quick feedback round if they so feel necessary. Please note that we will start with the next debate round exactly in 9 minutes. Okay, so as I said before, Team 1 and Team 6 can stay for the next debate. You're welcome to stay and listen to the debate, the next debate, round B of the debate that's going to start shortly. Please note that we are facing some issues, so it may take us some time to tabulate the results. Therefore, the results of this round and the next round will be announced together after both the debate rounds are over. So we'll do that. If you want to stay, you're welcome to stay. Otherwise, please join us back at 4 o'clock for the valedictory session of the debate session. Okay, I have received the results from Professor Ruchira and Professor Wenxuan. We're just waiting on.
Just 2 minutes. I'll just send it. I'm just working.
Sure, no worries. You can take your time. Since we have about 5 minutes or so before the next teams come in, since we don't know the final result, if there are any quick broad points the judges can make to the participants on what this topic meant and what could have been perhaps done better. Maybe we'll start with Professor Ruchira.
Thanks, Shohini. I just wanted to say this was a really good round, actually. Very well researched, very nicely put together. About the historic circumstances that led to the institution of the dollar as the global reserve currency. One of the mistakes that we make, and especially in the word is hardcore, I never like that word, but so-called hardcore economics departments, is that we forget history and we forget that setting up something as an institution is not just something that happens because of the free negotiation of different parties or by some sort of invisible hand, but usually because of certain historic processes. With regard to the institution of the dollar as the global currency, it actually arose because of specific historical circumstances that happened in the Bretton Woods Conference. One of the teammates mentioned John Maynard Keynes. So, if you want to read that book, John Maynard Keynes was actually at the Bretton Woods Conference. He was a big celebrity, and this happened in Bretton Woods, just north of Washington, D.C. So American press was completely gaga over Mr. Keynes. But Mr. Keynes did not fare very well as opposed to Harry White, who was the advisor to the US president at the time. And in fact, John Maynard Keynes was not able to prevail. His argument was that the world reserve currency should be what he called SDR, or special drawing rights, which was essentially some sort of an international standard. However, because the United States had a particular position in the global hegemony at the time, they had helped the Allies win the Second World War. They had provided refuge to thousands of refugees. They had the Marshall Plan was underway. So at that time, the US was in a position to push the agenda that the dollar should be the global reserve currency. It's not a decision that happened by consensus or because the US is, the biggest trader, or because of some sort of invisible hand negotiation. This was an actual historical process which was actually mandated, and there were historical and political reasons in addition to economic reasons behind this institution. Thank you.
Thank you, Ruchira. Professor Wenxuan and Professor Arun, if you could give us a very brief, if you want to add something, just to of the time, we have about 2-3 minutes or so before the next debate round starts. If you want to give a quick feedback.
I think I'll let it pass now.
Okay. Sure. Professor Wenxuan, do you have any comments to make?
I think it's very impressive on both teams. It's actually a bit struggling to grade them. My question, I have a question when I listen to them. So what's the topic? The topic is US dollars is no longer the major dominant currency, or is no longer the currency. I think that in the debate, the teams maybe sometimes misplace this. So this is just my impression. Okay.
Thank you. Thank you. A big thank you to the judges. So we are now going to wait for teams 4 and 3 to join us. Teams 1 and 6, you can actually follow the debate on YouTube as well. The Jindal YouTube channel is telecasting this live. You can also join us from there if you so wish. Okay, may I request the student moderator for this round, Mugdha Goyal, to please invite the teams 4 and 3 to the debate round. Okay, I see that they have started to join. So for the purposes of the teams who have just joined us, we have 3 judges with us today for round B of the student finals debate. We are joined by Professor Ruchira Sen, Professor Wenjuan Zhang, and Professor Arun Kumar. So for this round, Team 4 from TA Pi Management Institute, Manipal, will be for the motion. This team consists of Achal, Ethirajan, Akash, and Varun. I hope everybody is here. Yes, I think everybody is here. The team which will go against is Team 3 from MIT WPU Pune. This team consists of Shrishti, Toshika, and Bhuvi. Shrishti, Toshika, Bhuvi, are you all here? Is
Yes,
Bhuvi?
ma'am. Yes, ma'am.
Okay, perfect. Is the student moderator Mugdha Goyal here?
Yes, ma'am, I'm present.
Okay, perfect. With that, I hand it over to the student moderator.
Yes, ma'am. So good afternoon, everybody. So now we begin the round 2 for the debate. So first of all, I'd like to invite the first speaker from proposition to come present their case.
Hi, am I audible?
Yes, you are.
Hi, I'm Akash. I'm from TAPI Management Institute, and we will be speaking for the topic. So they said that the sun shall never set on the British Empire, but it did. They said that the nations shall always need a king, that monarchy is the only way, but democracy came all the same. And it is extremely successful. It is our fear of change that compels us to stick to the dominance of the old. It is our fear of the new that makes us accept the current in all its flaws. At times, we are so afraid of change, we fail to see the good it will reap. And the current dominator knows this. With all their might, they make it seem to the people that their way is the one true way, that the next is flawed and impractical. They designed the web in such a way that we look at only the cons. They make it laughable to us, a utopian dream maybe. But if you look at history, our civilization has become great, trying to make the world that utopian dream. We have not reached it, not even close. But if we look back, we have come so far. We have overcame so much. This is the thing with the United States of America. They want to make the world bow down to their might. They want to make the world fall back onto them and make the world believe that their way is the one true way. And they do a pretty good job at it, with all their intricate networks, with all their propaganda, with all their soft power. Its true power does not come from its trillions of dollars on defense budget, not from the thousands of nuclear warheads in its arsenals, but from the economic dependency of the world it has made on itself. And with this, it exerts influence according to its wish. With this, it controls the world. You might think I'm just saying big words, but it's important to understand how the powerful stay in power. America shows us the beauty of freedom, the beauty of globalization, of prosperity, but in the same time, it changed the world. Let's ask ourselves this. Can we have true globalization when we are bound to one country? Can the nations of the world be truly prosperous if it relies on one economy? Let's ask ourselves this. Is it wise to be dependent on just one nation? Are we prepared to take the fall if America falls? True globalization has to have a strong foundation, and that does not happen if the foundation is one country. Change is fearful. Change is uncertain, but change is a constant. The current global pandemic is a living embodiment of that. It's a thing to think. Do we really fear that the new would be bad, or do we really fear that the temporary inconvenience it will bring? I now ask my teammate Achal to elaborate more why the US dollar as a reserve currency is toxic.
Thank you so much. Yeah.
Is there any POI for the speaker one? Okay, since it's not there, so I just want to inform the judges that the speaker took 2 minutes and 52 seconds. Now, may I call upon the first speaker from the opposition?
Excuse me, Mugdha Goyal. We actually had a POI for the first session. Movi Singh would like to ask him a few things.
Oh, okay, then please do.
Okay, yeah, due to pandemic, you said, right? So because of pandemic, the value of every currency is changing. The value is falling down. And I think the only constant currency right now is of China and of USA. So what do you want to say that if we are about to change the reserve currency, how would you do that in this time? How would you do it in this period?
The point on the pandemic was to shed light on the fact that no matter how absurd change sounds, sometimes it is necessary. Sometimes we have to accept the change. And sometimes it is something we need to go with. And regarding how you are saying we would change, so this is exactly what the US does, or any powerful entity does. It shoots down ideas before it even takes off, pointing at the cons. If you ask me to give an absolute alternative, so that you may point out the negative sides, I would not. That is something for the brightest minds of the world to decide. But understand this.
But don't you think it will take a lot of years to actually change, because due to pandemic we are slowed down as a country?
Yes, and we are having a global paradigm shift across domains, and this is the time to change, right? Like if take for example this, like if the US dollar as a reserve currency was something as an absolute truth, something like the sun rising in the east and setting in the west, then it wouldn't be something of a question. We wouldn't be having this debate, right? Since people are having a problem with this, that's why we're having this debate. That's why certain power corridors across the world are like questioning this thing. And yes, we are looking at alternatives, and the people succeeding me in this debate would shed more light on those directions.
Okay, thank you.
Okay, now I call upon the first speaker from the opposition to present their case.
Thank you, ma'am. Am I audible?
Yeah, you are.
Greetings to everyone present here. This is Toshika Pathak,
Shrishti Kumari,
and Bhuvi Singh. Presenting our views on US dollar should be considered as reserve currency of the world. The first US dollar, as it is known today, was printed in 1914 upon the creation of the Federal Reserve Bank. During World War II, the US supplied the Allies and got paid in gold, propelling the US to the largest holder of gold. After the war, countries linked their currencies to the dollar, which was linked to the gold. The gold standard ended, but the dollar's reserve status remains same. Today, more than 61% of all foreign bank reserves are denominated in US dollars, and nearly 40% of the world's debt is in dollars. The US dollar was officially crowned the world's reserve currency and was backed by the world's largest gold reserves. Instead of gold reserves, other countries accumulated reserves of US dollars. Despite trillions of dollars in foreign debt and continuous large deficit spending, the United States still holds global trust and confidence in its ability to pay its obligations. For this reason, the US dollar remains the strongest world currency. It may continue to be the top global currency in the years to come. The dollar's current #1 status is under contention though. Countries such as China and Russia feel a new one world currency one not backed by any one nation, is overdue in this increasingly integrated global economy. Last year, global reserve managers cut their US currency holdings as percentage of their total stockpiles close to the lowest level since 1990s, International Monetary Fund data show. That may have helped fuel the rush into dollars that occurred as the coronavirus pandemic spread in March, so the next IMF release could reveal a rebound in dollar holdings. But the severity of the dash into the US currency helped drive up volatility in currencies such as Australian dollar, Korean won, and Mexican peso, with the Federal Reserve waited 4 days after taking emergency liquidity actions on March 15 to extend swap lines to those nations. While it seems hard to imagine the dollar losing its place as the world's reserve currency, a glance at history tells us it's far from impossible. The Dutch guilder filled the role in the 18th and 17th century before the Spanish dollar took over, followed by the pound sterling from 1860 until at least 1914. Each case, the nation's domination of global trade and finance was key to the currency status, though central banks and regulatory maneuvers played a role. So it seems like a good time to review the leading alternatives to the dollar, even if none appears ready to knock it off its perch just yet. The fact that global financial system runs on dollar and that the Fed is central to its operation, those things haven't changed and those facts have been underscored and reinforced in the early stages of crisis, says Barry Eichengreen, a professor of economics and political science at the University of California at Berkeley. Thank you. Over to you, Shrishti.
Okay, so this was the first speaker, right? So now first we'll ask if there's a POI.
May I go?
Yeah.
Okay. Hi, the one who spoke now. I'm not able to recollect your name. Sorry for that. I have many questions for you, first of all, but my foremost question is, you just told that 61% of reserve currency is still with US dollars. I might want to ask you one question, which was given by International Monetary Fund, saying that Chinese currency, which is called as REN, is going to take up to 10% of what it is occupying now by 2030. And Michael Kruger, who is a head of G10, he himself does the spot trading for America. He says this: US dollar currency is under threat because of the policy measures taken by the former President Donald Trump in this pandemic. And you are saying that 61% is still with the US, so it doesn't change. But everybody is saying that it's going to change. And even many big four companies are saying that euro might be the national currency of euros, might be the reserve currency in the upcoming future. It is not very far. They have just said that after pandemic, and they have already planned it from 2008. What is your take on this? And you're saying that you're so confident that we are not going to have it.
Okay, would the speaker like to answer?
Yeah, ma'am. Actually, can I hear the question again, because I got just disconnected?
Yeah, Toshika. Now I got your name first, and I agree that my question was so elaborate. I'll be very precise. You said that 61% of US dollar reserve is there with the global bank. Am I right? World current reserves. Now what I'm asking you is, International Monetary Fund has said that Chinese currency is as of now 2% of the global reserve currency. It will take to 10% within 10 years. That is 2030. Yeah. How do you still believe that just because that 61% is now, and already the US economy has hit a low rate of from 69% to 62% when it comes to the reserve currency in 2020, and it's going to lower now. How are you so sure that just because that number is so positive, it's going to be ruling all over the world?
It may rule all over the world, so let's just be positive. As you said that it is, you're saying that it is, I said very accurately that it's 61%, and it will be because it values more. So let's be just positive, and who knows the future?
Sorry, I'll be more accurate. It is 61%. Let it be 61%. I'm asking.
Can I answer this?
Yeah, I have a follow-up question. You can answer that after.
No, I'm sorry, you can't ask a follow-up question right now.
Yeah, you can answer the existing question because there was no answer at all. Yes, Bhuvi Singh, you can try.
Yeah, okay. First of all, do you actually trust China that you want yen to be the currency? Like,
I
can
don't
you
want yen to be the reserve currency, ma'am.
I'm sorry, Ethirajan, you cannot interrupt in the middle. So
Yeah,
the speaker shall
okay.
answer.
And secondly, after everything, when we're talking about the pandemic, after everything that has been going around the world, we know the fluctuation in each of and every currency that has been happening. Only two currencies that has been remained constant are Chinese currency and USD. Okay, even euro, that has been the second most powerful one, is actually falling and is fluctuating with high numbers. The stock of euros is also very fluctuating right now. Do you actually feel that when we are talking about changing the value, changing the world currency, to be precise, do you actually feel that there should be a currency that is fluctuating very often? Do you think that that would be right for the world?
Can I answer this question, Mugdha?
No, sorry. Now I just want to inform the judges that the speaker took 3 minutes and 20 seconds. And now I would like to proceed with the debate and call the second speaker from the proposition to continue their stand.
Thank you so much, my dear friends Akash, Ethirajan, and Bhuvi, for highlighting such crucial points. Great leaders do not set out to be a leader. They set out to make a difference. It's never about the role. It's always about the goal. Before you are a leader, success is all about growing yourself. But when you become a leader, success is all about growing others. A very warm good afternoon to all around present here. My name is Achal Jain, representing TA Pi Management Institute. Now, before shooting my points, I would like to request you to focus and imagine my words. Since I want you to stop thinking in terms of US dollar, I will use an imaginary arbit unit of currency, Trump coin maybe. Assume Trump coin is a rock found only in Trump land. It is useless for any real purposes, but only Trump has access to it. Also, it is unlimited. So Iran sends petroleum oil worth 100 Trump coin to India. India in return wants to send pharmaceuticals worth 100 Trump coins to Iran. But Iran only needs pharmaceuticals worth 40 Trump coins. So they ask for something else worth 60 Trump coins. India tells Iran, I don't have anything else to offer, which you might find useful. So Iran says, give me something which other countries might want, like textiles. During this exercise, it is very hard to find something which everyone wants and some things which are perishable. So Iran asks for 60 Trump coins instead. But India does not have Trump coins either. So they go to Trump to ask for Trump coin. Trump is someone who can mint as many Trump coins as he wants. So giving someone Trump coins do not cost anything to Trump. But for giving 60 Trump coins to India, Trump asked for mangoes worth 60 Trump coins. Now Iran has 60 Trump coins, which it can exchange with any other country for goods and services. Now at the end of this transaction, Iran gained 40 Trump coins worth of pharmaceuticals, lost 100 Trump coins worth of gold, oil, gained 60 Trump coins. India gained 100 Trump coins worth of oil, lost 40 Trump coins worth of pharmaceuticals, lost 60 Trump coins worth of mangoes. But now, even Trump gained 60 Trump coin worth of mangoes, and at the cost of what? Nothing. He lost nothing at all. Since Trump can print any amount of Trump coins. Now the question arises, why does Iran want Trump coin? Because all other countries agree that in return for Trump coin, they can provide goods and services. Now, why does everybody agree to provide goods and services for a Trump coin? Because Trump has promised them that whenever they want, they can give the Trump coin back to Trump, and in return, Trump will give them something real, think gold. And why does everyone believe Trump? Because Trump has not defaulted yet. Seriously. Now. But what if Trump does not have gold worth 60 Trump coins when Iran come asking for it? Trump will refuse and ask Iran to give the Trump coin to someone else who will. But the cycle has to end somewhere, right? Someone will ask Trump to give something real in return for those 60 Trump coins, right? That is the day Trump will be concerned. Trump coins will be worthless, worth very little of what they were worth. And everyone who hold Trump coins would become poor, as the Trump coins they hold are worthless now. Now let me remind you, Trump coins is just as worthless as US dollar. So you might as well think of US dollar as Trump coin and the US as Trump. I hope you understand the story. Now imagine, what if there is a financial crisis in the US? Don't you think it will have a strong impact on other countries? Since everyone has some investment in US dollar, if a financial crisis hits the US, the whole country would likely be affected. For example, when a financial crisis like the 2008 subprime meltdown hit the world, short-term interest rates rose and affected a lot of companies and businesses and other countries because they were unable to borrow US dollar cheaply to do business. The disadvantage of US dollar as a reserve currency currently is that while it is still has a de facto commodity backing the form of oil, which has been gradually eroding its importance since 1985, that backing is in serious jeopardy of disappearing in the next decade or so. Let me tell you, when the US loses its de facto commodity backing, it will officially be nothing more than a fiat currency backed by a full faith and credit of a spendthrift country that seems hell-bent on bankrupting itself through the foreign war or covert operation after another. Much like God creating light out of nothing, the US government creates dollar out of nothing. It is just a matter of printing more. So let me throw some light on the darker side of this shining moon, is that the US could conceivably print trillions more and devalue the currency significantly if you are using the dollar as a reserve. And that happens, that you would lose a large amount of purchasing power right then and right there. And we educated people who are future of this world, I cannot let that happen. I request all people to think of Zimbabwe first before shooting your arguments on us or supporting the US dollar. I believe we are intelligent enough to imagine or forecast the day if the US government collapses. Trust me, let it be. Do not trust me. I trust your intelligence. I have this faith on you that you are capable enough to see the reality that if the US government collapses, you'll have just a huge pile of paper. That's it. Thank you.
Okay, thank you. So is there any POI for the proposition? Okay, if it is not there, I want to let the speakers know that the speaker took 5 minutes and 22 seconds. And now may I call upon the second speaker from the opposition to come present the case.
Am I audible?
Yes, you are.
So very warm afternoon to everyone present here. It's really glad to see the other members out there. Also adding to what Toshika Pathak said, in today's world, the 80% of world trade take place in dollars, and about 39% of the world loan are given in US dollar, and 65% of dollar supply is used outside the US states. So I guess these facts are pretty evident to know that US dollar has more circulation in the market. It is surprising to see that most trading countries of the world accept payment in dollar only. That's why foreign banks and companies and countries need dollars to participate in international trade. Currently, there are 189 members in the IMF. And as per the rule of the IMF, every member country has to deposit certain percentage of their quota in US dollars, which ultimately increases the demand for dollar internationally. Foreign exchange reserves in central banks around the world account for 64% of the US dollar. America is the world's biggest economy, due to which it lends many poorer countries in US dollar and receives the repayment in the same currency. That is why the demand of dollar in the international market exists throughout the year. See, everyone knows that USD is the most common and most popular currency, and after which the euro and yen comes. And global currency in the reserve currency is one of that is accepted for trade throughout the world. It makes up around 60% of all known central bank foreign exchange reserves. The relative strength of the US economy supports the value of the dollar. It is the reason that the dollar is most powerful currency. Money is gold and nothing else. Quoted by Mr. John Piper Morgan, testified to the US House of Representatives Bank and Currency Committee. The reserve currency can be used in international transactions, international investments, and all aspects of the global economy. as a result of the Bretton Woods Agreement created in 1944, conference of all the World War II elite nations. The US dollar was backed by the world's largest gold reserves. Instead of gold reserves, other countries accumulated reserves of US dollars. Now, US dollar continued to hold a dominant position in global reserve currency. In spite of growing uncertainty regarding its stability, the money markets of USD denominated financial instruments still represent the largest size, depth, and liquidity compared to other major currencies, including the euro. Well, this is also the reason why other currencies such as the Chinese renminbi or any new global currency, as one of my person said, the Trump coin would be introduced, would still take a long way to go in challenging the dominance of the US dollar. Let's talk about Indian rupees. Yes, the amount of years rupees would take to hold a position of global reserve currency seems like a lot. I can't even calculate. So can you? Well, I would like to end up by a quote said by Michelle Basley Johnson. No matter how tiny you look, you can lead huge men if you have what huge men don't have. And over here, it's the other currency which does not have the potential like the USD to hold such position. Thank you, and I'll rest my case here.
Okay, so the opposition proposition can ask a question.
May I?
Yeah, sure.
Okay. Again, since I think Srishti it was. Okay. My question is, you said that some point which was proposed by our own member, it was an example actually. If that is proposed, it was a rhetorical statement. You said that it will take a long way. I repeat the statement. It will take a long way to be the reserve point. Am I right? And are you speaking for my team or your team? That's my question.
No, sir. I repeat my point once again. It would take a long way to go in challenging the dominance of the US dollar. It's still not in the competition.
Let me repeat the question here. A point, Trump point, is an example of a US dollar which is proposed by the US will be able to challenge the existing US dollar's dominance will take a long way, which means that it is weak, right? Do you understand my question?
Yeah, I actually understood your question. And all I would like to say, if anything new is introduced except the US dollar, that would actually take a long way and won't really come up to the point where US dollar is right now.
Mugdha, if you allow me, can I?
No, I'm sorry. I'm sorry, only one POI.
Yeah, sure.
That's it. Because my question was that.
So if Srishti has given her answer, so I'll let the judges know that she took 3 minutes and 45 seconds. And now I'd like to call upon the third speaker from the proposition to come.
Good evening to one and all present here. I'm acutely scared that my worthy opponents might have misguided you by saying that US dollars can still be the reserve currency. I'm here to argue that US dollars can no longer be considered as reserve currency and take this opportunity to educate my worthy, witty, and wonderful opponents on how dollar is losing its 100-year-old strength in world economy. The United States Gold Standard Act of 1900 established the modern dollar as the US currency with a direct exchange value of 1.672 grams of gold. Yeah, this is where everything started. When two world wars severely impacted economies in Europe and Asia, European governments borrowed from US to pay for war efforts and repay the country in gold. Now imagine you have a fight with your neighbor who has been a friend to you for many years. Now suddenly you cannot borrow anything from him and ask for any help. So you start borrowing from your another rich neighbor friend. I repeat, rich neighbor friend to replenish your resources. Ostensibly, the fight is not going to last, as we all know that time is the ultimate decider. And suddenly you want to go back to your old friend, old neighbor friend, who is well known to you and very loyal to you. Will you still be considering your temporary rich friend as he has misbehaved so much and lost off all those perks as a weak coronavirus response, long-term persistence in implementing quantitative easing at ultra-low interest rates, which drive to encourage higher inflation, all conspiring to threaten the French established hegemonic influence around the world? If you say yes to this question, you might also say yes to the statement that coronavirus is a hoax. Goldman Sachs, for instance, issued a stark warning that dollar is in serious danger of losing its reserve currency status because recently there was a massive monetary injections of $7 trillion into US economy. Look at your temporary friend. He has not learned from the 2008 financial crisis, and now he mishandled the pandemic crisis too. Do you still love him? I think yes, because you still love him. So let me throw some more light on this to save you from saying that US dollars is my favorite food. In a recent war game exercise conducted by Harvard Kennedy School, digital ren, the Chinese official currency, easily bet the dollar, which was about to buy nuclear weapons in North Korea. The US dollar index, which measures the performance of dollar against a basket of other currencies, including euro, Japanese yen, British pound, Canadian dollar, Swiss franc, has trended significantly downward since June and even recently hit a 27-month low. JP Morgan Chase has voiced similar concerns, noting that euro is being viewed as increasingly favorable substitute. The European Union's new 750 billion euros recovery fund is giving investors more confidence in euro as an alternative. According to IMF, the dollar share has declined from 64% to 60% in 2020, and Chinese currency has risen from 5 to 10%, and it will be rising, it seems. Oh my God, I feel pity for your friend, the so-called rich friend now. So am I going to propose euros, ren, rupee or central reserve? Certainly not. Even central bank is not interested in doing that because they already have a plan from 2013 to replace dollar with cryptocurrencies like blockchain and Ethereum. Folks who were questioning us, do you believe China? Do you want to propose something? I am proposing now. What are all the benefits if you have digital currencies as currency reserves? Do you feel the pain when you end up paying extra money in a transaction when you're doing with the international customers? Yes, if cryptocurrencies is there, you cannot pay, you will not pay, you will have a low transaction fees. The biggest problem in our country is inflation rate. If there is blockchain technologies and digital currencies, there will be no inflation rate. The point of having digital currencies is to make it easier for international customers to do business with us. In this pandemic situation, the government is making so many measures to get foreign direct investments, be it China or be it US. Promote our own goods to foreign countries, Atmanirbhar Bharat and such things. Why is our government doing these things? They are not afraid of change. If you fear change now, sorry, we will not survive this pandemic. I believe in China, I believe in India, I believe in US, I believe in everything. But more than that, I believe in cryptocurrencies. Thank you.
Thank you, Ethirajan. So judges, speaker 3 took 4 minutes and 34 seconds. And now I'd like to call upon the third speaker from the opposition. And you're not allowed to ask any POIs yet now. So the third speaker from the opposition can take over now. Thank you.
Thank you so much. Just like my fellow members said, I would like to put a light on more of the things. I have so many POIs for Ethirajan, but it's so sad that I cannot ask. First of all, when we talk about US dollar, then again, in 1944, due to Bretton Woods Agreement, USD officially was crowned as the world's reserve currency. We all know that, and I think sab bol rahe hai baat. I'm sorry, everybody's saying this. Now, when we talk about why we have this, because the world's largest gold reserve was backed up by US. Okay. Now coming to the present times, the trust, the confidence, and that the world has in the ability for US to pay its debts has kept the dollar as the most redeemable currency for facilitating the world commerce. Now, Anshul, I guess you said that why do we trust USA so much, right? In your speech, you were saying, what if USA was not able to give this money? Now, when we're talking about trust, this was actually gained when US lent money to the British, to the Great Britain. The Britain
who has colonized so many countries, was actually ruling the world. They had to take money from US after World War I when they were practically bankrupt. Ethirajan has said this point. And this was not it. In World War II also, USA supplied large quantities of weaponries, I think goods and many other stuff to other countries. And in return, they took the gold. The payment was done in gold, which made USA have the majority of the world's gold with them. I think my teammate Toshika has said how much. And now instead of having gold reserve, when every country realized that USA has so many golds, instead of keeping their own gold reserve, what they did was they started keeping USD paper money. Now, when you're keeping USD paper money, for them, it was easy to save and it was less hassle. And if you're not okay with like theory and you feel like this is too much history, we live in a pandemic. Now, let's talk about numbers. When we're talking about numbers, then in 2018, I am going pre-corona time. I'm not talking about corona. Okay, let's just keep that out right now. When we're talking about 2018, USA had 1.671 billion USD in circulation. That is more than any other currency in the world. Okay. And now when we talk about foreign exchange, about 90% of the world of the forex trading involves USD. When you are about to change the currency, the world currency, you have to actually change this 90% into some other. Do you know what fluctuation will this cause? Then 40% of the world's debt is in USD, and foreign banks need to keep their dollars to conduct this business. When we're taking loan from the international banks, we take that in USD. Now, if these are not enough, let's talk about reserve currency. Okay, because this is the topic of reserve currency, right? It was made to so that the international transactions would be easier. I know Ethirajan had talked about cryptocurrency, right? But at the time, we live in a technology right now. But that time, we started this because it was easy for international transactions. When we're talking about oil, when we're talking about gold, we do need it so that it can be done in a single value. And if you feel that this is an orthodox method and it should be changed, I think you're very wrong for this. Because changing USD into any other currency, let alone be cryptocurrency, will have major repercussions, such as the world will have problem in adjusting their values. We are already set in a way. We already know that 1 USD is equal to 60 rupees. Now we have to change all of that when we're changing the currency, right? We have to change the money. It will decrease because of the current pandemic. The value of money will decrease. Our stocks will decrease. Our world economy will decrease. This will have a major unrest in all of the countries, especially the poor ones, the developing ones. And this will turn the world economy into ashes. Ashes. Okay. Another major reason that I feel that we should not change is that the world would have to choose that which currency would next be crowned as the world currency. Now, this will have major political unrest because only developed nations can be done. When we're talking about developed nation, I can say UK. Okay. If we suppose take UK as the world currency, then it will take years to actually transform what we've already done with the US. Like the money, then we have to transform into UK, USD, then into euros. Then our value as India, our value into euros. Then our value of the money will fall. Can you see the chronology? Can you see it? Now, according to you, I don't you think that this is not good enough reasons for you guys for changing the money. Then I think I should let you guys decide what should be the good reason. I would like to say that money is in some respects life's fire. Okay, it is a very excellent servant, and it is a terrible master. It can make you and it can ruin you. And when we're talking about a world economy, it can legit make our economy a better place, or it can make a developed nation into developing one. Are we ready to take this risk? Are we? Suppose we go back 10 years because we change the currency. Are you ready to go back 10 years when this is a neck to neck competition into being a developed nation? I think USA has done a pretty good job into managing the world to make a better place, and they have managed to keep their money as a reserve currency as long as I can remember. Now, I think that they have done a pretty good job, and I feel that they can do that right in the furthermore in the future too. There will be a terrible distress when that we will not able to handle after everything that have happened and everything that can happen. Thank you.
I'm sorry. Yeah. So thank you so much. And she has exceeded the time limit by 7 minutes and 16 seconds. So that's 2 minutes and 16 seconds. So now I'd like to call upon the last speaker, the speaker 4 from the opposition, to come and conclude their argument. Thank you.
So, hi everyone. Bhuvi, you had some very valuable points over there, and
I'm sorry. Right now, the fourth speaker from the opposition is supposed to go first, and then the proposition.
Okay, sure.
Yeah.
Well, I'm glad to hear all of these facts, figures, and the numbers that we have discussed. Well, the conclusion I would come up with would be the US economy is rapidly growing trade and current account deficits, and systematic weakening of the dollar against the euro and other currencies raise several concerns about its future as global reserve currency. Well, skeptics of the US is enduring economic and political power proposed a new global reserve currency. And although changes in the global reserve currency system are possible, they will not happen rapidly and will driven by the market rather than by political choices. Even if they do not take place, they will drive in the market rather than political choices. Well, I would also like to ask that how can one trust China so much that in future, in future, Chinese economy would be considered as the reserve. And don't you think would this also be a call for a trade war? I'll rest my case here. Looking forward to hear to Varun.
Thank you, Shrishti. This is to inform the judges that she just took 1 minute and 20 seconds. And now may I call upon the fourth speaker to conclude the argument from the proposition. Thank you.
Thank you, Shrishti. I would like to, kind of pinpoint the points made by Bhuvi because I found them a little too valuable to not let go of. So I'll kind of dig into the cryptocurrency aspect which you spoke about. So I think everyone here would agree that for something to function as a currency, it must be an effective medium of exchange. And individuals, companies, and other organizations must be able to trade it for goods and services. And now I'm sure everyone would have heard of cryptocurrency and how lately it has been a strong contender as a medium of exchange. So let me talk about the specific cryptocurrency called Bitcoin, and it's pretty much the most popular cryptocurrency out there right now. And the fact that it started off at a very meager $0.08 10 years back and is now valued at around $18,500. It just shows the kind of momentum it got over the last decade. Also, if you look at the number of Bitcoin transactions across the globe, you can see that since 2019, almost every quarter has at least 300,000 transactions, which shows the growth and the acceptability of this currency. And when I say transactions, these are like normal everyday transactions which we do for goods and services. So people are actually choosing the cryptocurrency as a medium of exchange. Now, currency cannot be replaced, or currency cannot be accepted unless it has a stable value throughout. And the problem with Bitcoin is it's very volatile. That has always been its weakness. And it has been all over the place during the early period when it just came out, with values jumping somewhere between 8,000 to 20,000 US dollars. But if you look at the recent trends, the value has stagnated at around $18,000 to $20,000 in the last 1 year. And this is the most stable Bitcoin has ever been in its entire lifespan so far. And recently, PayPal, sure everyone would have heard of PayPal. It's one of the most leading online payment system in the world. And they've started accepting cryptocurrency as a mode of payment. Even bigger news is that banks worldwide have moved into cryptocurrency payments, leveraging on the fact that blockchain technology provides a wide array of benefits, like reduced transaction fees, faster money transfers, more robust security to the entire banking system, and many more. So, what we see here is kind of like a pattern or trend of acceptance by major players in the economy. And the more accepted a currency is, the more a threat it is to the US dollars in taking over as a reserve currency. And what would happen if a dominant market force like Amazon entered the cryptocurrency market and began accepting cryptocurrency as a payment method? An Amazon cryptocurrency wouldn't just change the face of the world's largest online retailer. It would change the world because that's the scale at which Amazon operates. So looking at history, it wasn't always the US dollar dominating. So this is the aspect where Bhuvi, you kind of brought in about the the UK pound and how they were the dominant country at once upon a time in history. So if you look back, the US dollar wasn't always the one dominating the global financial system. We had the British pound before it, like you said, and we had the Spanish dollar as well. So it's not like we have backtraced and found out that US dollar was the only relevant currency out there. So there has been changes at different points in history. So how much of US currency is currently out there right now? Well, according to the Federal Reserve Board of Governors, approximately $1.7 trillion in circulation as of January 23rd, 2020, of which 1.66 trillion was in Federal Reserve notes. Now that figure could drop as low as $500 billion within the next 10 years, as Bitcoin and cryptocurrencies in general become more widely used for transactions. So to put things into perspective, the US dollar has never faced a bigger threat to its existence than what it is facing right now. And one of the key reasons the US dollar was accepted as a global reserve currency was the fact that the world believed that the US is capable enough to pay its own debts because of the power of the US dollar at that point. So they thought that whatever debts US conquers, they can kind of pay it off. But for how long do you think a country can ride that wave? The pandemic just showed us that uncertainties have never been more uncertain than before. And a cryptocurrency, on the other hand, wouldn't have to ride the debt wave because it does not have an entitlement to any specific country. And that's one of the biggest pros that cryptos have. It can act as the people's currency, and it's only a matter of time before it becomes the people's currency. As stated by the comedian John Oliver, digital currency is everything you don't understand about money, combined with everything you don't understand about computers. On this note, I would like to end rest my case. Thank you all for a very good contribution.
Thank you, Varun. So, judges, speaker 4 took 4 minutes and 38 seconds. And now he was the last speaker. So with this, we conclude the round 2 of the debate. And thank you all for participating. And I'd like to hand over to Professor Shohini now. Thank you.
Thank you. Thank you so much, Mugdha. And thank you to both the teams. It was quite a riveting debate. Per usual, I would request all the judges to send over their scores to me. I would now request Professor Ram to take over, please. We will have a few, we're going to announce the debate results as soon as we are done with a couple of speeches that we have lined up. And so please, I will request the teams to please stick around. and judges to kindly send me the score sheets when they are ready. Big congratulations to both the teams for taking part in this debate. Professor Ram, are you here?
Yes, I am, and absolutely riveting conversations from both the groups, all four teams. So I got a chance to participate silently in all the debates from yesterday as well. Very strong arguments, good, strong personalities, I would say, and people with their passion showing up and making their case, which is exactly what is required. So before I make any further comments, I'd like to actually invite our Dean, Professor Ashish Bharadwaj, to say a few words and then take it from here. And then I'll come back and close the loop on this debate. Thank you. Over to you, Professor Ashish.
Thanks, Ram. Although we are all sitting in front of our computers, can we take a minute and just applaud all our students? Did a phenomenal job. Congratulations to all of you for successfully doing this round of debate. I think all of you did phenomenally well. It's a complex topic, and some really smart economists around the world have ensured that we make it slightly more complex than what it is. And but you did really well. I was looking at. I have another laptop here, and I was following each and everything on the YouTube stream. It was quite good. I also thank my colleagues Benjuan and Ruchira, of course Shohini, for their time and efforts. And last but not the least, thank you so much, Professor Arun Kumar, for being with us today, despite this being a Sunday. And you, of course, you would have had a very long, hectic week, and you're here with us on a Sunday afternoon. Thank you so much for your time. But this is what we can do for students who are really struggling in these crazy times. I can assure all students that in a slightly different scenario, with no COVID, no lockdown, no health concerns, this would have happened very differently, and we would have welcomed you on our beautiful campus in Sonipat, all of you, and you would have had a fantastic experience. But even though we are not able to do that, I hope the level of excitement is as high in you as it is in all of us who are hosting you virtually. So thank you very much for all the preparation and the time that you spent in for this debate. Once again, you did very well. I'm looking forward to hearing from Professor Arun Kumar some insights and his thoughts on the state of finance and how does he see everything that's unraveling in front of us. He's an expert in the field. He's part of a phenomenal institution that we all look up to. And at IIT Madras has done really well, not just in management studies area, but certainly in the engineering fields and all other disciplines that they are engaged with. So I don't want to take too much of your time, Professor Kumar. Over to you. And thank you once again for being with us today.
Thank you, Professor Ashish and Professor Ram, and thanks for inviting me over for this event, as well as thank you for inviting me for judging the event, as well as giving a brief about it. I think to stay within the topic of the discussion today or the debate today, I'm just going to be focusing on two very small aspects out here, and I'm not going to take much time on it. In fact, we are talking about US dollar and US. Historically, if we look at it, it has had a dominant place. It has had a dominant role, despite what we call it as some patchy past also in there, some patchy past out there. And I think about 6 or 7 times there were some patchy pasts out there, and there were multiple suspensions in the past, etc., and so on and so forth. But to take it forward, I'm just going to focus on two basic aspects, which I think most of the students who are sort of looking at the debate, but I must say that the debate was the arguments were very good and very exciting, and it was very encouraging also. So I'm going to just stick to what you call it as your cryptocurrency part of it, and as well as the other one, that is your special drawing rights, which even Professor Ruchira Sen mentioned about it when she was, after the first tea was over. I think we had a small brief. When you talk about cryptocurrencies, I mean, one basic thing, we are looking at cryptocurrencies. As of now, there are about 5,000 tradable cryptocurrencies out there. And the best website to look at is coinmarketcap.com. I mean, you look at it, and of course, Bitcoin being the little dominant one. Even if you look at the Indian market, in India also we have a crypto coin and a cryptocurrency. I don't know how many of you are even, how many of our students are even aware of it. There's a cryptocurrency called Lakshmi, which was introduced, and then which never basically took off, and which never took off, and then that was completely gone. And even if you look at cryptocurrencies, I mean, it has been very notorious. It has been very volatile, notorious. In fact, it has been used for, it has a history of being used for a lot of illicit transactions, number one. And number two is, it is more prone, basically, also you look at for manipulations. There are a huge amount of manipulations out there. I mean, though we can say that there are a lot of influential proponents of it, right from Mark Zuckerberg, right from CEO of Facebook and to Fidelity Investments and so on and so forth. But it has not been a very, what do you call it, a very straightforward case as of now. Been a huge amount of manipulations in it, and there have also been, what do you call it, as the currency being used for a lot of transactions which are supposed to be quote unquote illegal, etc. out there. And basically, it is. I would say that it is. The volatility is also quite high. In fact, somebody is saying that it has stayed at 18,000. Now, I think the last speaker was saying that cryptocurrency has stayed at around 18,000. In 2017, it hit about $20,000, and a year before it was at about $3,000 out there. And the role of cryptocurrency in what you call it as a criminal enterprise out there, and that's what I said, most of the illicit transactions and etc. is very, very high in terms of cryptocurrency. That is one part of it. The second part of it, when we talk about the cryptocurrency again, is there is a regulatory body, regulatory aspect, and when countries are trying to maintain the reserve out there, it is basically what you are trying to look at is some kind of a control, some kind of an effect on your monetary policy of the country. And that basically just does not get related, because if you kind of look at these kind of cryptocurrency again are not backed by any other asset, as you said. If you look at your dollar being backed by gold and so on and so forth, etc. Cryptocurrencies again, it is more, what do you call it, as it is mined. And if you look at, China was in fact the first country to ban cryptocurrencies. And now if you look at recently what I've been reading up is China is also, because of the race out there in this, what do you call it, as the, creating this kind of reserve, China is also setting up to, what do you call it, as mine or create its own cryptocurrency, China and US out there. And for all you know, China might take an edge in this race with the US, but still it might be very, very difficult for cryptocurrency in the current form of operation to be, what do you call it, as become a good alternative. In fact, if you look at, I would say that undermining, if you look at, we cannot completely undermine all these digital currencies, but in the current form, it might not be the, what do you call it, as it may not be easy for it to basically take over as an alternative currency. Now, when we talk about special drawing rights also, with special drawing rights was again, I think one of you briefly touched upon it also. We talk special drawing rights were set up actually in 1969. It is not something very new. It was set up as a reserve asset that could substitute in case of a shortfall of dollars out there. But when we talk about this kind of a SDR, or what they call it as special drawing rights, It's basically an international reserve where IMF allocates it to its member countries. However, basically, the problem is it is at present not a currency at all. It was originally linked to gold, and then afterwards it started getting linked to what is called as a basket of about 5 currencies out there. That is the British pound and the yuan and yen and euro and USD, etc., etc. And interest on these SDRs is basically determined in relation to the interest rate of the safe assets that is basically denominated in the currencies which are in the SDR bucket. So indirectly, again and again, you are getting back to these kind of a basket of currencies, and this SDR is not what you call it is not insulated from any of these currencies out there. So that is one reason SCR as such is not able to sort of move it. There is a proposal for SDR to make it as an international currency, in which case the status of the IMF itself has to change, where IMF has to start issuing these kind of what you call it as the tradable currencies out there. That is one. That is a major drawback, especially when we talk about SDRs as such. In fact, if to even move further in SDRs, it's again to move further. Even if when we talk about then SDR or the special drawing right, what we are talking about. In fact, to be precise, I was just reading up, and then it said that among the outstanding SDRs were worth only about, as of March 2020, the outstanding SDRs were worth only about $281 billion, which is only a fraction of the 1.8 trillion of the total central bank reserves out there. And the IMF's role also gives the US a effective veto power over the SDR allocations. So that being the case, SDR becoming a very strong alternative for what do you call it as a currency is also going to be a real challenge. So I move away from these two, that is cryptocurrency as well as SDRs, move to Chinese yuan. That is where a huge amount of debate was going on as of now. If you actually recall, Chinese yuan was devalued twice in the recent past. 2015, if I'm not wrong, was devalued twice in 2015. And plus, Chinese yuan also has what you call it as does not allow what you call it as a full convertibility. When you do not allow full capital convertibility, that also poses a serious problem for countries to hold such kind of reserves out there. So these being the case, of course, euro, I think most of you touched upon it. I don't want to get into it. Euro, if you actually look at, euro, again, though there are about 22 countries out there, you are dragging along what do you call it as countries like Greece and Italy and so on and so forth. So when you drag along countries like Greece and Italy, etc., then again, the value is a problem. In fact, some of you even talked about the dollar, currently reserves of dollar is only about 61%, etc. But what happened when the pandemic started? When the pandemic started, every country basically started rushing back to the dollar and then increasing their dollar reserves. And basically, again, there was what you call rejigging of their entire reserves that basically happened. Of course, though, as one of you, the statement, if I have to borrow, as one of you said, the tectonic plates are moved and then for the dollar and everything, perfectly fine. I think it has moved in. But at least for the next couple of I don't know, maybe decades, maybe years, I don't know. I don't want to put a timeline to that. It is extremely difficult for any other currency to be an alternative. Though some of them might be making inroads into it, like yuan might be about 10%, country might hold about 10% of reserves in yuan, etc. But to have a significant portion other than the dollar, I don't think that it is going to be there in the near future. At least I don't see that happening based on what has been my reading. Thank you very much. I hope I try to keep it short. I hope. Thank you very much. Over to you, Professor.
Thank you very much, Professor Kumar. Can I request Professor Ruchira and Professor Wenjuan to say a few words in terms of the overall debate and what you thought about between yesterday and today? What are the key takeaways for you in terms of the conversation that we had between the student teams. Professor Ruchira, you're on mute.
Oops. I am just blown over by the Global Financial Conclave this year, Ram. This is wonderful. And the student debate this year has been absolutely phenomenal. Teams from everywhere. I was around last year as well, and we had the 2018 and 2017 teams. 19 teams from GSPF. This time we have teams from across the country, which is phenomenal. And it's so great to see all students from across the country competing, addressing issues, talking about these globally important issues as well. I just came across an article by Rama Vasudevan on how the US has managed to maintain its hegemony with regard to the dollar despite COVID. Though its own COVID response has been lax, it has somehow managed to, keep its imperial footing. So that was interesting to see in light of today's debate. And as per yesterday's topic as well, it was truly, it was very, very interesting. Great choice of topics, great performance by students. Thank you.
Thank you, Ruchira. Professor Venjuan, thoughts from your side?
Actually, thank all of you to look me this very interesting but also very inspiring actually event. I'm not from this finance or banking background. I have been trained as a lawyer, but I think that the debate shows, the capacity of students to have a meaningful dialogue or even meaningful argument based on evidence and logic. So I think that's important for bringing the young generation into a public discourse on meaningful topics. Today on social media, the discussions sometimes are really uncontrollable. It's also not evidence-based, but I think this event brings our young generation to really engage in a meaningful discussion and a debate with the evidence, and also show respect to each other. I think that's very important. In terms of the content, of course, I cannot judge because it's not from my background, but I can still see whether they can convince me as a lay person. So from that perspective, I judge them. I think that students actually, from both days, they have tried a lot. They have done lots of homework, I can see. So thank you all for bringing me here.
Thank you, Venjuan. Appreciate. Again, echoing Professor Bharadwaj's comments in terms of all the judges coming on over the weekend, and of course, thank all the students, for actively participating and preparing for it. When you're given a little less than 24 hours to prepare for your next topic, it obviously puts additional pressure on the quality of the preparation as well. And so it was commendable on all your parts to have participated. So we appreciate it. So I'm sure that you are wanting to know what the results are. So the judges have been pretty quick in terms of providing the grades. As professors, it is kind of second nature to them. And so I do have the final scores of all the teams. It was an extremely close contest, I would say, between the two groups and across the groups as well. There are very few marks that kind of differentiate the first from the last. But I wanted to first congratulate, and so give a big round of applause to all the students, please. Awesome. So I'll talk about the teams that did not make it to the top two. The one is the School of Banking and Finance team, and the students from MIT World Peace, the Maharashtra Institute of Technology, the World Peace University, Those were the number 3 and number 4 ranked teams within this competition, but they were very, very close in terms of their ability to put the arguments together, put their from meeting the timelines and such. So they were placed number 3 and 4. The team that came second is the team from Team 4, Achal Jain, Ethirajan, Akash Vishwas, and Varun M. So second place winner is the team from TAPI Management Institute. Congratulations. And obviously the first place winner is Team 6, Siddhant Satpathy, Ayush Sarogi, Pragati, and Anuj Nawal. So congratulations again to TAPI Management. So you guys have put together an amazing, probably a program for debating as well. So it shows. And I wanted to, obviously, Professor Madhu Veer Raghavan was in one of the sessions earlier today. So maybe he probably had a little bit of coaching for you guys. I don't know. But it was amazing to see the 2 teams from TAPI come number 1 and 2. So congratulations to all the team members, and wanted to thank you guys, and hopefully we'll meet up again next year in person when we have a Global Finance Conclave. And I don't know, Ashish, you wanted to say anything else before we wrap up?
Just a big congratulations to all the participants, and a big applause for the winners.
Excellent. And there will be a little more surprises coming up a little later on, and that will be part of our concluding session. And so do expect to hear from the organizers in terms of what is coming down the pipe for you folks, all the participants and the winners as well. So thank you again. Thanks everyone. Have a fantastic rest of the week.
Before we all leave, I think a quick vote of thanks to all the student moderators as well. Amya, Nikhilesh, and Mugdha, this would not have been possible without them. So a very big thank you to all of them. Yeah.
Thank you, Shohini, for chairing the session, and have a great rest of the Sunday afternoon. Bye-bye.
Thank you, Shohini.
Real life, sir.
Ram, you're muted.
Good afternoon, everyone. Welcome to the penultimate session of the Global Finance Conclave 2020. This is kind of culminates the entire session around looking at India on the bullseye, looking at how we can create a more resilient and resilient financial systems and market structures. And we had covered a whole number of topics. And so, but one of the most important areas that we wanted to cover today was around cybersecurity and what it means from a geopolitical perspective. While there has been a lot of discussions around boosting economic and social constructs and structures, one of the areas that we have not touched on is around cybersecurity. While there is a tremendous amount of governmental interventions and from a monetary standpoint, as well as from a business angle in terms of looking at unemployment and how to reinforce that, what has kind of gone under the radar is what is happening in the area of cybersecurity. Just between January and October of this year, the number of cyber attacks and hacks have increased by 600% over the previous year. What this tells is that hackers are having a field day, and they are able to tap into the emotional and psychological impact of what people are going through. They have been attacking the healthcare systems. They have been attacking the financial systems more frequently. Till 2019, every 80 seconds, a hack was conducted, a cyber attack was conducted across organizations and individuals. Now it has actually increased to 39 seconds. So that means every 39 seconds, some hack is going on around the world. This obviously has put a lot of pressure on individuals and organizations to be on the lookout for these thriving and organized cyber hackers. And how do we address that? So today I'm joined by two very preeminent experts in this field. And I would like to introduce them first, and then we will get into a form of discussion in terms of looking at their perspective of how the cyber threats across both countries and what that means from a geopolitical perspective means to us. So I have with me Fred Lane. Frederick Lane is a nationally recognized, he's from the US, he's based in New York. He's a nationally recognized expert in privacy and the impact of emerging technologies on society. He has written about 10 books, all of them starting with the cyber traps. So his book on cyber traps for education, cyber traps for expecting moms and parents. He's got written 10 books on these. He has been an expert that people like Jon Stewart and 60 Minutes from the CBS and other nationally recognized programs, some of the BBC documentaries that feature him to get his input. He has spoken at several colleges and universities across the world, China, US, France, and so on and so forth. And in his capacity as an expert in this field of computer forensics and privacy expert, he has been involved in a number of US Department of Justice and City of Charlotte and a number of other organizations. He has represented them. And he is a graduate of Amherst College in Massachusetts, as well as the Boston College Law School. So he's a lawyer, author, and a cybersecurity expert. So welcome, Fred, to the program. And thank you. And equally impressive is Sri Parthasarathy. He is a leader of the Cyber and Strategic Services for Deloitte, India and South Asia. He's a thought leader with probably over three decades in this field. He's a well-known speaker on topics such as enterprise technologies, Industry 4.0 disruptors, cybersecurity, risk management, and such. And he has been offering services to the financial services and other industries, both in India and outside, related to future of risk and audit and compliance, and how that is going to actively change our business models and different solutions that we develop. His body of work, both as an industry expert in cybersecurity, digital transformation, is phenomenal. He has appeared on televisions just like Fred several times, and he is called on to provide his viewpoints and thoughts. And so he has served in Deloitte, both in the US and in India for over close to 2 decades now, in various capacities. He's a member of the Risk Advisory India Executive Committee, and he's also a member of the Asia Pacific Cyber Executive Committee. He spearheads a group of highly skilled certified technology architects, as well as who applies new technologies in the area of foundational solutions that is required for organizations across industries. And he has been building partnerships, alliances, and relationships across multiple companies in the area of emerging technologies. And so he's an alumnus of the Kellstadt School of Management, Chicago. And so I welcome Sri to the session and wanted to we're having a very energetic conversation on this part of from a cybersecurity perspective. So the way I was thinking that we could do this and engage in this conversation is probably I will start with some open-ended question, and then we can get into some details in terms of your perspectives on what this cybersecurity means in the area of from a geopolitical perspective. So the first question, obvious question, is in terms of, from your standpoint, how you think cybersecurity has been looked at and addressed as part of the COVID-19 pandemic situation. Has countries paid any attention to that, or how are they dealing with this situation? So let me start with Sri first, and then I'll request Fred to kind of opine on that.
Thank you. Thank you here, and I appreciate your kind words and fantastic introduction there, which I seldom get, Ram. Thank you so much. And I think answering your question, I think if I look at it from a COVID perspective, one of the perspectives that I have, because I basically now work with a lot of CEOs in terms of guiding them towards enterprise and cyber resilience, I think overall, while we look at it, I think the pandemic has had devastating impact on supply chains, organizations, geopolitical across boundaries, right? It actually broken all models and essentially exploded in that particular way. But in a way, when I really look at it, and when I talk to many of the CEOs, I say pandemic or COVID has provided two things. One, essentially, it's provided opportunity, because it accelerated digital and our adoption of the virtual environment. But at the same time, I think pandemic and COVID, when you really look at it from an organization perspective, has also been a little kind. And what I mean by that essentially is that today, if you really look at it, world over, if you look at organizations, I don't think too many organizations have collapsed or essentially gone under because of COVID. There may have been a lot more organizations which possibly went under when we had the 9/11 attack in the US, right? So the reason for that is essentially pandemic has essentially spared a lot of things. And today, when you look at resilience and when you look at cyber and overall cybersecurity, I don't believe that organizations are completely prepared to answer something like this. And why do I say that? Because essentially a lot of the things that you look at essentially from an institutional knowledge perspective lies in the head of the people, and it's not so much as formalized in terms of documentation or digitized kind of way of how they basically operate. So from that element, I think if an organization had been affected where 20% of their leadership was gone and possibly maybe another 10 to 15% of their workforce was affected, then I believe then the effect of the pandemic and how it would have possibly been would have been very, very different. And then cybersecurity as such, when you really look at it, you're so right. There's been an increase because I think as you look at it, it is a very vulnerable situation. Because today, if somebody calls a person and says, hey, I have a COVID bed for you, understanding from social media and others that, hey, I can basically provide you something, the person is going to immediately swipe his credit card or those kind of things. So the frauds and all things are happening, and we are seeing that essentially accelerating. So I would say significant impact overall from our economy. I think nobody can dispute that. But at the same time, I think when we look at aspects like cybersecurity or resilience, I think definitely a significant area where we need to really focus on as we move forward.
Great. Fred, what do you think? What have you been seeing and hearing in terms of how the cyber has impacted due to pandemic?
Well, I think I'll come at it from the opposite viewpoint as Shri, not in terms of the conclusion, but I think in terms of going from the individual up to the organization. And I think that what I'm seeing, because I focus on the combination of cybersecurity and privacy, is that the fact that we have moved so much of our economy, but not, it should be noted, many of our essential workers who are forced to work in grocery stores and so on and so forth. But for your IT/white collar professionals, the move to a home-based work environment means that you've got a lot more emphasis on obviously virtual communication and the cybersecurity aspects of logging in remotely, which raises a whole host of issues, puts a lot of burden on the IT department in terms of making sure that things are secure. You definitely see more work shifting to personal devices, which raises a range of cybersecurity issues, most notably in terms of whether or not the devices are protected, but then also the blending of the professional and the personal resources on devices in ways that were easier to keep separated when we were going into an actual physical environment and using corporate resources. The other thing that I focus a lot on is, in the context of privacy, I define privacy as the ability to control access to personal information and limit how that information is used. And particularly in the educational field and to a lesser degree, perhaps in others, you're seeing individuals forced to open up their homes, or at least a piece of their homes now, in ways that they never had to do so before. So here, Ram, I'm looking at your office, but you're obviously looking at one of the rooms in my house. So now I'm sharing this space with the world. So that's, I think, something that people are grappling with. It's a real problem. This is more of a privacy thing than a cybersecurity, but it's a real problem for kids in that a lot of kids are often uncomfortable sharing their space with their classmates. And so you get into this tension about whether or not we're going to have mandatory camera requirements, that the camera has to be on. So that's all of that. And then the last piece I'll touch on, which I think, Shri, you mentioned, is this rise in the potential fraud that occurs during a situation like this. And actually, I just got a call from my mother, who's in her mid-70s, the other day asking, is this something I should click on? And it's exactly the kind of thing you're talking about, where people are taking advantage. Oh, you need this air purifier. You're actually, and this is what made it really, really devious. This was someone selling cybersecurity services purportedly to my mother. And, so they're actually using this growing awareness, Ram, I think, of the threat of cybersecurity attacks as a cybersecurity threat itself. And so, yeah, I think that, to the extent that everybody, even my mother, is learning how to use Zoom and connect in new virtual ways, right, it expands the number of vectors for cybersecurity attacks. And inevitably, in a situation like this, where we're being forced to use this technology to keep doing our work, there's absolutely no question that we're going to see a rise in these kinds of threats.
Okay. That's great. I'll just pick up on what you just mentioned. I mean, in your book on cyber traps for education, you talk about the tension between technology and privacy, and then how that needs to be dealt with. So you touch on that, and I'll probably pick it up from there and ask in terms of the fact that the vectors are increasing, the cyber threats are increasing, and probably the the individuals are getting more impacted, that is getting probably doesn't get sufficient news coverage, if you will. When the likes of Aadhaar or when the likes of Big Basket in India or others get hacked, that's when people realize and wake up. But there are clearly impacts that happen at the individual level and at the organization and at the country level. But I would like to start with the individual level impact and then take it to what kind of cyber defense mechanisms that an organization and a country needs to have. And could there be a mechanism that could apply across the country as well as to the organization and then to the individuals? Do you see a structure within that? So let me start with Fred and then have Sri opine on that as well.
Well, in a sense, Ram, what you're really asking for is the cybersecurity version of the One Ring, right, from the Lord of the Rings, to rule them all. Quite honestly, I don't think that there is a one-size solution for the cybersecurity threats that we see. I mean, just think about the thing, Sri, that you see on every single day, at the management level, the cost of securing corporate devices and protecting corporate information it's a staggering challenge. And I think if we're going to start with the individual level, Ram, which I think is a great place to start, ultimately it's a question of individual responsibility, right? Because we have information that we've generated that is meaningful to us in a variety of different ways, whether it's photos of your kids, it's your financial information, it's access to your various credit cards, all of that stuff comes in together. And so the individual needs to understand enough of how all of this works. Number one, so that they can lock down their stuff using appropriate password hygiene, different passwords for different services, so on and so forth. But then they also need enough education so that they can recognize potential threats. And I know at the corporate level, Sri, that a good chunk of your time is spent teaching people about phishing attacks and other kinds of cyber threats. We need to figure out a way to do that more for individuals. For people like my mother, who may not have an IT-related guy that they can call up and say, is this genuine or not? So maybe there's not one size fits all, but there are definitely initiatives that work their way all the way down these organizations and systems. And as you might expect, I think education is a huge piece of this. The more we educate people about how technology works and how to protect themselves, that's going to protect us at every level, all the way up to the nation state. But in terms of the specific tools that someone like Sri would be recommending for organizations, obviously a lot of that's going to be meaningless to someone like my mother. So I think we do have to scale our solutions to the precise problem we're talking about.
So Sri, from your perspective, is there a model that can be applied from nation state to organizations to individuals, or how do you see this?
I think, Ram, you're asking an interesting question, which is age-old, what I call as the security privacy paradox. And I think Fred has basically talked about it rightly so, in terms of the work from home and other things. Essentially, I think with us moving out of the Fort Knox, which I call as all of the secure centers and other things that have basically been built, and going to everybody's home, where I don't even call it work from home, right? I call it work from anywhere. I think we have just opened up a whole new essential, what you call a whole new threat surface, which essentially we need to basically address. Because previously, at least when you really wanted to do, you would basically have the person come into the corporate data center and essentially then go into the cloud, and you basically protect it that way. But right now, essentially, everybody is going to go straight into the cloud and essentially access that information. Otherwise, you're going to have all of the kinds of latency. But coming to the crux of the situation, when you really look at it, I think what we really need to do is, in my thought process, when I look at security and privacy, in absolute terms, from a privacy perspective, And when you look at it, I think you have to look at it in context across countries, right? You have to look at it across cultures. You have to look at it across kind of geographies in terms of how they operate. How privacy is dealt with in the US, how it is dealt with in Europe, essentially may not be this one size fit all, possibly in other countries. Today, for us, if you take from an India perspective, and if we were to think about implementing privacy, I think Ram, you and I have all grown up in that particular culture where anybody and everybody will walk up and say, hey, what's your compensation, what's your salary, and those kind of things. Those are things. And even people will show up in the hospital saying that, hey, I'm this person's family member, I would like to know what they are and all things. And that's the way privacy is dealt with, right? There's no sensitivity of that particular information. And leave alone essentially things which happen at a personal level, even at an organization level. I don't believe today, and I will specifically speak about India and I'll speak about other countries. I don't think many countries are ready for privacy. So I think the first and foremost right now is let's focus on what I would call as CIA, which is confidentiality, integrity, and availability. And privacy, I would basically look at it as let's make sure that we're managing that particular information or the personally identifiable information much more carefully. Because I don't believe even if you take Aadhaar today, or if you take even a simple KYC, the person calls you and says, I need your Aadhaar, I need your PAN card, and you basically have to send it over. Otherwise, you do not have a choice. So I think we need to really balance it out. And we also have to look at the operational challenges that exist. But if I were to look at it from a nation perspective all the way to an individual, I think I would reverse it like the way what Fred said. I think we should start from an individual perspective and say, what is it that we need to protect for that particular individual? What are those particular pieces of information, if they get correlated, can sort of compromise that particular individual, both from a privacy and a security perspective. And we have to start some of those particular basic protection. And we have to re-emphasize to every corporate and to the government as to what is basically required. I think the European Union is doing a fantastic job of it. US again essentially has adopted some very stringent laws, and where there's a significant level of data protection that is basically happening. But I think as we look at this particular new operating models, we will need to possibly look at each one of those particular layers in terms of the governance, in terms of the policy, in terms of the technology, and make sure that they get embedded into every one of those particular layers.
Ram, if I could, let me follow up just for 1 second on what Shree's talking about, because I think that the European Union is such a wonderful example of how you can put in a more robust privacy protection. I think one of the challenges to bring this around to the cybersecurity issue is that we rapidly accelerated ourselves into a situation where information and data have enormous intrinsic value now. And so that heightens the push, the efforts to break in and get this information, whether it's at the individual level where someone's committing a single act of fraud, or where it's at the corporate or national level in terms of hacking and cyber warfare, in terms of gleaning and collecting information that can be used either against a country or proactively in favor of the nation state or the organization that's doing the hacking. So for instance, the pharmaceutical companies that have been developing the vaccines have been under persistent cyber attack in an attempt to get access to that information. And in some ways, that's not all that different than the efforts to get access to the Manhattan Data Project in the 40s, right? I mean, this has been going on for a long time. Presumably, the Spartans were trying to get data on the Athenian shields. I mean, this is old stuff. But the thing is that with the sheer volume of information, and as I alluded to earlier, the number of vectors for potential attack, it's a much more serious problem today, I think globally and individually, than we've had to face before.
Okay, so that brings me to the kind of problems that you are talking about. Sri, in one of the interviews, probably in the beginning of the COVID situation on CNBC television, you talked about the fact that these cyber criminals are so well organized, while the corporations, especially the banks and the regulators, and they are so disparate, right? And so you said that there is a need for the banks to band together. So the band of brothers within the corporate and the financial world, you didn't think it existed at that point in time in January, February. I don't remember exactly when it was that you were talking about it on CNBC. So do you believe that there has been a little bit of a movement in terms of how these financial institutions and other corporations have come together, either from an industry perspective? And has there been a more proactive conversations with the government?
See, I think I gave my context that even at that point in time, specifically from an India perspective and to look at it. But if I look at it from a US and others, US is already organized under the FISMA, and where there is a very tight protection in terms of what they basically do, information sharing after an attack, and the sensitivity of how that is all handled. But I think similar to that, India too, when you really look at certain and all things, we have a lot of things which are in place. But I think the challenge is the enforcement. And the challenge is essentially not so much as whether we have the laws or whether we do not have that. I think it's the question of how do you make it happen? And I think this reminds me of essentially today cyber attacks and corporates remind me of essentially the two guys who are basically running and there's a bear running after them. The other person says, I just essentially have to outrun you. That's about it. And essentially that is exactly what is happening today in the cybersecurity world. It's a question of, hey, if you are hacked, I'm going to sit by the sidelines and watch essentially what it is, rather than everybody essentially sharing that information, because the person is not going to stop there. He's going to go after the weakest link. If he cannot hack one bank, he's going to basically go after one other. And that is what he's going to keep going after every one of them, right? And similarly, in a corporate setup, let's say I even take one bank. What really happens is, let's say he goes after one node, which is the weakest link, or an ATM or a switch or whatever it is, and he keeps going on. Even there, when you look at the security center, security operations, it's not completely coordinated and integrated, and that becomes a challenge. I think it is very, very important for us to basically put that information back into the system so that we are learning, right? It is something like AI and machine learning and patterns and how we need to do. I think that is something that we need to do. I don't think we are geared up to do something like that. And that is going to be very, very important in terms of coordination. And that cannot happen just by the government alone. That has to come with public-private partnership and a tight integration between the government and the corporates to basically do that.
So that has not happened so far, you believe, in the last 6, 7 months since the pandemic broke out. You don't believe that there has been a sufficient level of focus on that in terms of structural changes, in terms of the government and the regulators and the institutions banding together?
See, we have been talking about sectoral SOCs for a very long time, right? We've been talking about sectoral SOCs for a very long time. But are they reality today? No. And I think which is where the challenge is. And if I take the last 6, 7 months, is it a very coordinated response across all of these particular banks or other institutions? No, I don't believe it is still at that particular stage. And that is one of the reasons. Whereas if you take the other side, right, take and look at the bad guys. They are very organized. They have enough amount of money which is getting pumped in. And whether it is a script kiddie or it's an organized syndicate, they're all very together. And if you really look at the dark web and all thing, and if you start monitoring that, you will see how and you talked about band of brothers. They are not band of brothers, they are band of blood brothers in terms of how they work. And they share information in terms of, hey, this is what I have hacked. Can you basically give me a solution? Or essentially somebody else takes it, and it's almost like open source kind of hacking that they basically are doing, right? That is where the challenge is. But whereas when it comes to a bank or when it comes to any other corporate, it doesn't basically happen. And I'd like to hear Fred's thought process on this, because I think I was giving it from an India perspective, but I know some of the other countries are very well organized in terms of how they basically operate here.
Well, I will say, Shri, that in the United States, there's a very effective governmental private sector cooperation. Where I think you're spot on, though, is that there's not the best horizontal cooperation from one business to another. And that's because of concerns about bad publicity. It's about concerns about proprietary information. You run up against the individual feelings and concerns, career concerns of people involved, right, who don't want to admit that they made a mistake or that they didn't implement everything that needed to be done. So one of the reasons that cybersecurity is so challenging is that it's run by humans, right, who have all of these emotions that get in the way of effectively implementing a strategy. I think the point that you made is the critical one, which is that the hackers and the people trying to breach cybersecurity are incredibly team-oriented. They really do treat all of this as a collective open source project. And as people have said repeatedly, the attackers only have to be successful once. And you, as an IT professional or as a planner for corporations, have to be right every single time to keep these guys out. It's phenomenally challenging. And actually, I will, just as a side note, recommend a book for anybody who's listening. There was actually an astronomer named Clifford Stoll who wrote a book called The Cuckoo's Egg back in like the late 80s, early 90s. And it was his efforts to track a single hacker across multiple networks. And the reason it's so good is his description is incredibly detailed, but it also underscores Shri's point about going for the weakest link. And then there's another weak link that can be followed step by step. And it just, I think, is a great introduction to the challenges of network cybersecurity. The other piece I want to follow up on, and I'm really worried about this, is that AI is going to be a classic double-edged sword. It is absolutely true that professionals like Shri can use AI to do pattern detection and rapid response for cybersecurity, but AI is becoming essentially a kiddie script now. And so the hackers themselves are going to be able to use AI to make much more sophisticated, for instance, phishing attacks. Imagine taking an AI, linking it to some source of information about corporate employees and writing extremely tailored phishing pitches to those individuals. The sophistication of this stuff, I think, is on the verge of taking off. And it's going to be a persistent AI arms race when it comes to cybersecurity. And that's just at the corporate level. Put this on the national level, and we have, I think, really profound challenges. And I'm not even getting into the use of video technology like deepfakes. What if we're holding a Zoom meeting and somebody is trying to deepfake the conversation by bringing in a senior level manager, who's then going to solicit information from the participants of the Zoom call? I mean, the potential is almost endless. So this will not be the last time, Ram, that we are having this conversation.
Yeah, it's a great point, and it's a good segue to my next point of conversation. If I was to, look at from a nation state perspective. So Fred, for you, from your perspective, we just went through our election cycle, and the fact that there is a lot of disinformation, fake news, especially after the 2016 elections, and now with the recent 2020 cycle. Do you believe that the level of disinformation, fake news have actually reduced over the last 4 years, or do you believe that there is a little more method and more sophistication in terms of how this disinformation and fake news is being adopted by nation states, if you will?
Yeah, so that's an absolutely great question, and just a bit of background in that I'm working on my next book called The Rise of the Digital Mob, which is about the impact of digital communications on various aspects of our social communication. Politics is obviously at the heart of that. There's a British writer named Edward Crankshaw who in the 1960s wrote about Russia's use of disinformation in an attempt to engage in a practice he called decomposition. And the idea or the goal of decomposition was to reduce belief in Western institutions like elections, like democracy, and so forth. And one of the arguments that I'm going to make in The Rise of the Digital Mob is that 2016 was peak decomposition on the part of Russia in terms of how they manipulated the information space in the United States. Now, to be fair, it would not have been so successful if the United States were not primed to be decomposed, because we have all of these serious issues in this country in terms of race and class and equity and so forth. So we did a lot of the damage to ourselves, to be clear. I guess I would argue, Ram, that I was vaguely encouraged by the 2020 election cycle in that sense, insofar as it seemed like, number one, the mainstream media did less chasing of the laser beam up and down the wall like a kitten. You know, they slowed down their response to some of this digital information. And to my shock, it looked like Facebook and Twitter and so forth took this all a lot more seriously. And as the one Washington Post reporter said, they responded by making their services work less well, because that's the only way. I mean, their algorithms are so primed to take advantage of controversy and outrage that the only way to minimize the impact of disinformation and misinformation was to literally slow down the way those algorithms work. And you know, we can have a whole nother conversation about the impact of algorithms on contemporary society in a bunch of ways, but that is one of the most destructive, in that to the extent that the information space requires eyeballs for engagement, and eyeballs are driven by controversy, that appeals to the worst aspects of us. And, you know, in a variety of ways plays into the privacy and cybersecurity issues that we're talking about. But at the national level, if we don't get a grip on how we distribute and consume information, you know, there's no need for physical invasion when a country is tearing itself apart, which is what the United States over the last 4 years has been doing. So, you know, mission accomplished there, right? You know, we need to do better. And I will say, and I hate to be this kind of example, you know, the United States is an object lesson for the rest of the world as to what can happen if you don't get your information not under control, because I'm not trying to imply central control, but if you don't educate your populace and your corporations, who have a vested interest, by the way, in a functioning democratic system, if you don't educate people about what happens when that goes away, then you're really in deep, deep water. So here we are.
So if you take the other side of the equation, Sri, for you, well, the U.S. has been reasonably open in terms of being letting the private parties run this, and the central government or the federal government actually taking a more of a step back from how these are being handled, whether it is through these private companies like Twitter and Facebook. On the other hand, India has taken a little more active, especially the central government has taken a more active approach to how it deals with use of information or disinformation or misinformation. And in some cases, they may even be the generators of the same, right? Without getting into the political aspect of it, from a policy perspective, do you believe that there are some changes that needs to happen, or things? How do corporations view that in terms of how the role of the central government in terms of use of information, whether it is through the Arogya Setu the app or other types of mechanisms, and how they are controlling through social media mechanisms and the administration of the state. What do you think about that?
Sure, I think, Ram, I think the way we need to look at it is left to right. Essentially, if we basically say 1 to 10, right? And where there are nations which completely ban everything or control anything and everything that goes into social media. That is one. Other side is essentially where it's completely open, because essentially that's the way the citizens really want it, and that's the way what you call a freedom and right to information and all of those particular things. I think when you really look at it from the position that the US has taken, I don't think it's a very lenient position that they've taken, because I think a lot of the things where I think they are calling these particular companies specifically to control and manage and put the right checks and balances on those in terms of what can be seen, what cannot be seen, and then essentially that gets applied. Hopefully that gets applied and they get percolated to all the countries, because I think that would be sort of a best practice in terms of some of the things that happen. But at the same time, I think in absence of seeing those kind of checks and balance, I think what India has basically done is essentially to see what are the kinds of blocks you can basically do in terms of like WhatsApp, in terms of you can't forward it more than so many times, or if there are restrictions and those kind of things because of the virality of some of these particular things, and how do you really manage that, right? But I think in this entire game, I think countries and government are still playing a catch-up game. What you're seeing is just the tip of the iceberg. We are in that particular information warfare or information kind of zone where essentially there's a lot of misinformation that is getting prepared and essentially getting disseminated. It only takes 10 times for somebody to say something and it becomes almost like real information, right? Misinformation gets translated to information. I think that's what it is. So I think it's a question of how do you control that right from source and be able to authenticate some of those particular elements. So I think the key thing is, I think for the government and these particular companies to work in hand to basically manage this, because we are going to see a lot more. We are going to see a lot more. We have seen this in 2016. We have seen this now. It will continue to basically happen. And I think as elections come up, why even elections? I think even if you take how COVID is being managed, do we really, there is a sense that I basically get from a lot of people saying that we are not getting all the information. Maybe it is not the right level of perception in terms of how many cases and those kind of things. Is that essentially being controlled? So I think that's where we need to really get to a particular point of where there's a transparency of information and where we can really trust. And that particular trust is where I think it is broken right now in terms of how our citizens are basically looking at it. And the disinformation, it's happening everywhere. And so they don't know what to trust and what not to trust, and which essentially causes that particular big chasm or the divide between the people who govern and the people who are governed, right? And I think that is essentially where we need to basically bridge the divide.
And Ram, Fred, we have 5 minutes. So I wanted to do 2 rapid fire questions, if you will, with short answers. So because we have another session starting right after this. So the first is, Fred, from your perspective, what do you think is the doomsday scenario as it relates to cyber terrorism, the cyber vectors and threats that could be impacting nations across, especially post-pandemic? What is your doomsday scenario?
My doomsday scenario is artificial intelligence that gets out of control and absolutely destroys any credibility or belief in knowledge and education and authority, because we have no ability to trust the information that we're seeing. And it's all being generated either by a rogue nation state or by an actual AI entity. Sure, that's a little science fiction-y, but down the road, that is the doomsday scenario.
All right. Sri, what do you think?
I'll bring it a little more closer to reality. I think if you really look at it, to me, doomsday is essentially, I think, every country, every nation across is basically looking at digitization. They're looking at smart cities. They're looking at almost computerizing, using operational technologies, and everything which previously was hidden under the surface or protected under the surface, they're bringing it up. I believe essentially cyber warfare is from a doomsday perspective where other nations don't even really need to basically walk in. They completely take control and charge of another nation just by essentially disseminating misinformation and also basically managing what you call as their particular entire environment, right from their traffic lights to their water to their stock exchanges and all of those. And I think that could become reality very, very fast.
So now on the flip side, Sri, what recommendation would you give to the government of India in terms of how to address that? We have seen Russia hacking into Ukraine and Ukraine into Estonia and so on and so forth. So the question is, what kind of specific recommendations as a policy or as a structural execution standpoint, what is it that we can provide, that you would provide to the government of India?
First and foremost is, I think I would suggest that India basically does some complete cyber and crisis resilience review. The first and fundamental element there would be as to what is it that they want to protect, what is critical infrastructure for them, that is one. Second is essentially how would they like to basically manage that manage information flow in and out of the country. And third is essentially based on these particular critical assets, information, and also the crown jewels and other things that they want to protect, then essentially get down to the particular situation of actually protecting these particular assets, not only as a country, but also bringing corporate and everybody together, because I think that is going to be extremely important for them to do. It's sort of actually building an umbrella around the country and essentially providing that entire protection for the country and all the citizens of the country in it.
Excellent. Thank you. Fred, what do you think? I mean, talking about the umbrella aspect of it, is there something that could be done for other nation states as well?
Well, let me say that having watched the handling of the 2020 election, I think the United States actually gets relatively decent marks in terms of its cybersecurity apparatus, that a lot of the threats that had been raised as potential attacks didn't materialize. And the individual who was in charge of making sure the election was safe, I think did a great job. I do think that an umbrella should be constructed, but I would come at it from a slightly different perspective, because I would want to put the emphasis on what I would refer to as mindware. That is to say, the intellectual capabilities of the individuals involved in, individual citizens, but then also involved at various levels of corporations and governments. And by that, I mean much more comprehensive education on various aspects of cybersecurity. So at the individual level, what do you need to do to protect yourself? But then at a broader level, what are we doing to improve critical thinking? What are we doing to provide better understanding and better education at all levels so that we are less susceptible to the kinds of information attacks that we're seeing, both disinformation and misinformation? Because all of the hardware in the world will not make a difference if we as individuals and states and governments are not capable of distinguishing what is true and what is not true. And we can debate that, we can have policy disagreements, completely agree with that. But at the end of the day, we need people to be more resistant to conspiracy and to misinformation than they seem to be right now. And I think that that is actually the biggest cybersecurity threat we face.
Awesome. So we have recommendations on both on the personal side through the mindware, as well as we have got the recommendations as an umbrella, policy statement where this, defense systems and defense mechanisms are put in place at the nation state level, I think coming together will obviously is going to make it a lot more resilient for everyone, right? So that's great. I know we are completely out of time here. We are 3 minutes actually over, and some other folks from the next session are already in here. So I wanted to thank you, Fred and Sri. I think this obviously we probably shortchanged ourselves in terms of the time that we are allocated. So what we would really love to do is to have you folks both both of you in the campus at some point in time and have a more comprehensive conversation, if you will. So thank you so much. Appreciate your time.
You're welcome. Thank you.
Sure. Thank you very much. Bye. Yeah. Bye-bye.
Switched off that light behind you to avoid the glare, but
live, sir.
Good evening, everyone. I am Mihirjeet Singh, a third-year student from the Jindal School of Banking Finance and its Vice President, and I will be the moderator for the concluding session. I would like to start by asking Professor Mridakshi Das to give a GFC 2020 report.
You're on mute. Mridakshi, you're on mute.
Am I audible now?
Yes.
Okay. Thanks, Mihir. Good evening, everyone. My name is Mridakshi Das. I'm working as assistant professor with Jindal School of Banking and Finance at OP Jindal Global University. So in this concluding session, I'll very briefly walk you through the key takeaways from the 2-day session, which is like going to form part of the GFC report. So in the backdrop of outbreak of the pandemic in the month of February 2020 and the adverse consequences and impact on the economy, this global finance conclave on November 21st and 22nd was driven with the question how the global economy could be revived to situation like before the outbreak. So we hosted several eminent bankers like Jimmy Tata, Dr. Rajiv Oberoi, academicians across globe like Rajat Khaturiya, Krishnan Dhamaranjan, etc., policymakers, think tanks, amongst us, who shared their insights on different facets. So starting with the contradicting views of two prime bankers, namely Jimmy Tata and Dr. Rajiv Oberoi, with one emphasizing upon the positives and the other questioning the sustainability of the positives relating to the growth of GDP, growth of exports, indicating that despite of the pandemic, though the service sector has been affected the most, government has been efficient and successful in mitigating the adversities of the pandemic through measures like through different measures like Atma Nirbhar Yojana, relaxation of norms in the worst affected sectors, leaving us on a positive note. So further few speakers also remarked that global trade has declined and developing countries are likely to take longer to revive. So one of the speakers mentioned about India's ability to create fiscal stimulus, and if left unstimulated, good firms are likely to fall, and further the lack of support is likely to lead to fully blown economic crisis. So therefore, for growth, investments are considered essential for infrastructure development, and developing countries have greater ability to boost demand. So in fact, one of the bankers in one of the sessions shed light on how the government should focus on the development of infrastructure and how that would lead to taxation. That is inflow of revenue. So he encouraged people not to be critical of this and hope that efficient execution follows all the plans of the government. So this was further emphasized in subsequent sessions. That how infrastructure needs to keep up with the need of the growing economy. And since the banks are the major source of finance, one of the speakers elaborated upon encouragement to be provided to the private sector financing and how bankers' credit analysis is important for them to work along with the organizations. So when I say organizations, it means like it includes even the SMEs, the small and medium enterprises, for nationwide growth and overseas. So, however, one of the speakers remarked that in India, the lack of surplus income and high transaction costs are two major problems because of which people do not have access to financing at right point of time. So, thus financial inclusion role has been emphasized upon acting as a catalyst for not only just economic growth, but even eradication of poverty. So while fintech companies are present, but bringing more public under its ambit means collaborative efforts of fintechs, fintechs, banks, and regulatory authorities. So however, the importance of financial technology and financial literacy has been largely recognized, which would contribute to even small and large enterprises in becoming more formal and more digital.
We'll continue. We'll come back to Mrigakshi.
Now, Professor Ramachandran will give the looking forward note for GFC 2021.
Thank you, Mihirjeet. I think Mrigakshi may have had a little bit of a technical issue there. Again, just to introduce myself, I'm Professor of Practice and Vice Dean at the General School of Banking and Finance. I have been with JGU for the past 2 years. I teach a variety of subjects, including entrepreneurship, cybersecurity, and other management sessions as well. And as a faculty coordinator, it gives me immense pleasure to see the conclusion of the two-day event. Just to trace you back to the history of how we started this from from last year when we had a 2-day session in September of 2019, and where we focused on India creating a $5 trillion economy, which was the main focus at that point in time. It was the buzzword at that point in time in India, and how life has changed in the last 1 year. We started the planning process for the 2020 Global Finance Conclave in right earnest sometime late last year, and we had come up with a lot of nice ideas, including conference papers and other other academic sessions that we had planned. Obviously, things took a turn for the wild since the pandemic broke, and so we had to recalibrate ourselves in terms of what we wanted to do. However, there are a few things that I want to highlight is that we did, include we did not shortchange in terms of academic sessions. We had a total of 14 sessions, including this, and we had out of that 2 of the sessions were student-led sessions. We had student debates, and we also had a competition on smart city, which was all, and we had students from all over the country. In addition to that, we had 11 academic sessions ranging from looking at cybersecurity, which is moderated in the previous session, to looking at India's resilience and resurgence post-COVID-19. And how do we do that structurally? We also looked at the digital and financial literacy programs. We looked at the ability for organizations to become so financially stable, and organizations to become provide more employment, and especially the issue related to the migrant laborers and the legal stipulations around that. So we covered a fairly wide range of topics, which is the report that Mridakshi was providing. And so we wanted to talk about what happens in 2021. And clearly the future is somewhat unknown, but we have already started ruminating around what exactly we can do and make it even better. What I would say is that, again, this is my very positive outlook that comes out, is that I believe that 2021, we will be meeting again in the campus, and we will be having a lot more livelier session in the campus. And again, the timing is going to be decided based on how the vaccines come out and how it gets implemented as well. But hopefully sometime in the month of September, October is when we do plan to execute our GSC 2021 session. And there are obviously it's going to be strife with a lot of new ideas, new opportunities for us to look at, both from the economic and the financial side. And we may focus primarily on a sector. And there will be, again, we are debating in terms of looking at call for papers, more research-oriented discussions, as well as having more of these student-led activities as well. So we'll be looking at that in a more aggressive fashion for 2021. So that's I wanted to just put that as a starting point for us to debate and discuss. And we definitely will be looking at help from the university in terms of how we if we are going to put a larger program. I know even for the 2020, I think Professor Rajkumar wanted us to have it much more broader and longer duration event. But clearly, given the time factor and what the constraints, we were able to pack a lot within the last 2 days. So, but we do plan to grow it bigger, make it better, and as well as have a lot more viewpoints come into the mix, both from the academic side as well as from the policy and from the technical aspect of it, from the policy think tanks, and obviously the academics and the business industry coming together. And so that is how we plan to propel GFC into 2021 and beyond. So with that, I wanted to hand over to Professor Ashish Bharadwaj and provide his quick comments and wisdom on what we have done and what you want to do.
Thank you, Ram, and thanks, Mihirjit, for opening this session, the final session of the second Global Finance Conclave. I'm so glad that one of my senior colleagues and the University Professor of Law and Registrar Sridhar Patnaik has also joined. Thank you very much, Sridhar. I'm going to speak for 3 to 4 minutes only, and then we are all looking forward to hearing from you. As Ram said, the conclave hosted more than 40 external senior speakers from many organizations, but there were two important features of this event. The first one was that from JGU, outside JGU, competed in the events that we hosted as part of this conclave. The second very important feature, which I want to share with you and with everyone else, is the faculty members from 6 different schools of our university, which has 10 schools now, were part of this conclave, representing disciplines of finance, law, business, politics, public policy, and even communications and journalism. So that's a very good step, I believe, that we've taken in the direction of collaboration within JGU. Coming to the student involvement, competition was on the topic of US dollar as the reserve currency of the world. It's a very complex topic for anyone to deal with. And I'm very happy to announce the winners. They've already been informed of this, but still for the public, the winners of the first and the second prize are the teams from TA Pi Management Institute from the beautiful town of Manipal, followed by the team from JGU. And the fourth position very closely went to the team from MIT. And especially to the winners. The second way in which students were engaged in the conclave were in a competition around next generation of smart cities, which is also a very challenging topic. In fact, I recall a remark that someone made that a smarter way to create cities is for architects and planners to not only partner with technologists to think about how to digitally connect one thing to another, but also collaborate with psychologists who study mind and with ethnographers who study people and their customs and their cultures. So it's a very complex topic, and the students competed very well. They brought out some new perspectives. Ashoka University Sonipat, a neighbor of Jindal Global University, was declared as the winner of this competition, and Christ University Bangalore is the runner-up of this competition. I was told that it was a very close ranking of all the teams. So once again, congratulations to all participants and especially the members of the winning team. I want to end on one note. The students, I think, the ones who competed, I think they did that for the first time in their lives, competing virtually. It could have been, I hope, was an interesting experience for all of them, sitting in front of a laptop. And Mihir, I hope you will agree with me, but it's not the most fun way to compete in a college or a university level. You really need to be face to face with your competitors. I really hope you compete in a university level with your fellow students. I hope this all comes to an end very soon so that you're able to move around more freely. One piece of advice which was given to me by my doctoral supervisor a few days ago, I want to share on a light note before I hand it over to Professor Patnaik. He said, if you're too depressed, if you're stuck at home, and for students, if you're away from your friends, away from your university campuses, from your loved ones, then here is a spam or clutter or the junk folder. Despite the economic slowdown, there will be several banks who will be willing to give you loans. Despite the pandemic, you would have probably won a big lottery. Despite the unemployment crisis, there will be several attractive job offers. Despite all COVID restrictions, there might be matrimonial offers. And in my case, there'll be some company willing to offer a cure for hair loss. So there are some positive sides also that we can look at sitting at home, staring at a laptop. Again, I it took a phenomenal amount of effort on their part to prepare for both the competitions. I want to also thank all the speakers, but a special shout out to my colleague here, Ram Ramachandran, and all the students and faculty members of JSBF and other departments as well. The success of this conclave, which I think we're going to see in few days to come as more people see the recordings on YouTube, is really in direct proportion to all their efforts, dedication, and hard work. So thank you very much. And now I'll invite Professor Sridhar Patnaik for his remarks.
Thank you very much, Ashish. Good evening, everyone. It's indeed my pleasure and privilege to deliver the concluding remarks at the second Global Business Conclave, and aptly titled All Eyes on India, Resurgence and Resilience Post-COVID-19, organized by the School of Banking and Finance at the OP Jindal Global University. First and foremost, I would like to congratulate the organizers for convening a conference on such an important and timely area, considering the current pandemic-induced times, which itself is a source of uncertainty in terms of health and also in terms of its impact on the social and financial situation. I would also take this opportunity to congratulate all the students who participated in the competition and who emerged winners, and everyone who successfully participated, because that's what matters the most when we are learning and while we continue to learn. And that's the way of life. And it is also particularly important that the discussions that were conducted today and yesterday, they even take place in academic institutions involving a multi-level engagement with industry leaders, policy analysts, faculty members, and students. And to me, this is not only important for knowledge dissemination and construction, but it's also very important to help sensitize students everywhere and to encourage them to engage with issues that affect all of us and thus understand the key debates surrounding these matters, and particularly the matters in relation to finance, interestingly, are a source of distribution and also a source of volatility, as we have been witnessing, with an impact on economic and social rights too, that was very aptly referred to both by Professor Ashish Bharadwaj and also by Professor Ram Ramachandran. Therefore, I believe this conference is an opportunity for our students to understand the domestic and global financial system and the resultant crisis, the scale and nature of problems, and in other terms, not just the economic or financial dilemmas, but also the concomitant social and legal dilemmas, and to understand the similarities or differences between the current crisis impacted by COVID, and also seize this opportunity to go back on a historical timescale to understand the global financial crisis about a decade ago, and also on the historic timescale to know more about and to research, if in case you haven't, about the Great Depression of the 1930s, thus forming a rich source for further analytical inquiry into overlapping issues, interests, and discourses. Before I conclude, I would also like to state that conferences of this nature, particularly this is a message to all the students who are participating in this meeting, and this is on a philosophical note, but it is indeed very true. The idea should not be to find a comprehensive solution to the problem, because worldly problems may not have singular solutions, but to have multiple perspectives that can lead to mapping solutions, which I earnestly believe the conference had achieved. And this is also in consonance with the vision and mission of the OP Jindal Global University, which is a research-driven university with a particular focus on multidisciplinarity. And most recently, we have been conferred with the status of the Institution of Eminence by the Ministry of Education, and such recognition makes us more responsible to work and contribute to quality higher education. And discussions that were held over the last 2 days aptly fits the framework. I also take this opportunity to thank all the speakers who accepted our invitation to participate in the conference, and those speakers coming from diverse walks of life, the industry, academia, and think tanks who enriched the discussions by participating in the program. I also take this opportunity to sincerely thank all the departments of the OP Jindal Global University that contributed to the successful organization of the conference, and in particular, the Information Technology Department for having, in a very splendid manner, supporting yet another online conference that we have successfully organized. And I also take this opportunity to thank the leadership of the Jindal School of Banking and Finance, led by Professor Ashish Bharadwaj and Professor Ram Ramchandran, the faculty coordinator for the conference, and in particular, all the students and faculty members of the JSPF for their contribution to this conference. I sincerely hope that there's going to be a report that's going to be prepared as an outcome of the conference, which can go on to become a solid contribution to the dialogue on the issues that have been discussed over the last couple of days, and which can also become a point of departure for the third edition of the Global Finance Conclave. Thank you so much, and thanks once again for inviting me to be a part of this endeavor.
Thank you. Thanks very much.
Thank you. Mihir, back to you.
Thank you, sir. I would like to conclude by giving a vote of thanks. First to the Vice Chancellor, Professor C. Rajkumar, our Registrar, Professor Sridhar Patnaik, the Dean of the Jindal School of Banking, Banking and Finance, Professor Ashish Bharadwaj, our Vice Dean, Professor Ram Ramachandran, Deans and faculty members of other schools, especially Ambassador Mohan Kumar and Sumit Mahaskar, and panelists from other schools, students from JGU and students from other institutions, invited panelists from 40 plus other external institutions, the JGU Media and Communications team, Professor Santraj, Professor Priyambada, and Mr. Anil Kumar. Lastly, the cultural secretaries of Jindal School of Banking Finance who made this all possible, Saurav Goyal and the heads of the GFC, the Global Finance Committee, Mukta Goyal, Amya Gupta, Prisha Sood, Bharat Agrawal, Prateek Pratay, Nikhilesh Dabar, Vedant Ade, and lastly, the culture secretaries who are Saurav Goyal and, 1 minute.
No need.
Sorry, sir.
Need to be sorry, Mihir. So many involved. It's okay. It's absolutely fine. Take your time.
And Devna Kandilwal. I'm so sorry. Thank you so much.
But Mihir, I have a question for you. How was your own experience being part of a 2-day event, which was, there were a lot of conversations, some of it maybe student friendly, some not, but how was your experience?
So I think it was very educational from the last conference, which talked about the $5 trillion economy to the current situation of getting back to that $5 trillion goal was very apt. And I think the topic that has been brought out by JGU of the suddenly changing to actually getting back was very educational. And the aspect that were talked about, especially for me, cybersecurity, that was one of the main points that I really learned from. I have cybersecurity as a subject, and I felt that is going to bring forth a lot of problems and a lot of solutions to us.
Excellent. I agree with you. Thank you so much, Mihir, for doing this. Thank you for moderating this session and for all the efforts that you've put in.
Thank you, sir. Thank you.
With this, can we say that the second GFC comes to an end, Ram?
Yes, officially we close the second GFC session. The report will be going out in a more formal way. Unfortunately, Mridakshi had a little bit of a technical challenge there, but we will send that report out so that it becomes part of our archives, if you will. So thank you very much, everyone. And so this comes to a formal close at this point in time. Thank you, Vidyut and the rest of the IT support team. Again, I just want to echo what Professor Sridhar said. It would not have been possible without the support from the AV team. So thank you again.
Thank you, sir.
Thank you all.
Thank you. Bye-bye.
Good evening. Bye-bye.